market is in a very, very strong place. And if anything, we're seeing a significant rebound in the last few months.
Is the July meeting live? Family fights, we're told, but does that mean this is a live meeting?
I think there's going to be a very active discussion. I just don't think that they're going to necessarily have a policy action. They probably keep policy on hold and wait for data. I think it's a little too soon. We might react to the labor market data that we get today, but it ultimately depends on what happens on inflation. If you look at the statement, they did not really focus on the labor market, they focused on inflation. So we'd be looking to see what we get in CPI and PCE for the month of June to make a decision on what happens in July.
Do you think that the market has repriced inflation expectations because of Fed rhetoric or in spite of Fed rhetoric?
So I think inflation expectations are mostly a reflection of what has happened in the oil market. We've seen a significant decline in oil prices in a very short amount of time, and inflation expectations are really just reflecting that reality. To be honest with you, I feel like inflation expectations have gotten a little bit ahead of itself in pricing in too much of a normalization of expectations over the longer run. But I think, over the near to medium term, you are going to see core PCE start to head higher. And you're not going to really see that in the expectations data.
Right now, is the labor market a lagging indicator that has less import? I mean, I know everyone's excited for this labor market report. I am actually really looking forward to this. I want to see the components coming in. I want to understand what the average hourly earnings are. I want to see all of these components. But it isn't the blockbuster kind of labor market report that we've seen in the past. When's it going to matter again?
It could be, and it has mattered for the last few months. It's almost the counterfactual that matters. If you continue to get good data, it makes it somewhat easier for the Fed to think about just the inflation mandate. If you start to see an environment where the labor market starts to weaken and you start seeing inflation start to go up, that's when you need to be concerned. Overall, I mean, the trajectory for growth has been relatively strong. Maybe we see a little bit of a slowdown in the second half. And labor market's been, rebounding quite meaningfully in the last few months. And we think that trend is probably here to stay.
Do you get a sense, though, of what Kevin Warsh's reaction function would be to a weak labor market report?
I think it's, again, too soon to react to one data print. You look at the 3-month and 6-month moving averages, it's actually quite strong. You look at the regional Fed surveys, the employment components are showing strength. Again, ISM manufacturing, the employment component is showing strength. So the labor market is definitely very, very, it's kind of a stabilizing force, if you will, for the Fed, because then they can focus on their other part of the dual mandate, which is inflation, which is rising quite meaningfully.
If they're focused so much on inflation, then potentially that does mean a hike this year.
Potentially. I mean, I think the market's pricing in for a hike by the end of the year and perhaps even 2 by the middle of next year. For the Fed to move towards that direction, start thinking about hikes, you're going to need to see a stable labor market. If you start seeing inflation continue to pick up as well, you're going to see the Fed focus much more on the inflation side of the mandate. So a hike is not out of the table. Our call is for the Fed to keep policy on hold for the remainder of the year and perhaps the remainder of next year as well, as inflation remains hot and sticky. But that could change if we start seeing a trajectory towards core inflation continuing to drift higher.
Do you think we've seen a peak in bond yields?
I do think that we've seen the highs for the year.
Huh.
I think that you're going to see perhaps a gradual normalization of interest rates during the remainder of the year and next year as well. But a lot depends on what's happening in global bond yields. You've seen a synchronized decline in global bond yields since the beginning of May to now. Now you're starting to see JGB yields drift higher. That's kind of dragging the global bond yield complex higher. But fundamentally in the US, you're going to look towards the trajectory for growth. You're starting to see a normalization of growth. Yes, inflation is high and sticky. But I think over the remainder of the year, between now and the middle of next year, you're going to see a gradual drift lower in yields.
Where does that leave the shape of the curve? Because the curve has been flattening. What are you anticipating will happen?
I think the yield curve remains flat. I mean, that's been one of our calls for this year. is that the yield curve will flatten and remain flat. I think that's how things are going to play out. I mean, for the yield curve to steepen, you're going to need to see some change in the dynamics. It could be debt and deficits, it could be global bond yields, but we don't really see any catalyst over the near term that's going to cause the yield curve to steepen.
When was the last time you were this bullish on bonds? You've been actually really negative on bonds. Is it because of the Fed pivot or because of sort of the reaction function that we don't know about but seeming more hawkish?
I'm not necessarily bullish on bonds. I think that that bonds are going to be somewhat range bound, and yields are going to be somewhat range bound for the remainder of the year and into next year. But the gradual trajectory is going to be towards lower yields over time as we sort of look at the trajectory for growth and the potential for an environment where things start to normalize a little bit more after the war.
Subhadra, it's good to see you. Always great to catch up. Thank you. Subhadra Rajappa there of SocGen. Several headlines in that conversation coming through from Mary Daly of the San Francisco Fed president, sitting on the fence like a real economist, on the one hand this, on the one hand that, but ultimately there is the potential to need to fight more persistent inflation at this Federal Reserve.
Yes, you said the resilient consumer is a good sign for the economy. She was talking about how U.S. investment is continuing and she doesn't see any signs of it slowing down, but then also saying she still sees Fed policy in a slightly restrictive position. So for people who are saying our star is higher, that perhaps we are seeing a more neutral rate where the Fed could arguably remain on hold, seeming to contrast that. Ultimately, if you're looking for a signal in this rhetoric, you're not going to find it. Nonetheless, what you are seeing is a Federal Reserve clearly watching the data, watching the football.
And watching AI investment. Strong U.S. investment growth not likely to come down. We heard this yesterday from Kevin Warsh, who said this is a problem he likes to have. This is something good, because he also, through a little bit of shade, was like, this is only happening in America. This is a U.S. problem because of that investment.
Do you want to hang out for another 30 minutes? Do you want to stick around?
Yeah,
I'm totally here, although I think a couple people have messaged saying that it's time to send me on vacation. So,
They might be at the beach already. Many people are.
Yeah, other people might have gotten the hook
Right?
for me.
It's almost beach o'clock. It's like 8:31. Gone.
Let's see.
Straight out the
It
door.
might not be.
Right?
Maybe they'll just take everything up.
The payrolls report just around the corner from New York City. You're watching Bloomberg TV.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The opening bell 60 minutes away. The job number seconds away. Equity futures into it. The scores look like this. We're positive by 0.1% on the S&P 500, on the Nasdaq 100 up by 0.25%, on the Russell up 1/3%. In the bond market, 2s, 10s and 30s. Yields shaping up as follows. Your 10-year just short of 450 and up 2 basis points. With your jobs report, Mike McKee has more. Good morning, Mike.
Good morning, John. Numbers are just starting to come out, and it is a disappointment for this July 4th holiday weekend. 57,000 jobs is the total, and we saw last month's 172,000 revised down to 129,000, so a net revision of -74 over the 2 months. Change in private payrolls, 49,000. The forecast was for 107, and that was 120,000 the month before, and it's been revised down to 97,000. Manufacturing payrolls up a week 3,000, but that's what was forecast. The average hourly earnings come in at 0.3, which bumps up the average hourly earnings on a year-over-year basis to 3.5%, still below the level of inflation, but it is a move in the right direction, I guess you could say. Average weekly hours, 34.3, same as in May and same as forecast. The unemployment rate, though, drops to 4.2% from 4.3%. That's about what the Fed thinks the natural rate of unemployment is. So overall, they're going to look at that instead of the job creation numbers and say that the labor market looks pretty steady. Participation rate 61.5 drops from 61.8. We also got one other number today that nobody's going to care about, and that is the initial jobless claims. They come in at 215,000, down 1,000 from last month's revised 216,000. So let me dig into where the jobs were created or not, and we'll see what's happening in the market.
And Mike, you take a second look. Thank you, buddy. Appreciate it. Downside surprise on payrolls, 57K. The estimate 113. The previous month, downward revision 129 from 172. In the market, you can predict what's going to happen here. Front end of the yield curve, 2-year yields come in. We drop, yields down across the curve. 2s at the moment down by 5 basis points to about 413. 10s down by a single basis point at 446. We'll get to some of that price action in just a moment. That unlocks this move in the equity market. Equity futures pushing higher by 1/3% and just off session highs on the S&P. On the Nasdaq 100, a turnaround there, up by 0.5. On the Russell, small caps up by 0.7, outperforming given the move we're seeing in the bond market. But Lisa, to take a step back, you can tell 2 different stories here based on the headline payrolls number, and then again with a different story based on the unemployment rate.
If you look at the headline numbers, it's a disappointment. It's a deceleration in job growth. Suddenly, the 3-month average looks less robust than it did in the May payrolls report. If you take a look at the unemployment rate, you're going to say we're bumping up against the ability to create more than, say, 20,000 jobs without creating an even tighter labor market, that essentially any job creation in this market is enough to break even and then some, which is a real question we've been asking. What does the headline number actually mean? The fact that we're looking at 4.2% unemployment rate, that is the lowest level going back to June of 2025. So really a mixed report here when it comes to what the signal is going forward.
Well, when you look at the labor force participation rate, that's down 61.5% from 61.8%. So people seem to be leaving the labor market, which maybe explains why that rate has dropped, and that's not a great story either to tell.
And Mike McKee, you got a second look. What'd you see?
Well, right now I'm looking at the labor force fell by 720,000, which accounts for the drop in the participation rate. That's a big number. We had an increase of 83,000 in the month of May. Employment fell by 507,000 in the household survey, while unemployment fell by 213,000. So we have a slight decline, largely because of the size of the labor force falling in the unemployment rate. And it looks like on first glance, most of the jobs that were created were in the healthcare and social services categories. There is an increase in business services, which is the sort of temporary help, and that is usually a sign of a kind of a rebound. But here's the interesting thing. We lost like 61,000 jobs in leisure and hospitality. First, you got to figure in the seasonal effects, but there was an expectation we might see a big jump because of the World Cup, but it doesn't seem to have come through in this month.
Mike McKee, thank you, buddy. We'll come back to you in a few minutes' time. As anticipated, with a number like that, you don't price out a rate hike per se, you push it back. And that's what we're doing right now with rate pricing, pushing it back to December. Previously, we were baking in something around October. You look at these numbers, expecting a family fight at the end of this month at the Federal Reserve. Does that family fight get a little bit less, let's say, testy at the end of this month with a number like that?
This does not suggest there's urgency to make a move in any which way, because ultimately this doesn't necessarily speak to incredible weakness, but it also doesn't speak to some sort of incredible expansion. It kind of goes to what Neil Richardson was saying, which is you saw the May print really highlight the World Cup jobs created. Maybe this is the June report taking them back after the infrastructure was laid for the World Cup games. You look at this, it doesn't give you really any clear signal, so you're right. It doesn't necessarily increase the urgency and takes July, pushes it further off the table.
If you're just tuning in, welcome to the program. So we got the jobs number just moments ago, came at 57K. The estimate in our survey was 113. The previous number revised down. The unemployment rate, for a bunch of reasons, we'll spend some time on that, dropped back from 4.3% to 4.2. With us around the table, Stephanie Roth of Wolf Research. Stephanie, good morning.
Good morning.
What would you put weight on this morning looking at this report?
Yeah, I mean, I think the main message from the report is payrolls have been overstated to some extent in the recent prints. We're sitting in a labor market that's largely in balance. The unemployment rate, yes, it's ticked down, but realistically, you know, the household and the establishment surveys have been telling you slightly different signals. It kind of makes sense. It tells you the labor market is fine. There's no real concern, certainly no urgency for the Fed to be hiking, and that buys them time. The longer that they have to buy time, by that point, inflation will be slowing down a bit, and that will probably allow them to stay on hold.
The chairman used a word to describe this particular jobs market. He said it was steady. Would you call it steady, this labor market?
I think that's exactly right. And I mean, there's been a lot of volatility in the actual data itself. It seemed odd, the extent of which payrolls had been running significantly above anyone's estimates of break-evens for many months. And you weren't really seeing wages pick up. You weren't seeing it confirmed, that extent of the tightness confirmed in other surveys. So it kind of suggests that payrolls had been overstated to some extent. If you look at the birth-death adjustment for this month, it was a little bit lower than it was last year at this time. So perhaps that is just adding to some of the volatility. It made it a little bit lower than would otherwise be the case.
I remember speaking with San Francisco Fed President Mary Daly about a year ago, and she said that typically at turning points in the economy, you can get this churn, this lack of clarity in the labor market. It feels like that churn has continued for a really long time, even though usually it does tend to tip one way or another. Are we looking at it wrong? Is there something else that's happening here, some evolution, some sort of shift in terms of the emphasis going forward that we can glean from these successive labor market reports?
I think what we've learned is certainly there's a lot of volatility, a lot of surprises. Of course, this time the surprise has been on the negative side, and the prior months it's been on the positive side. Realistically, the result's somewhere in the middle, where the labor market seems to be in pretty good balance. It's running probably close to break even, whatever your estimate may be of that. Our estimate is around 75,000. So our estimate is that you're probably just in a pretty good balance. The economy's in a decent spot. And the inflationary pressures don't seem to be generated from the labor market. It seems to be generated elsewhere, in which case that should roll off. We expect about 100 basis points coming off core PCE by the end of 2027, but it'll take a little bit of time.
The market doesn't do well with remaining on hold. Usually people are saying, okay, which direction are you moving in? Which is a reason why there's this obsession of what's the next move for the Federal Reserve, rates up or rates down, partly because people want momentum. But are we really looking at is that we are at neutral and that essentially this rate is allowing the economy to kind of muddle through whatever technological transformation is underway?
I think that's probably right. And by the way, the technological transformation doesn't really depend on the level of interest rates today, because that's going to happen regardless of whether rates are plus or minus 25 basis points from here. So realistically, we're in an environment where interest rates are largely neutral. Of course, there are parts of the economy that it feels restrictive, as certainly Warsh had talked about in terms of housing. But generally speaking, it seems to be in a pretty good place. Consumers are spending fairly well. It's been a decent, call it 2% trend in spending. It's an economy that is in pretty decent balance, and I think that will continue through much of the summer and the rest of the year.
What about the participation rate, falling by 0.3%?
My guess is a lot of it is noise to some extent. The household survey is notoriously volatile. By falling by 0.3 is a big move. 700,000 people exit. We tend to get a lot of volatility in that report, and my expectation is in the next print, you will see it rebound.
What about revisions? Make you nervous or no?
No, it makes me feel better, because it didn't make sense of how strong the labor market is relative to anybody's expectation of break even. So, seeing some revisions to the prior months that seemed stronger than what made sense, I think, it makes me feel better about sort of the data and the trajectory, and it makes a little bit more sense relative to where other indicators are.
I think some people will look at this data and agree with you. The Fed's got some time to figure this out. 3-month average is 111. It's not bad, is it? 3-month average of 111 on payrolls. Unemployment's close to 4%. Inflation's above target and has been for 5 years now, which is why they need to debate whether this rate is the right interest rate for this economy to help inflation get back down to target, whether things are out of their control or whether they need to raise interest rates.
And that's why some people are still calling for a July rate hike or the potential for one, simply because if you are getting impatient with the level of inflation for so long, well, then what's the argument not to take action if this truly is a sort of watershed moment in terms of hitting the highest level going back some 5 years with the latest inflation rate? That said, it seems like a good summer to take a step back, sit on a task force.
You're still trying to leave?
No, I'm not trying to leave. I'm trying to lobby for a task force. I want to really understand,
Don't worry, there's no one left. Everyone's gone.
Well, I wish you a great time. I'm just going to stop talking now.
Not alone. So, on the way to the Hamptons.
Well, this didn't stop anyone's vacation plans. Let's just put it that way. This doesn't change the material.
Totally agree with that. Mike McKee's ready to go. I don't know if you've seen Mike. White pants are on.
Yeah, he's got his bag over there.
Mike's ready to go.
Hey, Mike.
I know. Mike's back with us for more. Mike, you've had a third look. What'd you see?
Well, right now, what we're kind of looking at is the unemployment situation. It goes down because the labor force fell off significantly, which raises the question of, are we not hiring as many people because companies don't want to hire or because they can't find people? That's going to be one of the questions that the Fed is asking as they look through this data and try to figure out what's going on. But the fact that we're at 4.2%, that's going to be the number that they focus on as opposed to job creation, because 4.2% of the people who want jobs are unable to get jobs, and that's a very low number. So for them, that's good. Now the question is, if it is a shortage of workers, is that's what going to push up wages and create an inflation problem, or is this just a temporary kind of one-off thing? So those are the main things to look at. The thing that really is surprising, though, is when you look at these numbers, what happened with leisure and hospitality. I assume a lot of it is basically because of seasonal adjustment factors, but what we saw was 61,000 for the whole category, 54,000 in food services and drinking places and accommodation and food services. So the kind of jobs that you would expect people to be getting in the month of June, and then throw in the World Cup on top of that, they lost a significant amount. We haven't seen a loss like that in quite some time.
Beat the traffic, Mike. Thank you, buddy. Appreciate it. Mike McKee there, breaking down the jobs report. Stephanie, final word. To Mike's point, he raises a really important question. Do you look at that 57K and see that as the outcome of demand or lack of supply? Lack of workers to meet maybe demand that is out there?
I think I would zoom out and look at the 111,000 or so on the 3-month average, and I would say it's an environment where labor and supply are in good balance. So I wouldn't extrapolate on those recent readings, because if you look at the prior months, it was higher.
Sure. The
overall trend is something where demand and supply seem to be pretty much in line. Wages were a little stronger this month, Last month they were a little bit softer. Generally speaking, it's a labor market that is in balance when it comes to supply and demand, and that's one reason why we're not seeing significant inflation generating from the labor market.
Operation Get to the Beaches, go, right? We can have all leave, right?
Yeah, sure.
Permission to go? Cool. Stephanie, thank you. Stephanie Roth there of Wolf Research. We're not going anywhere. We've got 17 minutes left. Looking at 57K on the payrolls report, the estimate at 113, trying to keep hold of Bramo until 9 a.m. Eastern time. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. So recapping the data we just got, non-farm payrolls coming in at 57,000 for the month of June. That's well below the estimates, which called in the consensus for 113,000 jobs created. The unemployment rate falling slightly to 4.2%. Blue Owl imposing redemption caps, the limits coming after investors asked to pull more than 38% or $1.1 billion from one of its tech funds in the second quarter. It's slightly lower than requests in the prior quarter, but the highest among major funds. In sports, the NBA champion New York Knicks are losing their longest tenured player. Center Mitchell Robinson signing a 3-year deal with the Boston Celtics. Celtics also making waves, trading their star guard, Jaylen Brown, to the 76ers for Paul George and draft picks. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for this morning. Up next, we'll catch up with BlackRock's Jeff Rosenberg as markets digest the payrolls print. Plus, Yahara's back with us with some morning movers, shares of CoreWeave and Nebius attempting to recover from yesterday's sell-off.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
we're sitting in a labor market that's largely in balance. It kind of makes sense. It tells you the labor market is fine. There's no real concern, certainly no urgency for the Fed to be hiking, and that buys them time. The longer that they have to buy time, by that point, inflation will be slowing down a bit.
Stephanie Roth of Wolf Research. Stephanie's right, just the way you framed this. You're not closing the door on a rate hike with this jobs report, but you are removing some of the urgency on the margin with the downside surprise we just got on a headline number. Unlocking this move in equities higher by 1/3 of 1% on the S&P, reversing some of the losses from earlier on this morning on the NASDAQ, up by 0.5, outperformance on the Russell, up by 0.6 after a massive 2Q. Massive Q2 for the Russell, up by more than 20%, all-time highs on the Russell coming into the second half of the year. In the bond market, this move at the front end of the curve, down by 5 or 6 basis points, just dancing around between 4.1 and 4.2%-ish. That's kind of the range over the past few weeks. The 2-year at 4.1184 so far this morning. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Even before the jobs report, we started to see these neo-cloud games rebounding in the pre-market after a brutal session yesterday that saw CoreWeave fall 14%, though it is now up 2% in the pre-market. And blame it on Meta and are reporting that it wants to sell access to its AI computing power. The concern was that if Meta opens up its AI infrastructure to customers, that could be a competition to these companies. Plus, it could ease the shortage of AI computing capacity that has fueled their growth. Turning to a call by Gil Loria over at D.A. Davidson. He is upgrading Palantir to a buy, so shares are up nearly 2.7% in the pre-market. He's saying that this name is gaining a competitive advantage as AI companies like Anthropic continue to see friction with the U.S. government. And we end on Bending Spoons. This is the latest company to go public, though it is giving up some gains after a blockbuster debut yesterday that saw the stock soar 40% on the NASDAQ. Shares are now down 6.4%, but investors yesterday seemed to embrace its business, which involves buying software companies like AOL and trying to turn them into more profitable businesses. John?
Yahara, thank you. Appreciate the update, Yahara. There was some single names. This is the update on the payrolls report. 57K. The number for the month of June, the estimate was 113, a downward revision to the previous month as well. So a downside surprise on headline. The unemployment rate dropping back to 4.2%. from 4.3%, and wages coming in line with expectations, 0.3% month over month, 3.5% year over year. Joining us now to explore some of the data and what it means for this Federal Reserve, Jeff Rosenberg of BlackRock. Jeffrey, welcome back to the program, buddy. Always good to do this with you. What's the initial response to this, and where do you think it leaves the conversation month end around the labor market at this Federal Reserve?
Yeah, my initial response is I think this is a great report for Kevin Warsh. I think it's a good report for the bond market. I think it takes any pressure that there might have been within the committee around the peak of inflation and policy rates being too accommodative as a result, kind of pushes that story back. It doesn't eliminate it, but it gives him room, and I think Stephanie Roth had the same point, it gives him room for the decline in inflation that we see in the data that's coming through, particularly getting a boost from the oil price declines as well, but also finally seeing the declines in terms of the tariff pass-through and that story showing up in the data and validating, I think, Warsh's view that we can be patient here. So this helps him to be patient. And for the bond market, Jonathan, you've already had this turn in momentum from fear of the Fed hikes to the inflation is coming down, Warsh is going to be more friendly, the momentum is towards lower rates, and I think this helps to continue that momentum.
Do you think that the market is overplaying the idea that the Fed is going to hike at all, and that, frankly, they can just remain on hold long enough for disinflation to come in enough?
I think we're seeing the market push back on the pricing of the hikes. I think that the challenge is the market is sort of dealing with the old reaction function. I felt like there was an overreaction to the dots in the FOMC statement. I think Warsh was very clear. He told us again, or hinted again at Sintra, the dots are going to go away. He used the language of, yeah, people wrote down their dots with a big pencil eraser on them, but the market is still, using the old reaction function. I think it overreacted to the dots and the surprise from there, and I think we still have to price some of that out. And I think today's data, and more importantly, the inflation data to come, is going to help to push that expectation even further out of the market.
Jeff, what's more important to you, the task forces or the earnings that we get from some of the hyperscalers in terms of the announcements of their CapEx?
Wow, that's a super interesting question. I think they operate on very different timelines. I think the hyperscaler earnings, the AI story, what you just led with in terms of yesterday's news, what we're seeing this morning in Asia, that's today. That is going to drive this market today. And those are the issues. I've talked about it before. You know, the micro is the macro, AI in the macro data, AI in the markets. It is the dominant feature. I think what the task forces are about and what Warsh is about are some longer-term structural changes to the institution. I think it's highly consequential. I think it's very important. I think the really key objective here of removing the Fed as the prism through which we in the market view data and taking them out of that position that they've been in since the GFC, I think that's a much longer term objective. It'll take a lot longer for that to occur, and that operates in the medium to long term, whereas the AI data, the earnings, the headlines are going to be driving the markets, you know, right now.
Hey, Jeff, $1 trillion question. How quiet's the office today? Be honest.
It is a full office of professionals working hard for our investors, Jonathan, just like I'm here in our studio. And so, you know, it's going to be a quiet day in the markets, clearly, and in the bond markets in particular, you know, ahead of the holidays. So we hope everybody can enjoy that. But we've got a lot of things to work on.
I believe you, Jeff. Good morning, Larry. Thank you, Jeff. Jeff Rosenberg of BlackRock. Thank you, buddy. Appreciate it. Operation Beaches go, right?
I think that a lot of people are excited to have a couple of days of a lack of volatility. Look, it's not like everyone's being lazy. It has been a whipsawing, difficult year.
I'm not accusing anyone of laziness, Brown.
This is, you know, an embrace of family, of relaxation, of celebration. I think that that's
America's birthday, 250 years.
Right.
It's pretty incredible, actually.
Do you think we've got license to leave a little bit early?
Yes.
Like seconds early. Let's
like
do
right
this.
now.
All right. Yeah.
I'm leaving before 9 a.m.
Go to bars.
You can leave. Downside surprise on payrolls. Equity futures positive by about 1/3 of 1% on the S&P. Coming up on Monday, they are actually going away for a long weekend, a long weekend. I'll be solo on Monday with Alex Altman of Barclays, Mike Wilson of Morgan Stanley, Neil Dutter of Renmax, Sarah Hunt of Alpine Saxon Woods. To this great country we're all lucky to call home. Have a very happy 4th. To America, happy 250.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheets.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for 300,000. It's going to be 650,000. But eventually, then they raised the price again, and they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
A rocky start to Q3 gets a rebound this morning. 30 minutes to go until the start of cash trading. I'm Danny Berger. Bloomberg Open Interest starts right now. Coming up on the show, U.S. hiring slowed sharply in June, curbing some of the recent momentum in job growth, even though the unemployment rate came in. The Nasdaq bounces this morning as Meta shakes up the global AI trade. And a surprising proposal OpenAI is reportedly discussing giving the U.S. government a 5% stake. So some of the stocks we're watching just moments until the open, some of these cloud and other AI infrastructure stocks, they are rebounding, specifically CoreWeave had a bad day yesterday, up 1.5%. We had reported that Meta is building a cloud business to sell excess compute for AI, and that basically wiped out a lot of these neo-cloud type companies. Microsoft, we are now also just learning that they have announced plans to set up a new organization, 6,000 employees, and that will help customers adopt AI. Microsoft, little change this morning, but has had a tough run over the past month. Now, in the broader market, futures are climbing, yields diving, based on the latest jobs report, again, in which we saw the unemployment rate come in to 4.2%, but an overall figure that disappointed. Let's talk about that data with Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, what did we get from the data?
Well, we got a weak hiring month, but we don't know exactly why, whether it was because there weren't enough people to hire or because companies aren't hiring. 57,000 was the headline number. That's good news for the Fed, and it's good news for the bond market in terms of whether you would have to raise rates or not. But the previous months were revised down by 74,000 as well, so you put it all together, and it's not good news for 1600 Pennsylvania Avenue. The unemployment rate does drop to 4.2%. How does that happen? Because the labor market fell off dramatically, down 720,000. So fewer people looking for jobs means a slightly lower unemployment rate, even though both employment and unemployment in the household survey fell. Earnings did tick up 3.5%, not enough to make up for the fact that inflation, CPI inflation, is running at 4.2%. Americans are still losing ground there. Biggest changes, and this was a real surprise, biggest change was in leisure and hospitality, down 61,000. That's food services, drinking services, and also hotels. There was an expectation we'd get a World Cup bump, and we didn't. Building materials and garden centers down by almost 12,000. You wonder, people not watering their lawns or planting flowers? Maybe that may be true. Health and social services, as always, the leader out there, up with 46,000. And professional services, which is usually a harbinger of a turnaround in the market as people hire temps, up by 36,000. Bottom lining it, Danny, we're not seeing the markets rule out rate increases now. We're seeing them push them back. Going into this, there was a rate increase priced into October, but now that's been pushed back to December. Now, that's a long way away. I think basically what we're looking at here in terms of the Fed is that they can keep rates on hold. There's no pressure to really raise rates given the low hiring, and no way you can lower rates with inflation where it is.
So this number wasn't fantastic, I mean, especially with hospitality jobs. But when you take the past 3 months that overperformed expectations, what picture of the labor market do you get?
I think that Kevin Warsh maybe said it well yesterday, that it is steady, because we saw overperformance the last 3 months, you're right, but then they were all revised down significantly this month. So the total labor force is now up on an average of 111,000 for the last 3 months, which is down from 188,000 before. But it's still about double what you need to absorb new entrants to the labor force, the natural rate, et cetera. So it's not a bad situation for the Fed at all.
All right, Mike, thank you very much for breaking down those numbers for us. That is Michael McKee, our Bloomberg International Economics and Policy correspondent. And we're going to have more reaction to the jobs report. We'll catch up with BlackRock's Rick Reeder and National Economic Council Director Kevin Hassett. Plus, we'll also speak to economists Julia Coronado and Lisa Simon. Now, to the latest bout of volatility in tech stocks, the NASDAQ bouncing back this morning after chip stocks fell in Asia overnight. Let's discuss with Bloomberg macro strategist Simon White. Simon, it's remarkable to look at the volatility in SK Hynix, up one day 10%, down 11% in another day. The NASDAQ bounces back this morning, but I wonder just how much of the chip trade we're seeing in general right now is being dictated by not just an unwind in South Korea, but an unwind of leverage in general.
Yeah, thanks, Danny. Yeah, 100%. I mean, the most kind of visible place you're seeing this in recent weeks and months is in the leverage ETF sphere. So what basically happened is earlier in the year, we had obviously the war, and then that ran into March. People, I think, expected the war to end fairly soon. So kind of risks started to get ramped up. But really, things exploded in early April, and that's when essentially the memory melt-up started, when you had the earning expectations of a few of the memory companies, such as Micron, were massively ramped up. And it's then you saw this explosive rise in leverage ETFs and also in option activity. Basically, a lot of people, I think, were left behind, if you like, and were scrambling to catch up by taking exposure in these stocks, but doing so with leverage to get geared upside. And kind of we're running at the sort of towards the close of that, in my view, and that it's really kind of run up so far so fast at the same time as that we're dealing with inflation. And that inflation is ultimately extracting liquidity from the system. And as you take liquidity from the system, it doesn't matter how revolutionary your tech is, markets survive in a bed of liquidity. And if that liquidity is beginning to slow and ease back, then it's going to be very difficult for the markets to remain supported. And that's why I think we're seeing a lot of this volatility.
A lot of the bullishness around chips, Simon, had been taking a company like Micron, or mostly like Micron, that the valuations were incredibly low, something around 8 for price to forward earnings, and that these companies were changing, that they're not as cyclical of industries anymore. I'm just wondering, given what you're saying, are those fundamentals just not in the driver's seat anymore? That as we look at this chips trade, at semis, we should just be thinking, where does leverage stand, to your point, where is liquidity? And that's what guides us going forward.
In the short to medium term, that's always the case. It's, whether people are correct about this is not cyclical. This is like a structural change in memory, for instance, and AI chips. Time will tell. But really, you trade path dependently. And if the path to get you there takes you on some significant drawdowns, for a lot of people, that matters. For a lot of investors, that matters. So really, in the shorter term, this leverage, because it can amplify downturns when money starts to reverse or rallies start to reverse. And as I say, liquidity is imperative for markets. It doesn't matter, what your tech is, whether it's cyclical or structural. Markets survive on this liquidity, and if it's not there, they're going to continue to struggle.
All right, Simon, thank you so much for joining us this morning. That's Bloomberg's Simon White. Elsewhere in tech, Microsoft setting up a new organization. It will have 6,000 employees to help businesses adopt AI. Let's bring in Bloomberg Tech host Ed Ludlow. Ed, is this kind of like the forward deployment engineer model, basically, that Microsoft is adopting? And why would they do this? Because I'm more familiar with it with like these foundational LLMs doing this.
It's literally the forward deployed engineer model, and it's kind of weird actually that Microsoft aren't just using that term. We'll have an opportunity later today to ask them why. But it's basically a mix of engineers, consultants, in a model that you're absolutely right is kind of already out there. Palantir kind of pioneered it, but it's pretty pervasive. Amazon in the AWS context has recently done something of a similar level. 6,000 is a big force, but the pitch is basically not just that Microsoft personnel go into any given enterprise or any company and say, like, this is how the technology works and we'll help you implement it. They will pitch that there is a great cost benefit to that it is just allowing companies to deploy capital in a much more efficient way if they are going to invest in AI and make it actually work.
Ed, elsewhere, the FT has this story about Sam Altman and OpenAI proposing the government take a 5% stake. Again, this appears to be coming from the OpenAI side, not the government necessarily approaching them. I know that this is something you and I have talked about before. You've talked about extensively on Bloomberg Tech about the possibility of this. What do we understand at this point?
So the FT report is specific in that there is a consideration of OpenAI and Sam Altman in particular in pitching to the US government. They take a 5% stake in OpenAI. They are also, based on the FT report, just advocating a sort of broader idea where the US would take stakes of a similar level in a wide range of similar AI companies. But in the FT report, they don't name those other companies. I think it was just as recently as June 10th, right, when the president was speaking on camera from the White House, this idea that he was going to meet with all of the AI CEOs, and the idea that they would give back to the public and help the public generate some wealth. It was kind of the furthest that the president's gone speaking publicly about it. At this stage, Bloomberg's not verified that reporting, and we're chasing OpenAI and let's say Anthropic as well reasonably, if the FT report's accurate, that similar AI companies are part of this pitch as well. But generally, the US government taking stakes in companies of all types has happened, right? Intel in the technology sector is the easiest case study. So it's not that far-fetched.
Is it a bid, assuming this reporting is correct, is it a bid also to try to avoid some of the fate or the messiness that Anthropic, for example, has gone through, where there's this debate with the White House, this back and forth, whether they can unleash their most advanced models? Does the US government having a stake maybe help influence policymakers to stay out and to limit some of what they're trying to do?
The net result of what happened with the US Commerce Department eventually lifting the export restriction on Anthropic is that right now there isn't sort of a codified set of rules. Each time a new model is released, basically it seems like the Frontier Labs will have to just communicate with the administration on the potential of that model, what it's doing. But there's no sort of formal framework around that. So industry are basically saying we need a better way of doing this. Economic ownership of those companies, I don't know that the industry believes that will solve for that necessarily. Again, from the administration standpoint, what the president has said in the public domain is that it is more motivated by US citizens and the US public benefiting from the value creation and sort of economics of what the AI companies are delivering, which is massive growth in terms of valuation. Also with the idea that OpenAI and Anthropic are on potentially the list to go public over the next 12 to 18 months.
Hey, just while we have you, Tesla also just reported numbers. It does seem that the US figures maybe were weak, but Europe and China strong?
Yeah, I mean, China, we have the sort of monthly data prior to the quarterlies coming out, but in the second quarter, Tesla delivered 480,126 vehicles. Bloomberg consensus was for 396, so there is about 85,000 deliveries outperformance. Production was also higher. The problem with the Tesla delivery statement and production statement is there's no information in there. There's no color, there's no explanation as to what happened, but it is high. So in short, you know, they seem to have done well. There was a big move higher in the pre-market briefly, but that hasn't really been maintained, so it's certainly worth investigation. Sorry for my voice, but the game last night was great, so yeah.
Lots of yelling, Ed. Which one were you yelling at more, the England game or the USA game?
No, USA game, right? Like, I'm Welsh, I support Wales. My son is American, my wife's American, and it was here in the Bay Area, and what a great vibe it was in San Francisco last night.
I bet. But now we don't have Balogun for the next game. That's not great.
I know.
Yeah,
great. You can check out my posts on X on that.
Can't wait. All right, Ed, thank you so much. Ed Ludlow, and of course, catch him at 11 a.m. on Bloomberg Tech. As he mentioned, he's going to be speaking to Microsoft's Chief Commercial Officer at 11:30 a.m. New York time. All right, let's get your check on markets this morning. As we head about 15 minutes away from the opening bell, we do rebound. The NASDAQ up 0.2%, even after the punishment of South Korean tech stocks around chips. But weaker jobs numbers helps boost us and bring two-year yields in by 5 basis points. Brent crude also falling this morning. Coming up, BlackRock's Rick Reeder joins us to talk markets and the economy. And later this hour, we'll hear from White House National Economic Council Director Kevin Hassett. This is Bloomberg Open Interest.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, I'll still be driving something.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Minutes until the opening bell. Markets rebound after weaker jobs data that also sees front-end yields come in by 4 basis points. 4.13 is where we stand on your two-year yield. U.S. hiring did slow sharply in June. It was 57,000. The expectation in the Bloomberg survey was 113,000, so that is a wide miss. However, the unemployment rate did fall to 4.2%. The expectation was 4.3%. Let's bring in BlackRock Global Fixed Income CIO Rick Reeder. Rick, always great to see you on a Jobs Thursday this week, not a Jobs Friday. Look, it's maybe two different stories you could paint between an unemployment rate that was less than expected and jobs figures, payrolls that missed. Which sort of story are you following this morning?
So, listen, I'm more concerned about, last month, people were tremendously excited about a big jobs number. But if you actually broke it down last month, you have I think it was 54,000 jobs in state and local, and we didn't really get anything this month. And then you had this huge bump in restaurants and in bars, and then obviously that came off significantly, although I'm surprised it actually came off that much this month. I thought it would have taken another month or two for that to come off. But listen, I think that the hiring in the country is just okay. I mean, I think it is, I think Mike McKee said it right. It's stable, it's okay, but you've got an economy that's growing at some pretty significant numbers, and the employment picture is just okay. I just don't think we are hiring that many people. And I was looking at some of the data earlier in the week, the Challenger job cuts data. You had layoffs, I think, in tech of 443,000 jobs. That's up 83% year on year of increased cuts. So anyway, I think, when you break it down and I look across industries, once again, healthcare is incredible. You look at healthcare and education, 67,000 of the, 57,000 jobs. It's all healthcare and education. And so anyway, I think the hiring is stable, but I would say broadly unimpressive. And one man's opinion. That's part of why I don't really understand significant raises in interest rates relative to this. I think we're in an employment dynamic today that is just okay. And I'd say one thing about you saw that the hiring, maybe we don't have enough people because the labor force declined, but you've seen a persistent decline in average hourly earnings or wage or earnings data, and that doesn't suggest that companies are stressed about hiring people when you're not really seeing any significant wage growth. So anyway, one man's opinion, good economy, employment, just okay.
You are one man, but you are one man we respect and happens to be incredibly brilliant. So your thoughts matter a lot, Rick. Okay, so you don't see any reason to hike based on this data, but it is at least data that should allow the Fed to hold, or do you go so far as to say with this data in hand, there is room for the Fed to be contemplating cuts this year?
I mean, I don't think contemplating cuts, at the beginning of the or the next meeting or two, I think would certainly be enthusiastic to say the least. Listen, I think you got to wait to the back end of the year or to the very back part of the year, but I don't think they're off the table for the back part of the year. I mean, I think Chair Warsh said yesterday, you are seeing, and by the way, look at oil now under 70. You are seeing some improvement in energy costs. When you break down inflation and you look at what is the component parts of inflation today, core goods is running at pretty close to zero, 3-month, 6-month moving average, pretty close to zero. You still have service level inflation, which no doubt is too high. But if you strip out shelter, and I would argue, if we got mortgage rates down in the country, you'd improve shelter inflation. You're running at, depending on 3-month, 6-month, 2.5 to 3-ish, a little over 3. So anyway, I just think you have time. And I think Chair Warsh, and by the way, I have a huge applause for stepping back and thinking about, through task force and otherwise, the way you actually improve inflation when you've got sticky things like healthcare, education, insurance that don't really get impacted by the overnight funds rate. There are other tools you have. These things are really complex. Let's get some experts to analyze. Are we restrictive on the overnight funds rate? Well, not in housing, but maybe some other places. Or sorry, maybe you are restrictive in housing, I should say, but maybe not in other places. These things are really complex, and I applaud the fact you're going to really step back, think about what are some really complex issues, and what are the most appropriate tools to try and deal with those effectively.
Rick, there are many people who have expressed discomfort, let's say, about a Fed chair who's not more giving in his reaction function, and his understanding of how he sees the labor market, for example. Claudia Salm was talking about that with Tom Keene on Surveillance Radio just about an hour or so ago. Does that make you uncomfortable at all? Not necessarily that we're not getting forward guidance, but we're at least not getting more insight into how Chair Warsh is thinking about labor market, about inflation, about these key issues that the market needs to trade on and that matter for our economy.
And I really don't. I actually think, the way it was articulated, in the first press conference about, you want to see what the market's reaction function is to move to the dots. And by the way, if you look at historically, the forecast of the dots, particularly after you go out a quarter or so, not really very good. The fact that the markets have to pivot to those numbers or pivot to the Fed's reaction function, I actually don't think that's right. And I think there's a real elegance to, if you want to move, if you really want policy to be effective, you actually want to create change. You don't have to, particularly when you're easing, you don't have to be so prescriptive about that change. You actually want to create a little bit of energy and a little bit of surprise, because that's how you create economic and financial velocity. So, do you have at inflection points a little bit more volatility? Maybe. But I think at the end, I thought he made a statement that said, when we have something to say, we're going to say it. I like it. Like that to me is like, as long as you lay out the metrics, what are the benchmarks you're looking at, and then the markets can interpret those and make their decisions based on what those metrics and what your clear path of focus is versus the Fed having to tell you specifically, here's where we're going to go with it.
Let's talk about the market reaction, Rick, because post-FOMC, it had been one of higher yields where the 10-year yield started to bump up against 5.5%. We back off of that this morning, 2-year yields declining 4 basis points. Do you think we've seen a peak in yields now?
I will say one thing. I think I did a presentation that I said it's summertime, time to get serious. Although I go on a long weekend, I'm not sure everybody's as serious. But listen, I think these real rates are pretty interesting now. We're not adding a lot of interest rate exposure yet, but you're getting to the point where these real rates are pretty interesting, particularly if you think, which we do, that you'll see some abating of inflation. You're seeing that with energy costs, et cetera. So our view today is, I don't think we're going to make a lot of money on interest rate exposure. I actually think Europe's interesting because you see growth tangibly slowing and you're pricing in significant hikes. I think Europe, days like today, you get a little bit of softness, maybe add some European duration, or maybe we did. I think that's more interesting. In the U.S., gosh, I think income, like let's just carry. And if you can keep your income up, you're in this amazing environment with these real rates and with some spread, you can create 6.5% yields or even a bit above that. And to me, that's a much better disposition than like, gosh, I think the Fed's going to cut, because they're clearly not going there anytime soon.
Well, when it comes to bank, year to date, your total return is certainly exceeding the ag, both in the U.S. and globally. That also stands if you take it out from a wider time horizon, too. I know you were also discussing on ETF IQ this idea that IG beta is less interesting to you. So where in this American market are you squeezing out the yield?
There's a little bit of, I call it dynamic patience. There's, the new issue markets give you some opportunity. High yield is still, particularly Europe, like some of these spread markets, if you're a dollar investor, you swap back to dollars. European high yield, even European IG is pretty attractive when you bring it back to dollars. And, in particular, if you believe Europe is going to have to reduce rates over time. EM gets you some yield, and there's some places to pick up some yield across emerging markets. Securitized markets, there's so many things to do in securitized markets around commercial, residential, non-agency, et cetera. So it's those areas. And, I think we're in one of those environments. You pick a little bit here, you pick a little bit there. There's yield everywhere. And I just find like where you get really tight trading levels like USIG, when there's a lot of supply coming, agency mortgages are just okay. We trade them around a lot. But I like clipping coupon in some of the high yield markets and then going global to get some of that yield.
Hey, Rick, I hate to do this to you. I only got 30 seconds, but I would just love to get your thoughts. The pace of issuance for IG, already $1.1 trillion. Is that sustainable?
It's a lot. And, the markets that are blessed by huge pension demand, huge life or insurance demand, and you get a lot of cash. It's a lot that's coming. And part of why I don't think spreads are that interesting. You got to absorb a lot of that supply. My sense is, could you have a little bit of indigestion? Yeah, I think so. But there's still pretty immense demand to soak this up. So I don't think it'll be that interesting. But my sense is, it's not really that exciting to own it either.
Right. Rick, so great to get your thoughts. Thank you for joining us.
Thanks,
Enjoy your long weekend and your 4th of July. Rick Reeder there from BlackRock. We're going to get more on the payrolls report. We'll speak with White House National Economic Council Director Kevin Hassett. This is Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Seconds away from your opening bell, you're watching Bloomberg Open Interest. I'm Danny Berger. We fell yesterday to start the third quarter, rebounding this morning. That starts to give itself up, though. NASDAQ now little change to a little bit lower. We did get a big sell-off in South Korea and chip stocks, so that's not helping us out very much. At the opening bell, you have Cinda. I believe they're a mining company that's going public, and a big day for companies going public because Lime also going public, the Lime scooters and bikes, which clog up the roads at a city near you. They're not in Manhattan yet. I think they're in some areas of New York, and they're like trying to get them more widespread. But we have city bikes. What do we need that for? Let's look at some of the stocks to watch this morning. Cloud and other AI infrastructure stocks, they are attempting to rebound after yesterday's sell-off, but we struggle for that this morning because now CoreWeave falling again. We were reporting that Meta is building a cloud business to sell excess compute. Tesla, they're doing better this morning, up 0.4%. They beat Wall Street's modest expectation by a wide margin, like 25%. They lost subsidies in the U.S., but a viewer points out that they're gaining subsidies in both Asia and in Europe too. So that's starting to help offset the balance and have more customers go into their cars. But again, today's a day where we're struggling to hold on to any of the gains because we did get that labor market report, as you can see there. That was weaker, much weaker, I should say, than expected. But the unemployment rate was down at 4.2% from 4.3%. So that allows stocks, again, to attempt to rebound. The S&P up 0.3% here at the open, as the NASDAQ goes a whole lot of nowhere. But two-year yields, those are able to rebound. They fall by 5 basis points this morning at 412. I also want to welcome to our global TV and radio audiences. I'm Danny Berger, and the U.S. economy added 57,000 jobs in June. That missed expectations, even though the unemployment rate, it did come in to 4.2%. The expectation was 4.3%. Let's bring in White House National Economic Council Director Kevin Hassett. Director Hassett, thank you so much for joining us. I was just speaking with Rick Reeder of BlackRock, who you knew well, who at one point was interviewing. Friend, yes, at one point was interviewing for the same job you were over at the Fed. He basically described the jobs picture as thus: stable, but I would say broadly unimpressive. Would you agree? Unimpressive but stable?
No, I would say that it's on an upward trajectory. That 3 of the last 4 months surprised on the upside, as you know. There were a little bit of downward revisions. This one came in a little bit below expectations, but if you lift up the hood, then the basic story that we think is animating the economy right now is that there's a construction boom, It's the biggest construction boom we've ever had, in part because in the Big Beautiful Bill, we allowed people to expense factory construction. The president talks about all the time about all the commitments to onshore U.S. activity, and that's showing up in construction employment, which was up a lot this month. But the factories have to be turned on before the jobs go back up into the 200,000 range. And so I actually have been a little surprised on the upside by the job market because it's been north of 100 quite a bit. And because we don't have a massive inflow of illegal immigration, then that makes the break-even job number a little bit lower. And so I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3%, and that we're going to have a better second half of the year as those factories turn on the lights.
You've been consistent on that, but you've also been consistent on this. You were saying this just a month ago. The Fed is behind the curve. Plenty of room to cut. What you're describing does not sound like an economy that needs a cut.
Well, I think that again, what one has to do, and right now, you know, we've got Kevin Warsh there. It's different leadership, and we very much respect the independence of the Fed. I think that Kevin will watch the data and do what he thinks is right, and we'll support him in that. I think that as an abstract principle, you know, going back a month ago on this show or anywhere else I've been speaking, I've been highlighting the fact that the old-fashioned Phillips curve that says if you have growth, you have to raise rates, doesn't apply in situations where there are big positive supply shocks. And so if there's a big positive supply shock, you know, like you have an economy with an apple tree, you plant another apple tree, now you got a lot more apples, the price of apples goes down. And with AI basically increasing productivity of firms all across the country, then that's increasing their output. We're seeing it in real GDP numbers, but not putting upward pressure on prices. Now, on the other hand, if you mailed checks to people, as Joe Biden did, then they all of a sudden, you know, open up their mailbox and they got a few $1,000s, then they go out and spend it, but the supply doesn't go up with it. That's where you get the inflation that we saw.
To be fair, I mean, the president also, I remember getting a check signed by President Trump as well, and we also had the One Big Beautiful Bill, so both parties doing that. But Director Hassett, well taken on your point of Fed independence. I wonder why then you made these comments on Fox yesterday. You basically said that there are a majority of members over at the Fed who are voting not because they're patriotic, but rather because they want to get Trump. Director Hassett, that sounds like trying to sway the Fed or challenging their independence by you as such a big part of this administration with such a senior role, making a comment like that.
We've said over and over that we think that the previous version of the Fed had made a bunch of moves that looked to us to be partisan, and a lot of the people who decided to cut rates right ahead of the last election, to raise rates the minute that Donald Trump was inaugurated, a lot of those people
hang on, Director Hassett. I got to push back because they cut by 175 basis points from late 2024 through the 2025. That doesn't seem like something that's moving against Trump. That's allowing that's giving the White House effectively what it wants.
They're moving towards normalcy, and I hope that they continue under the firm and solid leadership of Kevin Warsh. I hope that they now move into a direction where they're data dependent. I think that if you look back at their history, going all the way back to when President Trump was inaugurated, they weren't always data dependent, and I'm hoping that they re-achieve that status. That's what I was saying yesterday.
Are there certain members of this Federal Reserve that you are in particular concerned about, Director Hassett?
I think it's extremely unorthodox that Jay Powell hasn't dropped out. The former chair sitting there is a very unorthodox thing. It's the first time in history. And I'm concerned about what his motivations for that are, yes, of course. But in the end, this is a problem that Kevin Warsh is going to work out. He's now the chairman of the Fed, and we have enormous confidence.
I was going to say, Director Hassett, just on that point, do you think that the White House needs to get more involved then? Do you think that there should be further investigations around Jay Powell? Should there be methods, much like with Lisa Cook, to see if changes can be made to this FOMC to, again, in your words, remove people who you are concerned that are moving more along the politics than the data?
I think the Fed needs to do its job, and they've got great leadership there, and we're going to hope for the best. We're going to hope for the best.
Well, what about when it comes to Lisa Cook? We had, obviously, the Supreme Court decision saying she can stay on for now. Does the White House intend to push some of these mortgage fraud allegations? Are there going to be continued actions there?
Well, I think we respect the judgment of the courts, and we'll look forward to seeing how the situation evolves.
So does that mean you still are active in this case against Lisa Cook? That is not necessarily something that the White House is going to back off of?
It's saying that I don't make law enforcement decisions.
Okay, Director Hassett, understood that. I still just, on this point of what the Fed should do and their ability to cut, we had core PCE crawl back up to 3.3% in April. Headline figures get to 4% in May. I just wonder where you see some of the partisan concern, because most people in that position would just pause and wait and not try to push in rate cuts. I just want to know where in the data you're seeing, besides Jay Powell staying on, I understand your point there, where else are you seeing some concerns of partisanship or at least dismay or direct action that seems to be against this president?
None whatsoever since Kevin Warsh has been there. And so we think that we've got the right man for the job there right now. And we think he's going to follow the data and convince his colleagues to do so. And that's our expectation.
What do you make then of Kevin Warsh's sort of approach to not give forward guidance? Do you think that this is welcome, and is the White House concerned at all about market volatility that might arise from that?
President Trump chose Kevin Warsh because he was by far the best person for the job, and I agree with that judgment. If he thinks that the forward guidance isn't useful, and the argument for that would be that it hasn't actually been that accurate, and so people would say we're going to do this and then they do that, then what use is the forward guidance? I've not done a full academic review of forward guidance and its ability to predict the future, but I know that Kevin Warsh is a person who believes that the forward guidance hasn't been that useful. But in the end, he's continuing it right now, and he'll decide whether he thinks it's a useful communication tool for the Fed or not. That's his judgment.
Director Hassett, I asked you about one Supreme Court decision. I want to finish just on one other one, Trump v. Slaughter, in which the Supreme Court did say that this president administration has more room to let go various heads or various senior people of different independent regulatory bodies within the United States. Does this give you and the team more firepower? Is there anyone else you are concerned about at some of these agencies that you would like to see let go?
The president has built an amazing team of people that I love working with every day, and I think that the Supreme Court judgment is just that within the executive branch, the chief executive has the right to build the team that he thinks he can work with. And I think we've got a team that's firing on all cylinders right now. Whether there's another person that the president thinks that could be changed out and improve the caliber of the team, that's his judgment. But I think that it's an appropriate decision that the executive branch leader, the president of the United States, gets to pick his own team.
All right, Director Hassett, we're going to have to leave it there. We really appreciate your time this morning. White House National Economic Director Kevin Hassett, please enjoy. Hopefully you get a long weekend. Please enjoy your long weekend and your 4th of July. All right, let's get a check on the stock market right now. 10 minutes into your trading day after those figures that we heard from the National Economic Council director there saying that they were very strong. This market, though, might having a different reaction considering front-end yields are coming down and stocks are rallying. We are up this morning by 0.5%. Looking at some of the companies that are bringing us there, we do have some of the big tech stocks doing pretty well this morning. Apple is up 1.8%, as is Amazon. Palantir, that got an upgrade from Gil Luria, so that's up 5%. Microsoft, a new task force that they've announced, basically, as we're talking to Ed Ludlow, these are going to be forward deployment engineers that they are setting off into the world to get customers to adopt more AI technology. To the downside, interestingly, Meta falls. A big rally yesterday thanks to the idea that we reported that they're going to be creating a cloud company selling excess compute. That has been knocking down some of the other cloud companies, at least it did yesterday. Tesla now turning to declines, even though they had delivery numbers that exceeded expectations. And you can see a lot of chips in the selling column. SanDisk is down nearly 2%. Lam Research, Applied Materials, we had a really big sell-off in South Korea, so maybe some of the leverage coming out of the system. The individual sectors this morning, the only one down is communication services. That's going to be Meta. That's going to be Meta weighing that thing down. Materials, staples, and basically everything else is rallying. It's surprising we're not up more, but that shows you some of the lopsidedness of this market, considering some of those semi stocks are up, but we're up by about 0.4%. Coming up on the show, OpenAI is reportedly proposing giving up a 5% stake to the government. We're going to have that conversation next. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jenner report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
"15 minutes into your trading day, we rebound. Some fluctuation in this market, getting weighed down by chip stocks, but yet we move higher. 0.25% for the NASDAQ, 0.5% for the S&P after selling yesterday. Two-year yields, those come in by 5 basis points after weaker than expected payrolls figures as Brent crude continues to dip, now below $71. Let's get you some top calls from the sell side. Here is Bloomberg's Isabel Lee with that. Hi, Isabel.
Good morning, Danny. First up, Wolfe Research are upgrading Chevron, saying that its cash flow looks stronger after the stock's pullback. The firm points to new production options and oil prices that look better than what the stock reflects. You see a nice pop there, up by nearly 2%. Next up, HSBC raising Adobe to a buy, and that's where you see a healthy pop there, up by around 4%. HSBC saying that the market is overestimating the risk that AI design tools will disrupt Adobe's software. The firm said it sees no material hit from AI competitors and believes that the reward outweighs the risks. And finally, another upgrade here, Davison upgrading Palantir. You see the stock there higher by nearly 5%. The firm says that growing friction between Anthropic and the U.S. government actually strengthens Palantir's position. So the firm adds that Palantir's AI platform lets customers switch models without disrupting operations. So this makes it a more reliable choice as demand for its platform remains strong. So all green on your screen. Those are your top calls. Danny?
Isabel, thank you so much for that. We'll catch up with you a little bit later. Now, the NASDAQ trying to shake off losses after chip stocks tumbled across Asia overnight. The sell-off was fueled by renewed concerns about AI spending or maybe just leverage. Joining us now is Mandeep Singh, Global Head of Tech Research at Bloomberg Intelligence. Mandeep, I wonder when you do look at a sell-off like we've had in South Korea and some of the chip stocks, if you kind of like take off your fundamental lens and you're like, there's been a lot of buying, there's a big run up, and there's maybe no fundamental reason, or is there one you see behind some of the selling we've had?
No, I would agree with you. There isn't any fundamental reason, but these valuations have run up. And look, when stocks, especially in the chip complex, the memory companies, they have had a lot of upward revisions this year, and everyone is still trying to figure out the duration of this cycle. That's the one big unknown, is how long this is going to last in terms of upward revisions, and the stocks will peak at least 3-4 quarters ahead of that. So that's where the durability gets put into question. And look, if Meta is getting into selling compute, SoftBank is announcing they are becoming a neo cloud. Things are evolving in the sense like you've got 2 or 3 foundational model players who have the best models, but everyone else seems to be struggling and they want to be a compute rental player. So I feel that those dynamics are definitely impacting the whole chip complex, but I wouldn't make anything in terms of fundamental change.
But is there a point at which the selling turns into a fundamental story? And I'm specifically thinking just about the CapEx and cost of capital and ability to do things like list more shares in the US. Is there some point where the selling does hamper these companies' ability to continue to spend?
I mean, look, at a fundamental level, you still have 2 models that everyone wants to use. Yes, you don't have a lot of competition at the model layer, so that's because we are so supply constrained. Everyone else is thinking, maybe I can make some money right now just by renting the compute because the market is so supply constrained. We saw that with SpaceX. That's what Meta seems to be doing. That's what SoftBank is after. So it's really a function of that supply-demand mismatch, which tells you there is a desire to have more compute, more memory, and that hasn't changed.
Just before we let you go, Mandeep, I want to talk about that FT story. I'm sure you read it, that Sam Altman approached the U.S. government himself, basically pitching a 5% stake for them. I wonder what you make of that dynamic. We haven't confirmed it at Bloomberg yet, but assuming that the reporting is correct, that it's Sam Altman going to the government saying, hey, take 5% of the company, not the other way around. What does that suggest to you?
I mean, all these models are being carefully reviewed. Look at what Claude had to do with Mythos and, Fable and the review in terms of restricting access outside the US. So if OpenAI can be in the good books of the government, make sure anything that they release has the blessing of the government. And even from an infrastructure perspective, all these companies are looking to ramp up their infrastructure in a critical infrastructure in a big way. So you want to make sure that government is on your side supporting you. And I think it's a good tactic, having the government buy a stake. It worked for Intel.
Yeah, I was going to say, they've done it before.
And it worked very well for Intel. Look at how well Intel has done since then.
Yeah, why not try to arrange something similar? Mandeep, thank you so much for joining. Mandeep Singh of Bloomberg Intelligence, you're taking tomorrow off, right?
I am.
You deserve it more than I think anybody in this world. Mandeep Singh there. Coming up, we talk about private credit, Blue Owl capping withdrawals again as pressure continues to build across the sector. That's coming up next.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Two of Blue Owl's private credit funds were hit with the industry's largest redemption requests, forcing the manager to cap withdrawals again. But shares are up nearly 6%, maybe not as bad as we expected. Bloomberg private credit reporter Olivia Fishlow joins us. I say not bad as expected, but it was still at like 19% and 38% for one fund. That seems to still be pretty chunky for Blue Owl.
Requests were definitely still high, but I think that is from last quarter. Many people were capped and couldn't get out, so we're seeing them rejoin the queues. But they were down from the quarter prior. So it seems like things are picking up a little bit in terms of sentiment.
I mean, how much of this, again, is people just trying to like jump the line? Because that's the narrative a lot of these funds have said. They're just trying to get in front and this prisoner's dilemma, get out before everyone else does.
I think that's definitely part of it. We've also heard that when people are requesting, they'll request all of their capital back just because they assume they can't get it. So I think sometimes maybe within a few quarters, they'll stop requesting as much. So I think it really depends on who's redeeming.
What's going on over at BlackRock's TCP? The head now leaving? Is that the latest?
In the process of leaving, yeah. Okay. I think they've had a lot of issues, and I think it's something that people have been watching ever since the HPS acquisition started. So it's definitely something we're following very, very closely.
Because they've had a few different investments that they've like essentially written down to zero. How much of that appears to be an industry-wide problem with maybe defaults starting to creep up a little higher versus something specific happening at TCP?
I think it is specific to the strategy that they went after, which was more lower middle market, focused on e-commerce and some other bets that I think really didn't pan out. And then I think that's also a part of the broader landscape of overall defaults within private credit increasing.
By the way, how are redemptions looking more broadly across the industry as these start to trickle in? I saw maybe Goldman, I know they didn't meet 5% last time, it was like 4.9999. Yeah. They fell below it again. Do you see broadly, again, same with Blue Owl, that the redemptions are starting to tick lower?
So I think Goldman was one of the only ones to be below the cap, but we saw this quarter most other funds had an increase, but we are expecting after this for redemptions to start to decline.
And then also the data does show, and I know your team has been writing about this, that institutional demand still seems pretty robust.
Definitely, yeah, we're trying to figure out where exactly the flows are coming from because you still are seeing flows into these funds while you're seeing massive amounts of redemptions. So it's definitely something we are trying to figure out more.
Yeah, they love to say this. They're like, yeah, these redemptions, but look at the overall picture. We still have so much money coming in. Olivia, thank you so much for joining. Excellent reporting. That is Bloomberg's Olivia Fishlow. All right, just about 30 minutes into your trading day on the last day of the week. If you're here in the United States, sorry if you're watching this from Europe, you don't get the same pleasure. The S&P and NASDAQ look to be at the highs of the session. Both are up about 0.6%. Weaker jobs number brings two-year yields in. That's allowing this rally to take place, even though some of the concerns over chip stocks, we saw that in South Korea, bleed into the U.S. session. But again, that takes a break as two-year yields stay at 4.13 and Brent crude below $71 a barrel. Coming up in hour two of Open Interest, Julia Coronado of Macro Policy Perspectives on the jobs report. Ken Anderson CEO Al Rabel with Bridgepoint set to buy his company, and the CEO of IQM Quantum Computers on the day they list via a SPAC, and Lisa Simon of Ravello Labs on the health of the labor market. You're watching Bloomberg Open Interest.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Some economists had been predicting that the World Cup would have a huge impact on American jobs. That, however, never panned out. ABC's Jim Ryan has more on June hiring numbers.
With so many soccer fans traveling domestically or from overseas to FIFA's North American venues, Goldman Sachs predicted a gain of 40,000 jobs in leisure and hospitality. But the Bureau of Labor Statistics says that sector lost 61,000 positions. In a separate report, the Labor Department says initial claims for state jobless benefits fell slightly last week to 215,000 applications.
The U.S. men's team did win against Bosnia-Herzegovina last night, advancing to the round of 16 in the World Cup for the first time in 22 years. In Venezuela, rescuers pulled a 43-year-old security guard alive from a collapsed basement, ending a days-long operation that began shortly after the twin earthquakes more than a week ago. The man had been trapped since June 24th under a shopping center. With doctors warning people about extreme heat that's covering the eastern half of the country, it'll be a holiday weekend of overtime for New York City police officers. ABC's Phil Tate's in Manhattan.
NYPD officers started to work 12-hour shifts yesterday. They'll continue to work these extended hours through next week, and that's as much preparations are underway for the July 4th celebrations. Now, this just in, Con Ed also announcing that they have reduced voltage by 8% in Riverdale and parts of Bronx.
Well, there are communities up and down the East Coast trying to conserve as well. The couple who scaled the Empire State Building spire on Wednesday were known to police, says ABC's Aaron Katursky.
This couple has done this before, documenting their exploits from around the world online and in Skywalkers, a love story on Netflix.
Love is like heights. The fear never goes away. You just get better at facing it.
The daredevils are now facing a slew of charges.
Police checking surveillance video as they decide on which charges. You're listening to ABC News. of July and America 250 celebrations this weekend mean a lot of people away from their homes.
Display saying that more than 72 million Americans will be traveling at some point over this holiday period. And if you are flying, today will be the busiest day for that. The FAA saying that they'll be handling more than 52,000 flights today. That is thousands more than it handles on a typical day. And TSA is expected to screen more than 3 million passengers today.
That's ABC's Matt Rivers, who is reporting from Newark International Airport. A major attack by Russia on Ukraine's capital city overnight. Hundreds of drones and missiles fired on Kyiv. At least 20 people were killed and more than 100 hurt. The bombardment lasting for 11 hours. A nun on her way to Mass, arrested by federal immigration agents in Texas. Then she was taken into detention, one of 10,000 taken into custody over just the past few days.
We're learning that Sister Leticia Ubwaja, a Nigerian national, was arrested and detained by immigration enforcement while walking to Mass. It happened last Sunday in McAllen, Texas. Bishop Daniel E. Flores of the Diocese of Brownsville calling her a source of goodness and hope in their community. Just a few hours after her arrest, DHS later releasing Sister Ubwaja, who's been in the U.S. for at least 10 years, but her immigration status is unclear.
ABC's Jay O'Brien. The administration's repeatedly pledged to go after the worst of the worst in the immigration crackdown. Many have said that's not happening and that others are getting swept up instead. This is ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, streaming live at Bloomberg.com. It is Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence program. We've got markets are moving higher here today with the S&P up about 0.7%. We'll get to that in just a moment. Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist. He's going to join us on some of the economic data here that we received today on the jobs market and what that means for this Fed going forward. So we'll check in with him. Elena Shuliatieva, Senior U.S. Economist at the Conference Board. We're going to hear thoughts on the labor market and what we may hear from the Fed. Brendan Murray, Bloomberg News Global Trade Editor. We want to get the latest reporting on the U.S. deciding against renewing the USMCA agreement, shifting to rolling talks. And what does that mean for the trade environment? Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence, cooling off down there in Miami Beach. He'll give us the latest on what's happening in the world of commodities here. And Randall Williams, Bloomberg's Business of Sports reporter. We got a lot to talk to him about the business of sports. We're going to have a sale of an NFL franchise coming up. I think the Seattle Seahawks. And they don't happen
The bids
very
were due
often.
this week. Yeah.
Yeah, so that, that's big, and it's going to be big numbers, I'm sure, so we'll break it all down with him. But right now, let's get a reset of this market. John Tucker's got a Bloomberg Business Flash for us.
All right, let's start off with more data. So this is the final reading for durable goods, just down 4.5%. Durable good, that's the stuff when you drop it on your foot that hurts. Factory orders down 1.3%. That is less worse than economists surveyed by Bloomberg had anticipated. The other big report of the morning, of course, the job market. It hit the brakes in June, throwing Wall Street a bit of a curveball this morning. American employers adding just 57,000 jobs last month, well below recent levels. And trading right now, a little quiet. Volume for the Dow, 20% lower than usual for this time of day. The Dow Jones Industrial Average up 352 points, 52,657. The S&P 500 up 53 points, a rise of 0.7% at 7536. The Nasdaq 100 is up 186 points. That's a rise of 0.6%. And those yields are lower. The jobs report means the Fed, at least the interpretation is less inclined to hike rates at this point. So that's why the market likes it, and the yields are lower. Again, the 2-year down 4 basis points. That is at 4.13. Google has lost its long-running fight against a $4.7 billion European Union antitrust fine. The European Court of Justice says regulators, they were right to punish the tech giant for abusing Android's market power. And you have Google, Alphabet, its parent, actually up on that news, up 0.5%. One of the other big movers this morning, shares of Tesla down 3%. Christine's going to come along in a few minutes to explain that, because I can't figure it out either. America suffering from a shortage of fun. Over the course of the past 2 decades, the U.S. has lost 2,000 golf courses and 7,000 bars and nightclubs. Americans also own 1.3 million fewer boats, experiencing less fun than we used to, with double-digit percentage drops in the number of hours spent each year on arts and entertainment activities.
But the hours spent on streaming has gone way up.
Yeah, I guess that's part of it. So people, get out there. Come on. Exactly. Let's have some fun, especially this weekend. Anyway, we check the markets for you all day long right here on Bloomberg Radio, Fun Central. I'm John Tucker. It's your Bloomberg Business Flash, Scarlett and Paul.
Commander of fun.
Yeah,
John Tucker.
That. Yeah.
I think a lot of that
Doesn't
fun is being spent on social media too.
Yeah, that's it. I think that's where the time spent is going.
Yeah, it's not even fun. It's just that eyes glazed over scrolling.
It's just so
for
bad. So
hours on end.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. Stocks are moving higher, as John reported. Let's get a sense of what's going on in the market today with some individual stocks. We can do that with Christina Aquino, managing editor markets today for Bloomberg News. Christine, what are you looking at?
All right, well, let's start with Palantir here. One of the stocks that is very much in the green this morning, ticker PLTR. Those shares are up more than 5%, and that is because it did get an upgrade from D.A. Davidson, raising its recommendation to buy from neutral. And analyst Gil Luria specifically citing Palantir's competitive advantage because it is seen as having a more favorable relationship with the U.S. government compared with some of its other rivals. So Luria kind of contrasts Palantir's experience with Anthropic in its recent confrontations with the U.S. government, which he says could pose risks to enterprise customers. So, the business of AI is really now increasingly, seems like it, more about who you know in terms of being able to operate. So the price target there for Palantir being raised to 175 from 165 and currently trading at 132. So that's a pretty chunky upgrade.
All right, let's stick with the AI theme and bring in Tesla. John mentioned that there are some sales numbers, delivery numbers, but the stock is down.
Yeah, absolutely, Scarlett. So Tesla, TSLA is the ticker, and those shares are currently down more than 3% now. And yeah, it's funny because, the good news coming from the vehicle sales climbing 25% in Q2. And, the estimate was, just more than 396,000 deliveries, and they far exceeded that, 480,000 deliveries. But I think the problem that Tesla is having is that increasingly it is not seen as a car company. It is seen as a company of Elon Musk's hopes and dreams when it comes to AI. And that's really kind of where some of the investor nervousness comes from because, we have heard from Musk wanting to transform Tesla's core business. He wants to turn it into an AI company involving robots and autonomous vehicles. And so as part of that, the plan is still to shell out more than $25 billion a year. And that is what investors are nervous about. What is going to be the return on that investment? And is the company really going to be able to monetize that? They have just gotten their vehicle sales kind of on track, right? And so with all the spending on other ventures, is that really going to take away from the core business? We'll see.
All right, we got Meta.
Meta also in the red this morning. So ticker META, those shares down more than 3% at the moment. We got news that they're going to be developing plans for a cloud infrastructure business. The plan is to sell access to AI computing power and models. They're going to be forming a business to generate revenue from excess computing power to be sold to outside customers. So they're trying to emulate, apparently, the Bedrock offering from AWS. But I think, the stock is not responding well because it has the feel of, throwing everything at the wall and seeing what sticks when it comes to strategy, which is a lot of AI strategies seemingly these days. And so that's why investors are probably being a little bit more skeptical about this.
All right, Christina Aquino, thank you so much. Christine is our managing editor for Markets Live coverage. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. John Tucker mentioned the big jobs report that we got this morning. By and large, it was weaker than expected. There's still job growth, but definitely a slowdown after the blistering pace for the previous 3 reports. Perhaps the job market is no longer overheating. That might be one interpretation. Let's go now to Ira Jersey for the bond market's interpretation. He is our chief U.S. interest rate strategist and joins us right now from Princeton. Ira, in the rates market, we see the 2-year yield coming in down 4 basis points to 4.13%. It's definitely on the short end of the curve, whereas at the long end, it's pretty much unchanged. What is being priced out following this June jobs print?
Yeah, so basically a very early rate hike, so interest rate increase is being priced out here, at least a little bit. It was more this morning. I think that, now that, traders are getting ready to go away for the long weekend, they're trying to square positions. So people who got pretty long or were long, taking some profits here and, kind of squaring things up as we get into the close. I think the jobs report was a little bit weaker maybe than some people are even suggesting. If you look at the revisions to the prior months, this would actually be a negative number. So, where it's not particularly good. And importantly, some people I know said, oh, look, the unemployment rate actually fell 1/10. But it fell for the wrong reasons, right? It fell because more people left the job market and stopped looking for jobs. So you wind up in a situation where the participation rate fell, which means that you have less people participating in the economy. And I think that that's being a little bit overlooked by some folks.
Ira, what did we learn from Fed Chairman Warsh yesterday from his comments in Portugal at that conference?
So first and foremost, Paul, he really does not want to give any forward guidance, right? He mentioned that a whole bunch of times to our former colleague Sarah Eisen, and I think Kevin Warsh is trying to go back to the pre-Ben Bernanke days where Alan Greenspan spoke for the entire committee. He was usually non-committal. And the few times that he was very deliberate. So like when he said, we're going to raise rates at a measured pace, for example, back in the early 2000s, that was a very Greenspanism and about as forward guidance-y as he ever got. And I think Kevin Warsh would like to do that. The thing, Paul, that I have a problem with Kevin Warsh's line of thinking is when he had said during the press conference a few weeks ago that he wants the market to lead the Fed. That's not how it works, right? The market tries to anticipate what the Fed is going to do. So we might wind up in a situation where maybe the Fed surprises the market more frequently than they have in the recent past, since communication policy always, adjusted rate expectations in real time.
Okay, so clearly the job report today is moving the rates market. Not so long ago, oil was kind of the thing that moved the rates market. We see oil down for a 3rd straight day. Is crude at all dictating the rates market, or has that now faded as the Iran war turns into, just never-ending talks?
So there's actually a point where where when you look at inflation expectations, and that's the transmission mechanism for oil into the rates market, and you look at inflation break-evens, so how the market is anticipating future headline inflation to be, that basically when you get under $75 a barrel kind of goes away and becomes much more exogenous on a forward basis. So I think it had really done a lot of the work back in the last couple of weeks, but certainly since the 20th or so of June, inflation break-evens basically have been range bound since then, after having come down quite substantially following the if you want to call it the ceasefire that. Who knows if it's really holding or not, but certainly oil coming down and being in this $75 range or so is not going to be anything that the rates market's going to care about. So then we turn a little bit more to fundamentals and we look at things like core inflation, which, when we get that report later this month, will be the next real volatility driver for the rates market, I think.
All right, Ira, thanks so much. As always, Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Coming up, we're going to check in with Yelena Shulyatieva. She's a senior U.S. economist at the Conference Board. Get her thoughts on the labor market. And then Brendan Murray, Bloomberg News global trade editor. We're going to get the latest reporting about the U.S. Not renewing the USMCA, a core trade agreement for North America. We're talking Canada, United States and Mexico. Now we're going to be rolling into rolling talks, I guess. So what does that all mean?
Non-stop negotiations.
Non-stop negotiations, and that's what this president likes. Here we go.
Headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Here is a headline to chew on. Key European nations accept Hormuz Strait fees as inevitable. So they're anticipating the strait is now going to have a toll, and they're going to pay it to Iran and Oman, something that was not there before the war. Right now, Wall Street's pre-holiday trading session seeing the S&P 500 extending this week's advance. It's up 44 points right now, 75.27 on the index. Dow Jones Industrial Average, that's also rallying, up 403 points at 52,717. The NASDAQ Composite Index up 112 points, up 0.4%. Treasury two-year yields dropping 4 basis points. This is the idea that the Fed's going to be less inclined to raise rates after we had that slower than anticipated increase in U.S. jobs. Non-farm payrolls increasing 57,000 last month. way below estimates after also downward revisions to the prior 2 months as well. Again, the 2-year, well, now it's down just about 4 basis points at 413. Some of the individual movers, Tesla, vehicle deliveries, sales, more than anticipated, but the stock's down right now 4.6%. Micron down 0.1% right now. Alphabet, those shares 0.3% higher. The trading debut yesterday for Bending Spoons of Milan. Well, today those shares down 8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. It is Jobs Day today, so we want to dig in a little bit more into this jobs report, which was a weak print compared to certainly the previous 3 months. 57,000 jobs added. That is roughly half of what the consensus estimate was. And I believe, Paul, you had mentioned that the whisper number coming into this June jobs report was even higher.
Yep. Yes, a little bit higher here, so it came in, just well below expectations.
Well below expectations. All right, let's bring in an expert on all of this. Yelena Shiliacheva is a senior U.S. economist at the Conference Board and joins us now. Yelena, are you surprised by the jobs report, given that you have another read on the U.S. economy based on the work that you do at the Conference Board, which had indicated that consumers were feeling kind of downtrodden about the economy and certainly when it comes to inflation?
Hi, Scarlett. I would argue that despite all these big swings in the headline number, the picture is still the same. It remains the same kind of the labor market we have seen over the last year or so. So the swing in the headline was largely driven by leisure and hospitality, first rising in May and falling in June, as basically I think World Cup kind of like muddied the numbers there, some seasonality over there. But if you look at the core industries that have been providing employment gains over the last several months, it's still the same. The picture is pretty much unchanged. Leisure, healthcare and social assistance, professional and business services, and state and local governments kind of continue to provide payroll gains. So to me, the picture hasn't changed much. And even the decline in the unemployment rate, I think that was a one-off, really driven by a sharp drop in participation rate among 25, 34-year-olds, which I don't expect to last. It was an unprecedented drop, and I cannot find a clear explanation for what happened there.
How do you think the Fed Reserve, Fed Chairman Warsh, how do you think they will interpret this data?
I think it's a good signal for them to just kind of step back for the rest of the committee, at least on the hawkish rhetoric, and just focus on the 5 task forces until the end of the year. So we remain of the view that the Fed will not move this year. No hikes, no cuts, obviously. But the report kind of like lets them step back a little bit from the hawkish rhetoric. At least the labor market is not becoming a significant source of inflationary pressures. And look at average hourly earnings. Despite an uptick in year-over-year rate, the trend that started in 2022, the downward trend in wage growth, that continues, and it just continues to normalize and continues to tell us that jobs are hard to get, workers are not quitting, and they are not demanding higher wages.
Okay, and of course, when you factor in inflation, it feels like people feel like there's a contraction when it comes to how much they're making. I want to get to the unemployment rate because for a long time, that's what the Fed was focused on. And in the month of June, it unexpectedly fell to 4.2% from 4.3%. A lot of people, Yelena, are saying this is declining for the wrong reason because the labor force participation rate has dropped to a 5-year low. People are no longer in the market looking for jobs. Help us understand why that may be the case.
I think that drop in participation rate overstates the recent trend a little bit because, again, if you dig deeper into the details, look at 25 to 34-year-olds participation rate. There was like a 1.6 percentage point decline. That was the largest in history if you exclude the COVID era. So I don't know if it's like a real drop in this particular age cohort. I think it will just go back up next month. But overall, yes, you're right. The participation rate is declining, and it's declining for two key reasons. We are aging, and immigration is also not contributing to growth in the labor force. So that trend will continue, and it will continue to put some downward pressure on the unemployment rate. At least will, provide some, some lead to that.
All right, very good. Yelena, thank you so much for joining us. We always appreciate chatting with you. Yelena Shiliatieva, she's a senior U.S. economist at the Conference Board. A big news is developing in the world of global trade, and that is the U.S. announced that it will not renew its trade deal with Canada and Mexico, instead conducting the annual reviews of the pact, which risk adding uncertainty for companies producing goods across North America. To get the latest reporting on this, we turn to Brendan Murray, Global Trade Editor for Bloomberg News. Brendan, your world, the world of global trade, has had 24 hours to kind of digest this news here. What's some of the fallout we're seeing from maybe some of our trading partners like Canada, like Mexico? How are things going to change?
Yeah, I think the main response, if we could sum it up, was that they're just resigned to the fact that this is how they're going to deal with the Trump administration as long as he's in office. And so we didn't see a huge reaction in either currency. And companies that that do business across the three countries, particularly automakers, their shares didn't really move all that much. I think this is really the beginning of the story, rather than the end of it, and the Trump administration wants to have trade negotiations with Mexico because there are specific issues to that relationship that Washington wants to address, and then they have to sort out there's some of the disagreements with Canada as well, and there's not a whole lot of love lost between Ottawa and Washington these days. The sides aren't really talking about trade at the moment, and so it's those are going to be sort of tougher to get going, and we'll see how it shakes out. But ultimately, the USMCA, it was going to expire in 2036, and that's the course it's on, unless they can get it into a shape where everybody thinks it's worth renewing for another 16 years.
Okay, so this creates uncertainty for automakers. I heard you mention them, certainly farmers as well as energy companies. What are the specific sticking points? What is something that the U.S., the Trump administration wants that Canada and Mexico are not willing to give, for instance?
Well, one of the issues with Mexico is are what they call rules of origin. This is basically sort of the nationality of a product. Is it made in Mexico? Is it made in the U.S.? And the Trump administration wants to sort of tighten up these rules of origin so that products have more American content in them than they would another country like Mexico. And so there are already these rules that exist, but the Trump administration wants to tighten those up, to have more things made in the United States. This long-running issue that the U.S. has with the Canadian dairy industry, and then the protections that the Canadian government has for its dairy producers. That's been a long-running sticking point, and the U.S. Trade officials that we've spoken to have said that's another issue they want to deal with it. And also with Canada, Canada produces vehicles. American automakers have plants in Canada, and the President Trump wants those cars and trucks to be made in the U.S.
Brendan, is the expectation that if President Trump doesn't like a particular economic action from either Canada or Mexico, that the response would simply be tariffs?
Yeah, that's the other unknown that we're going to get here in the short term in the next few weeks is the 10% tariff that the president put on most major U.S. trading partners after he lost the Supreme Court case. That 10% tariff expires on July 24th, and so we're going to see the administration come out with a sort of a rolling group of different kinds of tariffs using different authorities to put on instead of the 10% tariffs that are applying now. USMCA goods that move across the U.S., Canadian, and Mexican borders, USMCA compliant goods are not going to be subject to that. But these other tariffs that are going to replace it, there are concerns. These sort of sectoral tariffs are going to that there are concerns that if USMCA kind of fades away or starts to be eroded in the rules that are currently in place, that some more merchandise that moves across North America will face some of those tariffs. That's the fear from Mexico and Canada anyway.
Very quickly, Brendan, I know you mentioned the automakers' stocks, for instance, didn't move a whole lot on this announcement, but I wonder what the industry is saying right now in terms of urging governments to move forward or how they move forward.
Yeah, I think generally, the automakers don't really want to, stick their necks out and say much and complain about things. There are tariffs on imports of steel and aluminum that are hitting the U.S. automakers and making U.S. cars more expensive. Right. But generally, businesses say, look, we need clarity, we need some stability, we need to know what our costs are going to be over the next couple decades if we're gonna have supply chains that benefit from what Canada, Mexico, and the U.S. has to offer.
All right, Brendan, thanks so much. Appreciate it. Brendan Murray, Global Trade Editor for Bloomberg News.
And of course, this Independence Day joined Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app. Saturday, July 4th, starting at 7 a.m. Eastern Time. You don't want to miss it. All right, we're looking at equities, at least mixed right now on this Thursday morning. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. The major averages that just turned mixed right now. The S&P 500 up 28 points. That's a rise of 0.4%. 75.12 on the index. The Dow Jones Industrial Average up 443 points. That's a rise of 0.9%. We're at 52,756 on the index. And it's the NASDAQ 100 that's turned lower, down 136 points right now. So that's down just about 0.5%. You have 8 of the 11 major industry groups in the S&P 500 right now. They are higher, and it does reflect some rotation. You have healthcare and consumer staples are in the lead. The biggest drag coming from consumer discretionary. Think Tesla, those shares down 5.7%, and communication services, the other big drag. That's home to Meta, down 3.3%. Moderna, the best performing stock in the S&P 500, it's up 8%. mRNA, the ticker symbol, Moderna is up 165% since the start of the year. So it looks like tolls may be inevitable. Some leading European powers now accepting that ships transiting the Strait of Hormuz will have to pay fees to Iran and to Oman. Right now, once again, the S&P 500, 24 points higher. I should point out, it's a pretty low volume day, so I think everybody just...
But we're here.
Well, we don't count.
I used to count.
Hedge fund billionaire Ken Griffin. What is it about Miami? He spent roughly $125 million to acquire the 138 condo units and ground floor retail at the Solaris in Miami's Brickwell Financial District. He plans to demolish the building, all part of his efforts to assemble land around the headquarters of Citadel and Citadel Securities, and he's going to develop a multi-billion-dollar complex in that area.
It's like a Citadel campus now?
Yeah, I mean, this guy, you can't stop him down there. He's all in. Like, chips all in.
This is why
South
they call
Florida.
it Wall Street South, right?
I guess, yeah.
I got to wonder how hot it is there. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
We can find out.
We can find out. Our next guest is in Miami. How about that? So, John Tucker, thanks for that. Let's go right to our next guest, Scarlett. We got Mike McGlone. He is commodity strategist for Bloomberg Intelligence. He is, in fact, officed down there in Miami Beach. What's the weather down there, Miami, Mike?
Well, hello, Paul. It's cooler than it is up there. We're like in the higher 80s, but I hear it's a lot hotter up north, and going to be hotter this weekend.
I don't see it. That's not supposed to be right.
I know.
They get all the good weather they enjoyed during the rest of the day. They should be suffering in the summertime.
They usually do kind of suffer in the summertime. It's just that we're suffering even more.
Okay. All right. Hey, Mike, you were right, as always. I got a 67 handle on WTI crude oil here. How do you think this thing trades in the next few months?
Yes, Paul. Well, first of all, I think when you're driving down that New Jersey Turnpike, when John is, I think by the end of this year, you're going to be paying $2 a handle for gasoline versus $3.80 right now.
Yep.
It's a typical cycle. I'll be publishing that on Monday when we come back. It's a normal cycle, but the key thing about crude oil is we're learning the lessons of elasticity. And it just reiterated that major trend in the world of the Western Hemisphere becoming the price maker status. Now you're seeing a lot of the professionals like Morgan Stanley and Goldman Sachs coming down their estimates, but they're realizing what happened is that spike in prices is now increasing that supply, decreasing demand, and adding to that process of technology, hurting both sides of supply and demand of crude oil. So I guess we're not priced for a lot of risk this weekend, even if something flares up in the Gulf. But I think crude oil is going to be heading down on the year with a lot of other commodities have already done that. And that means below $57 a barrel. Right now we're 67.
Well, as someone was observing to us yesterday, Paul, the ceasefire seems to be intact when the markets are closed. And when, when the markets are open. When the markets are closed is when we get these little skirmishes that somehow settle by the time the trading week begins again. So, Mike McGlone, with oil prices, you know, kind of having come down, made the round trip from where they were before the start of the war, the U.S. is in its own special position because we're a net oil exporter. But what about countries that import their oil? How are they responding? How are they reacting? How are they positioning themselves? And how do you think about the price of oil as they try to take advantage of this downdraft in prices?
Well, Scarlett, I'm glad you went there. Consensus is they're all going to be building up their reserves. That's why I find it kind of silly when we talk about our reserve. We're a net exporter. We just don't really need it anymore like we did in the past. So they'll be doing that. So there'll be some of a bid below, but I think they'll get lower prices to do that. Remember what's happened. We had drill and will. Mr. Trump's mantra was kind of the U.S. Now it's gone global. We can add Iran to that, Iraq, UAE, Venezuela. The whole world's going to get plenty of oil. It's just a question of the key theme I'm worried about now. For what typically makes oil make bottoms is now for oil to just stay stable, the U.S. stock market has to stay up. If it drops down for a typical midterm election as we head to the second half of this year, then instead of going down to 57 or 55, it's going to go down to 40, which is the normal cycle. Remember, this is very similar to 2008. We just didn't make as high as a high, but big difference in 2008 when it went to 147 and down to 40 is the U.S. was a net importer, and the stock market actually went down later in the year. So this second half of the year is going to be very unique for all commodities, and if stocks go down, we'll probably see pretty severe deflation in commodities.
On your global commodities dashboard, Mike, what are some of the key issues you're talking to clients about these days?
Well, the key theme so far, Paul, is pump then dump. It started at the beginning of the year with Bitcoin and U.S. natural gas, and now it includes gold, silver, platinum, palladium, iron ore, and corn. The key ones that matter now, copper might be next, and crude oil might be next. Just normal supply and demand will get crude oil probably down in the year, but copper's main risk is if the stock market goes down, because it's a complete sock puppet to the stock market at this moment. It only goes up when stocks go up, and when stocks go down, it goes down more.
What about gold? How does gold fit into all of this? I mean, gold had its moment at the start of the year, and since then, it's been kind of meh.
But Scarlett, you nailed it. Those of us who Paul reminds have been bullish gold forever, we had the best year last year in history in an environment without inflation. That year was just phenomenal, and you're supposed to typically when that happens, it puts in peaks for years. So I think gold's going to knock around a range. It could get to 5,000, it could get to 3,000, but knock out around in a range for the next who knows how long, similar to what crude oil's done for the last 20 years.
All right, Mike. Tom from the Upper East Side writes in and asks, what about Bitcoin? We got below 60,000, traded as low as 57,000. Now we're back above 61. How does this thing play out?
BitDog is a pretty severe bear market that faces massive supply surpluses in all the cryptocurrencies. I look at my Bloomberg terminal, and if you put on the CRYP, there's hundreds of cryptocurrencies and all highly correlated. So we have to flush those out. We're in the process of doing that. And if the stock market goes down, it's going to go down a lot more. And I look over at the GLCO page on the Bloomberg terminal. It only has 20 or so commodities. That's the difference. There's an unlimited supply of these cryptocurrencies. We're flushing them out. The key theme is the mania is over.
So I guess I don't even need to ask about the altcoins, the things that aren't Bitcoin but have coin at the end of their names.
Well, we could talk about Dogecoin. I love Dogecoin. It's number 9. It's worth about $11 billion right now. I really started beating on it 2024 when it was around $60 billion, pointing out it was kind of the same value of BNY Mellon, yet BNY Mellon had $19 billion of revenue. So we need to flush out all these excesses. I think people are getting it, and it's just a matter of time we kind of purge it all. Once we purge it all, we'll find the bottom. So I think Bitcoin's next key support target is around 50,000. And if the stock market goes down in the end of the year, it might head towards 10,000.
Wow. All right, 10,000 there, $40 for oil, all over the place. Mike McGlone, senior commodity strategist, Bloomberg Intelligence, not afraid to throw out some numbers there as it relates to some of these big commodities here. So, but we got Bitcoin, I don't know, kind of 61,000 and change here. We'll see how that plays out. But we did get to 57,000 just a few days ago. It broke through that what I thought was his support at 60,000. But there you go.
There you go. All right, we have a lot coming up on this next hour of Bloomberg Intelligence, but first we're going to take a check-in. We're going to get a check-in, I should say, with Randall Williams. He is our Bloomberg Business of Sports reporter. It's been a big week, last couple of weeks for the World Cup.
He has been to and will continue to go to a lot of these World Cup games.
Yes, and he went to a couple of Knicks games as well during the championship round. So we'll get his take on what's going on and, which companies are best positioned right now. Is it Nike? Is it Adidas or Adidas, depending on how you pronounce it?
Yep.
I go with Run DMC's pronunciation, Adidas.
Oh, okay.
Yeah.
All right. That's
New Yorker to the end.
Yep.
And of course, surge in NFL valuations with this bid for the Seattle Seahawks due earlier this week. What happens to that? What happens to the NBA expansion team in Las Vegas and Seattle? So much more to discuss. All that ahead. This is Bloomberg Intelligence on Bloomberg Radio. Keep it right here.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. You know, World Cup going on. I think a lot of people are jumping on the bandwagon. I know I have. There's been some great games. Randall Williams has been to a bunch of them. He's a Bloomberg Business of Sports reporter joining us here in studio. So you went to a game this week at MetLife. You saw, who'd you see?
I saw France and Sweden play.
Oh, that's good. So you saw probably one of the teams that might win it in France.
They should, unless there's another incredible effort from Argentina, Spain, maybe Portugal. Who knows? Maybe the U.S.
I was going to say, how good is Team USA? What are people saying about that?
They're good, but they have a tough test against a Belgium team that beat them earlier this year.
How badly?
I think it was 2-1.
Okay.
2-1, but Belgium scored pretty quickly. They scored 2 goals, I believe, in the first 30 minutes of the match. And they'll be playing with Flo Balogun, who...
Terrible.
I mean, that red card situation is bad. It's an accidental contact.
Yep.
And I think, like, you got to sit out for the rest of the match, fine. But the fact that there's no appeal process is crazy.
Yeah, it is. There's one of many things that's wrong with FIFA. And why it will always be a fringe sport here in the U.S. That's my opinion. I just can't take a lot of petty.
A lot of strong views on this.
Right.
So when it comes to the World Cup, we know that the companies that sponsor the naming rights for a lot of the stadiums are definitely losing out. But what about other sports-related companies, Nike versus Adidas, for instance? Who's better positioned?
I think they're all in good position because there's so many teams and so many players. But at this point, it becomes an advertisement game. And I think how can you energize consumers to want to rush to the store to buy a jersey, to buy products, period. And I think that for Adidas, it's a Messi train. Messi, so long as Messi's in the tournament, I would consider them the front runner. Now, Nike is winning the numbers games right now. I believe they have more teams left. But, I mean, there's also a problem right now with being able to buy Team USA jerseys. And this happens from time to time at events where these companies are like, we didn't know that there was going to be this big surge. And I just never, ever believe that when you go to the Super Bowl that there's the teams that are in there are not going, their fans are not going to want the jerseys. This is the exact same thing. So they're all winners, but it all depends on how much product you can supply in the current moment so that people can feel like they're a part of the moment.
Interesting. Let's switch gears to the NFL. What's the latest with the Seahawks here?
So I reported earlier this week that first-round bids are due. I know that there are at least 2 parties. I have not been able to confirm Todd Bowley's interest, but the parties that we know, of course, are Whit Grusbeck and DT Middle, and then Vinod Khosla, who is a part owner of the San Francisco 49ers. So 2 parties for sure. I'm sure that there will be more when more reports come out, and this sale is going to be huge.
Wait, if Vinod Khosla is a part owner of the San Francisco 49ers, how can he bid for the Seahawks?
Well, he'd have to sell. So the 49ers had around a 6% stake sale up last year, and Khosla bought the biggest stake that was available. That 3%, I imagine he would either sell back to the team or find somebody else that was interested in. You can't own 2 pieces of an NFL team at once as an individual. Private equity firms can do that. Arctos has a piece of the Browns, the Chargers, and the Bills, but individuals cannot. So he'd have to do that if he were to win, but he's facing a tall task against an Indian steel titan that, has a lot of money.
Oh, Aditya Mittal is the Indian Steel dude. I was going to say,
Yes.
I don't know any of these guys. Like, who are they? But
Well,
now
I think
they're
know
billionaires,
them.
Paul.
Yes. That's why I
It
don't
doesn't
know them.
surprise me, though. I mean, look, as the NFL and as sports leagues continue to grow bigger, there's going to be an increased population from billionaires that are outside the U.S. that are going to have to buy these teams because the capital is going to continue to grow. As I've said many times before, you have to have 30% in cash up front to buy an NFL team, and if that number is $9 billion minus the debt that you can take on, that number is probably $2 to $3 billion in cash. There's just not a lot of people who can just write that check right away, but the middle family can.
How much money are the Seahawks going to go for?
I think between $8 billion at the lowest and $9.5
So that would be a record.
It would be a record regardless. They're going to go for more than the Commanders. I think I would be shocked if they go for more than the Lakers, though. The Lakers are an iconic franchise, and don't get me wrong, like my dog could run an NFL team is what a banker has told me many times before and make money. But it's the Seahawks, and the Seahawks are fresh off a Super Bowl championship. Yep. The Super Bowl does not have a dramatic increase on the value of a team outside of showing that the people within that organization are competent. They know what they're doing. So whoever comes in doesn't have to do a lot of hiring. They shouldn't. They should just keep the things that are in place. But who knows? Billionaires make their own decisions, and they hire their friends a lot of times.
How real is this Bob Iger, Joshua Kushner
Good question.
news about maybe they may want to bid for an NBA expansion team?
I'm a little skeptical right now. I think that we're in this phase where the NBA has not, they're not in the formal bidding process yet. The NBA has not come out and said, we are accepting bids. They're still canvassing the landscape to see who is interested in these teams. And so Scar could raise her hand and say that she would like to buy an NBA
I need some
expansion
billionaires
team.
to hang out with.
But once the bids are in, we'll know more. And they're not the only one who has said that they are interested. And so I think that it remains to be seen. There's the Vegas team is undoubtedly going to go for more money than the Seattle team. They're not going to have any trouble selling luxury suites. There could be a new stadium. They could play in T-Mobile Arena. There's a lot of options that are in Las Vegas. And so even if they do, Bob Iger and Mr. Kushner are putting together a bid, we're a long ways away from saying that they're the front runner and that they can
What kind of timeline are we talking about here for these
Adam
teams?
Silver has said that he expects a decision on whether they will or won't expand by the end of the year. So it's no guarantee.
Yeah.
While everyone's raising their hand, the NBA has not said we are going to add 2 teams yet. That's not where things are at. It will all depend on the bids and I think ultimately who's willing to pay the most money.
As always.
Yep, always.
All right, Randall Williams, thank you so much. Our Bloomberg Business of Sports reporter, senior reporter, right? Okay, senior reporter, thank you so much, and good luck with the matches that you will be watching in the coming days. You going to Turkey versus U.S.? Oh, sorry, no, U.S. versus
Not Turkey versus
Belgium.
U.S. The next match that I'll be going to is not France, Sweden. That's the one I went to. It is Brazil and Norway.
All right, good luck to you. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good Thursday morning. I almost said Friday, but it's kind of like a Friday when it comes to the work week, right? Yep. Okay, so good Thursday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. It is Jobs Day, so we're going to dig into the jobs report for the month of June. Coming up, we will be speaking with a number of experts. We've got Amy Glazer. She's Senior Vice President with Adecco on the June U.S. jobs report. We're also going to check in with our Michael Shepard. He is our Bloomberg News Senior Technology Editor to talk to us about how OpenAI has proposed giving the U.S. government a 5% stake. That's interesting. Michael Cugino is President and Portfolio Manager at Permanent Portfolio Family Funds. He will join us to give us his outlook for these markets with the NASDAQ off by 0.2%. And we're going to get a check-in on geopolitics with Edward Price, the non-resident Senior Fellow at NYU. But first, let's head over now to Charlie Pellet for our Bloomberg Business Flash.
Thank you very much. Great hour ahead, and we are well off session highs. You alluded to NASDAQ. Let's begin right now because NASDAQ is in the red, down 41 points to 25,955 right now on the NASDAQ Composite Index, down 0.1%, giving up earlier gains. The NASDAQ 100 Index now sinking by 0.7%. Both the S&P and the Dow are pushing higher. Dow, in fact, at a record on this jobs Thursday. We did see a slower than anticipated increase in jobs, driving most stocks higher. S&P up 19. That is a gain of 0.3%. So to be sure, most stocks higher. Dow at a record. We do have the Bloomberg Mag 7 Index falling by 0.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, down by 3.2%. And the VIX was below 16, now just above 16. The 10-year 4.46%, with the 2-year 4.12%, and the 30-year 4.96%. Gold is surging 2.5%, $41.29 right now for an ounce of the precious metal. A further retreat for West Texas Intermediate crude, $67.74 a barrel, down 1.2%. Barrel of Brent below 71 now. Brent crude down by 1%. Jobs Thursday, as we mentioned, hiring slowed sharply in June, even as the unemployment rate fell to 4.2%. Yelena Shulyateva is senior U.S. economist at the Conference Board, and she was a guest right here last hour on Bloomberg Intelligence.
The swing in the headline was largely driven by leisure and hospitality, first rising in May and falling in June, as basically I think World Cup kind of like muddied the numbers there, some seasonality over there.
Yelena Shulyateva, senior U.S. economist at the Conference Board, a guest right here on Bloomberg Intelligence. So recapping now, earlier gains fading for NASDAQ, down 0.3%, S&P up 0.2, Dow Industrials at a record now, up by 0.9%. I'm Charlie Pellet, Scarlett and Paul. That's a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Let's get a check on the individual stocks making up a lot of the moves in the markets. And Christina Aquino, our managing editor for Markets Live, has been canvassing the screens, and she's come up with a trio of names for us to focus on. What do you have?
All right, Scar, let's start with Nike. So ticker NKE, those shares are up more than 1.6% at the moment because they are big winners in Bloomberg's Alternative World Cup. Do you know about this? So the Bloomberg Business of Sports team has devised the Alternative World Cup, like which companies have supplied the jerseys to the most winning teams currently in the cup, because they all supplied roughly the same number of jerseys to different teams. Nike is ahead of this Alternative World Cup in terms of the number of teams that they have supplied kits to that are still in the running. They're ahead with 8 teams at the moment. But, this is, great for Nike, of course, a lot of visibility in the World Cup. But, of course, still a reminder that the company is struggling. We did hear from them earlier this week. Executives gave a cautious outlook in the quarter ahead, warning about elevated consumer anxiety, a lot of slowdown expected in the coming quarter as well, citing primarily the timing of wholesale shipments in North America as one of the factors. But at least they're getting a lot more eyeballs on in the World Cup stage, so good for them.
All publicity is good publicity?
Yeah, absolutely. Coherent.
Coherent. All right. So that is one share that isn't doing too well at the moment. Ticker COHR. Shares down now more than 6%. So it's an optoelectronics company very much tied up in the chip stock swings that we've seen this week. We have Raymond James actually raising the price target in Coherent to 435 from 371. That's still staggering share prices though. Currently trading at 344. And so still a lot of kind of optimism for the company. They're maintaining a strong buy rating. It's just that it has been swept up in what we've seen as a bit of a downturn in the chip stock complex at the moment. The Philadelphia index currently, again, down at the moment, 3.9%, nearly 4%, second day in a row. Just a lot of challenges in that space that these companies are getting swept up in.
All right, absolutely. It is June. No, sorry, it is July. June is typically wedding season, but some people choose to get married in July, right?
Yeah, some people, including Taylor Swift and Travis Kelce. And so surely going to be a boon for the MSG stock. At the moment, it is currently down. So ticker MSGS, that's down about 0.5%. But after this wedding weekend extravaganza, maybe they're going to add to those share gains. So the details, right? 2-day wedding starts on the 3rd of July, 1,000 guests. It's going to start with 100 guests rehearsal dinner on the floor of Madison Square's Infosys Theater. I wouldn't necessarily associate that with a rehearsal dinner venue, but
we're not those people.
Different strokes for different folks. Exactly, Scarlett. And then the actual ceremony is going to be scheduled the next day, 5:30 p.m. on the arena floor. MSG shares though are up more than 50% this year, so that would be, if they keep that up and extend that, that would be a record year since MSGS was spun off from the Madison Square Garden Company in 2020.
Very good. All right. Thank you very much, Christina Aquino. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute auto reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We did get the jobs data today. Came in weaker than expected. Let's check in with an expert on this stuff. Amy Glazer, Senior Vice President at Adecco US. Amy, what was your takeaway from the non-farm payrolls we saw today?
So I think the headline looks quite soft, but the underlying story is really more about selectivity. Employers are still hiring, but they're doing it with more discipline than in the past. It's good to see professional services continue on their trajectory. They've been increasing their kind of the quiet addition to the labor market. So it was great to see them accelerating. And then you will continue to see social assistance, healthcare, ongoing into the near future. So I don't think there's cause for concern. Companies aren't slamming on the brakes. It's more like they're tapping them slightly. They really still need talent, but they're being much more intentional about when and where they add that talent.
And of course, we've seen how the hiring and staffing of the World Cup in the U.S. along the 11 host cities, has juiced job growth in May, but perhaps we're now paying for it in the month of June?
I believe that's partially what we're seeing. We saw gains in April and May as employers and companies hired in advance of what they knew was going to be an exciting season. What we are seeing is that the forecast for additional kind of temp labor specific to restaurants and hospitality sectors supporting the World Cup, they're doing more with less. They're using their existing headcount and haven't added as many seasonal workers as was originally forecasted.
In your mind and talking to your clients, over the next several years, is AI going to be a net job destroyer or creator, do you think?
I think AI is going to end up being net neutral, but really it's changing the way we work more than eliminating it. So jobs in high demand continue to be those that can help make employees more productive. And really we're seeing an uptick in change management, AI adoption roles, things of that nature. So the world of work is going to continue to move at a rapid pace. And the employers and employees that are keeping up with it are going to be the ones that really win the day. Curiosity is now the most #1 skill required moving forward. So to be curious about new automations and technologies and AI and open yourself up to new career paths you may not have thought possible historically.
All right, really appreciate it. Thank you so much. Amy Glazer, Senior Vice President with Adecco, on the latest jobs report for the month of June. We got about half of the increase that we thought we would get, 57,000 for the month of June, compared with a consensus estimate of 113,000. All right, let's turn now to Washington and check in with our senior news editor, tech editor, I should say, Michael Shepard. He does cover tech and the intersection of policy as well, which is where I want to start, Michael, because we now have OpenAI beginning discussions about giving the U.S. government a stake in the company. The proposal, at least initially here from Sam Altman, the CEO, is a 5% stake. This got my attention. Where did this come from? How did this begin?
Well, this got a lot of people's attention, Scarlett, and this idea is not necessarily a new one. The real headline in the report from the Financial Times from overnight was the size of the stake, the 5%. We've previously reported, and other outlets have too, that the AI companies, especially OpenAI, have floated this idea of giving the government a piece of their business, giving them shares to seed what would be a public benefit fund, to redistribute some of the gains from the AI boom and maybe address some of the concerns that all of this newfound wealth and economic dislocation brought by the technology, that could somehow be softened. The blow from the AI rollout could be minimized by sharing the gains a little bit through this vehicle. And the administration has talked about this a little bit. President Donald Trump embraced the idea when asked by our own Anne-Marie Hordern last month on Air Force One, but the president offered no specifics beyond just saying that he had been in talks with some industry officials, and it's unclear whether negotiations are really active or advancing between the government and the company. It seems more right now that this is something the company is really trying to work out ahead of its IPO to come up with what the size of a stake could look like. What they're also envisioning is having other AI labs, such as Anthropic or Google's DeepMind, also offer stakes to the government. Now, whether those companies would share the same enthusiasm that Sam Altman has for it is unclear.
Giving away a 5% stake or selling a 5% stake?
Well, Paul, that is a great question, because we can think back to almost a year ago when the U.S. used the CHIPS Act money that it had set aside for Intel to actually purchase a stake in the chip maker. This would be different. The companies would actually give the stake as seed money for this public benefit fund. Bernie Sanders, the Vermont Independent, has proposed a similar idea. He has called for actually creating this kind of a public benefit fund to be seeded with a 50% tax on the stock of these companies, a one-time tax. All those proceeds would go into this fund to then be redistributed with the American public. Republicans have rejected the idea, and even President Donald Trump, when asked specifically about the Sanders proposal, simply said, I had the idea first. And the size of what Bernie Sanders is asking for is far different from what we're seeing, at least through the Financial Times report, of a 5% stake.
All right, so we'll continue to watch that space to see how things develop there. The other story we wanted to touch on with you, Michael, has to do with Apple looking to buy memory chips from China, which is interesting given that the companies being proposed here are on a blacklist, a Pentagon blacklist of Chinese entities that are believed to have ties to China's military. But Apple kind of always feels like it's in its own category.
Well, it does. And again, this is something else that's another bit of fallout from the AI boom. There is this unprecedented demand for memory to meet the needs of artificial intelligence, and that is putting the squeeze on makers of consumer electronics devices. Apple, of course, most prominently, but also Microsoft. And those companies have had to raise prices across their product lines because of the increased expense for the memory components that they put into the products that they make. Now, what Apple is hoping to do is add to its supply lines when it comes to memory. And right now, they turn to Samsung Electronics and SK Hynix and Micron Technology for their memory needs, but their memory needs right now are insatiable, and those memory providers have been really trying to reorient some of their production lines to meet the AI demand. So what Apple is proposing to do is turn to CXMT and YMTC, two Chinese chip makers that specialize in memory, but that are also on a Pentagon blacklist because the U.S. believes they support China's military. And that really creates a political problem here for Apple. The company doesn't need permission from the government per se, say an export license or import license, to use this technology. Our reporting shows that Apple plans to use the memory it will buy from these two Chinese makers to go into products to be sold into China. So you would think, well, maybe that's not such a big deal. But the question really is, how would it go down here in Washington? And many of the national security hawks, including the head of the House Foreign Relations Committee, yesterday responded to our report saying that, this, from his view, would be a no-go.
Well, that's why Tim Cook has remained at the company in large part to deal with some of these issues with governments. And where is President Trump on this? Because presumably if Tim Cook can get President Trump to sign off, then all is good.
Well, Tim Cook has had that long-standing relationship with the president, who refers to him jokingly and even lovingly as Tim Apple. And this relationship dates all the way back to the president's first term in office. And the question is, though, will there be a counter-lobbying campaign by Micron, which really would not want to see Chinese chip makers perhaps taking some of their potential business away? And earlier this week, it did not go unnoticed that Micron made a $250 million pledge to the Trump Accounts Initiative, the one that also is backed by Dell Computers founder Michael Dell. So we're seeing a lot of lobbying cross currents on this, Paul. And it'll be interesting to see who gets to Trump and what ultimately he will have to say when it comes to giving some political cover to Apple and other device makers that might want this Chinese memory.
A lot of it, so much of it seems to come down to personal chemistry, too, between the president and whoever he's dealing with.
This is going to go down as the golden age of lobbying, because there's so much money being thrown around here by corporations, not just, PACs and things like that. People actually have real money. Michael Shepard, thank you so much. Appreciate it. Michael Shepard, Senior Editor, Technology and Strategic Industries for Bloomberg News. Again, it'll go down as the golden age of lobbying. There's just so much
The golden
cash.
age of something for someone.
Yeah, exactly. So we'll keep an eye on that there. S&P pretty much unched on the day. We got the Dow up 300. That's 0.6%. And the NASDAQ down almost 200 points. That's 0.75%. So no real direction here. John Tucker's been calling out the low volume today, which makes sense because I think everybody's heading to the beach. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow at a record. S&P, NASDAQ, they are both lower right now. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. A slower than anticipated increase in jobs drove most stocks higher. It's a very interesting session right now because, yes, while we do have the S&P 500 index trading lower by 5 points right now, 339 stocks in the S&P 500 index are higher, 163 lower, but bottom line, S&P down 5 now, dropped there of 0.1%, giving up earlier gains on this jobs Thursday. We've got the Dow up 370 now, at a record up 0.7%. The NASDAQ Composite Index down 190, a drop there of 0.7%. The NASDAQ 100 Index down 1.3%. The 10-year at 4.45%, with the 2-year 4.11%, and the 30-year 4.96%. Gold is surging 2.4% to $41.27 the ounce. West Texas Intermediate Crude down 1.3%, 67.68 on WTI. Barrel of Brent 70.68. Brent crude down by 1.2%. Sources tell Bloomberg some leading European powers will accept that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. Among oil majors right now, they are advancing. ExxonMobil up 1.8%, Chevron up by 2%, ConocoPhillips higher right now by 1%. Recapping, S&P 500 index down 6, a drop there of under 0.1%. Dow Industrials holding at a record. Scarlett and Paul, that's a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much for your appreciated Scarlett Fu. And Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in steamy New York. We are streaming live on YouTube and at Bloomberg.com as well. Small cap stocks having their time in the sun. We got the Russell 2000 up, 20, 21%. That's twice the rate of what we're seeing in the S&P 500. So there you go. How long can we expect this? Is that a broadening out of the market? I don't know. Michael Cugino, he's probably got some thoughts here. He's a president and portfolio manager at the Permanent Portfolio family of funds. Michael, are we seeing any kind of broadening out of this marketplace, or is it just kind of everybody jumping into the chip stocks?
Yeah, good morning, guys. Yeah, I think there is a broadening out. You mentioned it with the Russell versus the S&P 500 and the Dow. And even today's trade, although very short term, but most stocks are up. But there are some sectors like the chips that have been, big outperformers during parts of this year that are down today.
I just want to bring up some headlines that have crossed. Jersey Mike's, the sub sandwich store, has filed for an IPO. It's seeking a New York Stock Exchange listing. Of course, we know that Blackstone took it private
15 minutes ago. They took it private, and now they're going to turn around public.
Yeah.
Point Pleasant, New Jersey, founded.
Yes. We always find a way to get New Jersey into the show.
I know.
And so there we go.
People
All
are
right.
sick of it, I'm sure.
So on the heels of that, Michael, I wanted to get your thoughts on IPOs and how there's this rush to get to market right now. SpaceX really put things into overdrive. And of course, we're awaiting Anthropic, we're awaiting OpenAI. No word on when those will come along, but is there still enough demand to meet all these equity issuances coming out?
I think there is, and these are big. These are going to be big IPOs, just like SpaceX was, and so you have a lot of supply of stock coming onto the market. The question would be, to what degree is new money going to buy that stock, or is that going to take away from other sectors, other names?
Like a crowding out.
Buy those shares, and then what happens after that? How long do people hold them? So it is an interesting thing to watch. SpaceX was interesting, although it's very short trading history, but bumped up substantially in the initial few days, and now it's settled down to something more reasonable and potentially maybe even still too expensive, but definitely settled down from the frenzied trading in the first few days. And I think, broadly speaking, some of these companies, and even some of the ones that aren't going public necessarily, They've been private for a while. They're looking for liquidity. They're looking to, return money to investors, the institutional private equity types, the hedge fund types. And this is a market where people are buying stocks. And so it's a good environment to flip the companies to the public markets if you can.
Michael, what screens well for you guys these days, whether it's a sector, industry, factor? How are you guys approaching things?
Well, it's a market that's pretty much continuing to trade on headline risk at the moment. With respect to equities, I mean, there are some opportunities. I think energy in the long term is a very good opportunity, total return opportunity. Some of the techs that have been beaten down, software names, we don't believe that the AI trade is going to kill off software stocks. And so there's been kind of a correction in that segment of tech. But long term, we think the profits and margins and revenue growth are still there. Financials, we think, are still strong. And so I think there are pockets, but the broad market's expensive. We have it at roughly 22 times forward S&P 500 earnings, 4.5%, S&P yield. You're not being compensated that much versus fixed income potentially if you have a sell-off or a correction or a recession. So it is a rich market, but there are opportunities. On the bond side, we're believers in higher for longer rates, inflation sticky. The Fed has commented that they're going to attack that. So maybe rates go a little bit higher from here, although I'm not sure how high the Fed's going to really move from here.
Yeah.
But it does indicate that the shorter term rates are going to be higher for longer versus going down. And so there's a lot of opportunities in that shorter intermediary market. And then we look at gold and silver, 30 to 35% cheaper than it was a few months ago. And the macro story there has not changed at all. It seems to be more of a liquidity trade, maybe seems to be more of a reactionary trade to Warsh's comments on inflation. We think in the long term, gold's going back up. And so, you can get it a heck of a lot cheaper than you could have a few months ago.
All right, good stuff, Michael. Thank you so much for joining us and have a great long weekend. Michael Cugino is president and portfolio manager at Permanent Portfolio Family of Funds, joining us with his outlook for the markets. We mentioned IPOs, we mentioned SpaceX. George Ferguson is one of many of our BI analysts tasked with trying to get some fundamentals around this company because it's kind of a company that covers all these different industries. George is, of course, our senior industry analyst covering aerospace and defense. George, you have this tall task of putting fundamentals to SpaceX when all anyone can remember is the total addressable market being, what was the number?
29 trillion?
29 trillion, 28 trillion, north of 28 trillion, doesn't matter at this point. George, can you give us some sense of what profits will look like for SpaceX once it is sustainably profitable?
Yeah, so look, I mean, I should start by saying SpaceX is a company that's in a lot of flux, right? It's essentially building out, I think the bigger portion of the story is it's building out an AI business. I'm not sure we totally understand what the AI business looks like for anybody. And when they're done, they're going to, I think, put these data centers in space. That's where they're trying to go. So, we're not only a business that's, I think nobody fully understands what it's going to look like when it's done. They're going to go one step further and try to make it extraterrestrial. So we've put together a model, though, in the Bloomberg service. You can find it under BI space AEROG, an interactive model, or you can load the SpaceX ticker and type in MODL for your model. We essentially see a business that we think could go from $19 billion in revenue in 2025 to 160-ish billion revenue in 2030. So a big step. A lot of that is all about AI. And then we kind of see an operating income now. 2025, they reported negative $2.5 billion. We think that could swing to a positive almost $21 billion by 2030. The majority of that continues to be connectivity. That's their satellite business. It's going to be broadband from satellite, some direct to cell. That could be like a $14 to $15 billion operating income business by 2030. But AI is at that point sort of in full swing, building profitability. We could see maybe $6.5 billion contribution from AI in 2030 to that operating profit number. So those are the big moving parts. That space launch business is kind of barely profitable, barely negative kind of business. It's not a big business, but it also doesn't reflect all of its revenues and profits, because any work done for internal SpaceX companies doesn't flow through the revenue statement in the space business and doesn't have a recorded expense because of the way they're going to do the accounting on that. So,
all right, how are they going to finance all this stuff, George?
Yeah. So, I mean, that's, of course, the $1 million, or maybe it's the $1 billion question. We've wired in about $100 billion of debt out to 2030 that ended up raising. Their initial offering here, they refinanced a bridge loan, and it was a $20 billion bridge loan. They just did it in the market last weeks or two. And they came in, they got 25 billion, so they upped it a bit, and they had a rate that was close to 6. So we've kind of wired in a 6% rate for another $100 billion worth of debt. And I mean, that's one of the bigger challenges here, right? If the company isn't producing a lot of EBITDA to support that debt and keep investment grade ratings, you could have a bit of a breakdown in your ability to finance through debt into 2030. I would also note that in the S1, the authorization for shares were quite large compared to the shares that were actually issued. And so, there's room to issue more A shares, which only have 1 voting stake. Elon Musk's B shares, he has a lot of those. Those have 10 votes. So there's room to do a lot more A shares, and they had C shares in that mix as well. So I think you could see some additional equity issuance to continue to fund build out of data centers, designing Starship and other interplanetary transportation devices, things like that.
And Tesla eventually becomes part of SpaceX as well?
That's the rumor we keep hearing. I don't know why they wouldn't have rolled it in initially, to be honest with you. It feels to me like these 3 companies do mesh to a degree, right? Space really gets you your lift you need for that connectivity business. And if you're really moving data centers to space, which, I mean, everybody complains about putting them in their neighborhood nowadays because of, energy draws and such. I could see that being maybe a natural fit if you can find a way for that tech to work. I don't know how Tesla fits in there. I mean, when we saw the S1 for SpaceX, they had the Tesla truck sort of driving around spaceports. I don't know, maybe they're going to drag rockets out to the launch with it or something, but I feel like it doesn't quite fit. I don't know.
All right, George, thanks so much. Appreciate it. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. And again, full, detailed, deep dive research report into SpaceX. You can find it on the Bloomberg Terminal BI Go. You can go to the aerospace dashboard as well, and it includes a detailed financial model modeling out all the revenues, expenses, and profits by segment for this company, including cash flow statements, balance sheets.
Interplanetary travel.
Yes.
That's the part I like.
How do you model that out?
Exactly.
I don't know, but they did it at Bloomberg Intelligence, so go check out the model there. I think it's one of the best on the street on SpaceX. S&P unchanged, the Dow up 375, the NASDAQ down 125 points. This is Bloomberg. Good morning.
breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Back in the green on the S&P 500 index, 360 members of that index higher, 142 lower. But right now we got the S&P higher by 8, 74.91 where we stand. That is a gain of 0.1%. Dow Industrials up 395, looking at a record there, 52,700 on the Dow, a gain now of about 0.7%. NASDAQ, though, does remain in the red. The NASDAQ Composite Index down 0.4%. The NASDAQ 100 Index down 0.9%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, tumbling 3.3%. All of this with the VIX below 17, did dip below 16 today. We've got the 10-year 4.45%, jobs Thursday, the 2-year 4.11%, the 30-year 4.96%. Gold is surging 2.4%. Spot gold right now $41.25 the ounce, while West Texas Intermediate crude down 1.4%, 67.65 a barrel on WTI. Barrel of Brent, by the way, 70.66, down 1.3%. Bitcoin bouncing back, 61,671 now on Bitcoin, up 2.8%. So again, recapping here, we do have the Dow, the S&P, they're both higher. NASDAQ and the NASDAQ 100 index lower. Russell 2000 index of small cap shares down 0.3%. I'm Charlie Pellet, Scarlett and Paul. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, with our Bloomberg Business Flash. Let's talk about geopolitics right now, because the president, when he returned to office, and I believe even the first time that he took office, swore that there would be no more forever wars, that he would get us out of it. And then the war in Iran began, and you can question why the administration went to war, but we are in it. And now we are in the phase where we are talking, and there's concern that we might have entered a world of forever talks, forever negotiations. Let's bring in someone who feels differently about this. Ed Price, he is a non-resident senior fellow at NYU, New York University, based here in New York, and he joins us now in studio. How do you think about this idea that we're in forever talks and, we're just kind of in limbo? The Strait of Hormuz is open when the stock market is open, but when the stock market is closed, there's skirmishes and everything somehow gets resolved by the time markets are open again.
Well, I think that's an accurate description of the situation. Whether or not that's a problem is another matter. And I would put to you guys that we are seeing one of the clearest, darndest examples of groupthink that I can remember when it comes to commentary around the war in Iran. And I say that because it seems like pretty much everybody is complaining. Everybody says that there's something terribly wrong about this war, on left and right. Foreign Policy magazine said that it's a bigger defeat than Vietnam. National Review, which is right-leaning, said that it was an outright loss. But this is very much like, subprime before the crisis or the end of history, or any number of these moments where we say, oh, the euro is definitely going to fail and Greece will definitely leave. So whether or not I have a different view is basically irrelevant. I'm just reminding other people to check their own thinking.
What is an alternative view there that maybe this isn't such a mistake?
Well, I think there's two things that have happened with this war that are good. One is a discovery process, in the sense that we now know that Russia and Iran are far weaker than we previously thought. If you guys had me on in 2020 and said, Ed, what do you think? How strong is Russia? How strong is Iran? Whatever I said, it would have been stronger than they have actually revealed themselves to be today. And that is priceless strategic information. And I think the other thing is movement. We are doing something, anything, instead of sitting around and being cooked. While we're discussing on air,
sit around being cooked.
Well, while you guys very kindly have me on, and we discuss the chances of World War III, and thankfully we do this every quarter or so because it isn't here, right? But the autocracies are fighting it. They're already fighting World War III in the shadows. They're using this hybrid warfare method. It's cyber. It's to some degree financial, it's terror networks, and so on. And so, to President Trump's credit, he has done something, anything, rather than sit still.
But has he made it better?
It doesn't matter. It doesn't matter if he's made it worse or better in the short term. We're fighting. That's what you do in an ambush. You start to fight. So it might be that some people are going to lose their shirts in the energy markets. Maybe I shouldn't say this on your show, but I don't care. I really don't.
You're not in the markets.
I'm not in the markets. I'm a citizen, and I want to be safe, and I don't want us to measure our security in the price of oil. So the fact that we are striking back against the Russo-Iranian axis in the way that we are, the fact that Ukraine is now taking the fight to Russia, which I think is directly relevant to the way that the war in Iran is going. These are fundamentally good things, and I'm puzzled as to why people don't welcome them.
Maybe the assumption that no need to send our troops or our assets anywhere where there isn't a clear and present danger to the United States. We learned that one doctrine once again in Vietnam. Does that not apply? A, is that not a good doctrine? And if it is a good doctrine, does it apply here?
Well, what we learned in the Vietnam War is that if we fight with one or both hands tied behind our backs because of our Judeo-Christian values, we will lose. So if we're not willing to go all out the way we did in the Second World War, yes, we should steer clear. But again, and I say this as someone who you know very well can't stand the sight of President Trump, so there are my credentials. Full credit to the man. He's decided to use hard power in response to what is a slow strangulation. And it's too early, Scarlett, you're right, to say whether this was a clear up or down in the overall strategic balance of power, but we're moving.
And it could take a long time for us to determine that. So if you are kind of on the sidelines of this, I'm thinking China, what are you making of this current situation?
Well, I think China is, I always say this, they're a completely different kettle of fish. As bellicose as I am about Venezuela and Iran, as cautious as I am about China. The good thing is that whatever the plans China is cooking up for, I don't know, anything from world domination to taking Taiwan, those plans have had to change, right? Because they've seen that the United States will act. Now, I will grant you we've acted as a delinquent, right? Like we look crazy, but there's value to that. And where previously President Nixon pretended to be a mad dog, President Trump actually is, right? The best thing about this is that when Trump is gone in a couple of years, I mean, fingers crossed in a couple of years when his second official term runs out, people will say, oh, well, that was Trump, that wasn't us. And we'll have basically got away with these military actions around the world in a way that doesn't necessarily stick to the Republic and to the United States itself.
Are you surprised at all that the lack of a role for the European Union, the UK, in all that's going on in the world here? It just, they seem to be, maybe by their own volition, sitting on the sidelines.
We mentioned this last time. I think the First World War and the Second World War exhausted Europe. I think it just knocked them out of the following century, right, of any sort of military aspirations. That's changing. When the Germans rearm, we're going to have a completely different balance of power. So again, look, I look at the situation. I don't welcome war. I don't think it's a good thing per se morally. But thank God that the West is moving. Thank God Russia's on the back foot. Thank God Iran is on the back foot. And thank God that Germany is rearming. I mean, these are things that if they weren't happening, we would be having very different conversations.
And you clearly dislike groupthink and see a lot of peril in it. Where else is groupthink? Where else is an example of pushing back against groupthink and is doing well with it?
Well, this is, I mean, right now it's hard to find. H.R. McMaster, the patron saint of American military strategy, is a great guy. He's actually come out and said, hold on a second, there are some good aspects to us fighting in Venezuela and fighting in Iran. But there's a lot of groupthink going on in the markets right now. I mean, this AI thing, for example, ironically, a lot of AI is itself groupthink. It will tell you what the center of the distribution thinks. It will give you the aggregate. So my concern as an analyst, secondarily, is to tell you what I think, right? Because that's an opinion. But primarily, I always try and remind people that if you have a solid, strong idea in your head and you're trading on it, just pause for a second and think about it, because history is replete with examples of people getting that wrong.
All right, very good. Ed, thank you so much for joining us. Appreciate it. As always, Edward Price, non-resident senior fellow at NYU here. I'm just looking at some of the headlines coming out. Europe braces for more heat as hydropower strained. Ooh, that's going to be brutal. At least we have AC over here. All right, coming up, we're going to check in with Jess Hicks, Bloomberg NEF Europe weather analyst. We'll get the latest over there. Last I recalled, when I lived there, not real good on the air conditioning over there.
I don't think it's changed.
It's gotten a little bit better. And here for the New York City subway, which I'm about to go into in 11 minutes, the only thing that's changed since 1978, when I started coming into the city all the time, air conditioning. That's it. It's
Not
the
on
same
the platforms, though. Not on the platforms.
No, not on the platforms. But the same crazy people, same grit and dirt and all that kind of stuff.
Same no making eye contact with anyone on the train.
Exactly. So the only thing's changed in the MTA is it's now air conditioning, and that's a good thing. So we'll see about that. S&P down 7 points. The Dow up 350. The NASDAQ down 170. WTI crude oil. Hey, we got a 67 handle. We're down $1 here on WTI crude oil. More coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Jess, we got Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. For people that live in this part of the world, we say, hey, one of the advantages is we got change of seasons, and that's an advantage. Well, here's part of the summer season. You get these crazy heat waves. So we're used to this stuff, but our good friends over in Europe, not so much, and they've been getting brutal hit with heat waves this summer. And we want to get the latest on what's going on over in the UK and Europe. We're joined by Jess Hicks, European weather analyst at Bloomberg NEF. Jess, this feels like it's a hotter than usual beginning to the summer season over in Europe. Put it into context for us.
It really is. I mean, I've lived over here since 2017. This is the most brutal heat wave I've experienced. We've had 2 heat waves so far, one at the back end of May and one now at the back end of June. And just to put that into context, I mean, here in London, we saw temperatures above 10 degrees over the average. And even in Switzerland, temperatures almost reached 40 degrees. And equivalent to Fahrenheit, that's above 100 degrees. Wow. So, I mean, the infrastructure over here can't handle it.
So you mentioned infrastructure here in the U.S. Pretty much everything's air conditioned, and I mean, you know, so we're in pretty decent shape. Talk to us about just the infrastructure, maybe like the power grid. I mean, what percentage of, I don't know, Paris or and France or Germany or England is air conditioned?
I can't speak on the percentage, but I know that Europe can't handle the heat as well as the U.S. can. The air conditioning uptick over here is increasing as we're experiencing more intense heat waves, but I can talk on power demand. And I mean, in France, that was a hot spot for the recent heat wave. I think Paris saw maximum temperatures over 40 degrees Celsius. And that's when they had a peak of 52 gigawatts for their power demand. And that's 10 gigawatts over the average. I mean, these heat waves, the grid can't handle it. And so you have to find other sources to meet that demand. And right now we're seeing massive impacts on nuclear in France, as well as things like wind speeds when these heat wave events happen.
So in Europe, broadly defined, higher use, I believe, of non-fossil fuels, solar, wind, that type of thing. Broadly defined, how is that kind of coping with what's going on?
Well, right now, because of the heat, it's increasing river temperatures. And if you have something like a nuclear plant on a river that uses that water for cooling, sometimes when river temperatures increase, you have to curtail or stop nuclear production because the cooling water used can't be output into the natural environment. There are environmental regulations against that. And so when you have increased demand for cooling across Europe, and you don't have as much nuclear to support that, wind speeds are low, so wind generation is low. You have to rely on other sources like coal, gas, and hopefully solar. And luckily, when you do have a heat wave, you do have an increase in solar, and there has been record solar production across Europe, which has helped, but isn't overtaking power demand to cut back fossil fuels.
And just broad, I mean, so we're still seeing investments in all types of energy in Europe. Where is the money going?
I mean, it depends on the country. Different countries have different incentives, and this is something that I've been researching as a weather analyst over here. Some investments are going towards wind farms. I mean, Germany, for example, is a massive market for wind generation. But because of these events, these heat waves, heat domes, what happens is they're persistent. They last not just a couple days, but up to a couple weeks. And so when you have more of these events happening each summer, you, at the end of the year, lose generation from these wind or solar or hydro projects. And so for example, with wind generation, investors might take a look at what's happening in Central Europe and try and understand, okay, well, where are the winds blowing more? And that could be the Nordics, it could be Eastern Europe. And so investors have to pick and choose now where they're going to think about these investments.
All right, Jess, thanks so much. Appreciate it. Jess Hicks, European weather analyst at Bloomberg NEF, based over there in London. And again, they're in the midst of their second heat wave of the summer here in the eastern part of the U.S. This is really kind of our first broad swath of heat wave. And I think ours is going to last, what we heard from Rob Carolan earlier, Bloomberg meteorologist, maybe into the very early part of next week, but certainly through the weekend here. So everybody stay safe out there. Looking at the markets here, finishing up the morning trading session, not a lot of direction out there. We got the S&P down 9 points. The Dow's up 380 points. That's 0.75%. So the Dow's doing well. Thank you to some of the tech names that are in there probably. NASDAQ down 180. That's 0.7%. And the NASDAQ 100, which is really the tech part of the NASDAQ, down 1.3%. The VIX is a little bit higher here, but still below 17. So quiescent volatility index there for the equity markets. 10-year Treasury yields come in a couple of basis points, 4.45%. WTI crude oil, it's off 90 cents. It's about 1.3%. So we're below $68 a barrel for WTI crude, continuing to trend lower. Brent, a couple bucks higher, sitting right at $70. We'll keep an eye on that. That does it for Bloomberg Intelligence this morning. More Bloomberg coming up. This is Bloomberg Good Morning.
From ABC News, I'm Michelle Franzen. A dangerous heat dome locked over much of the country. In Washington, D.C., Asa Watson says just being out for a short time was a challenge.
Ridiculous. When I got in the car, it felt like I almost burned myself. Like, it was bad.
More than 180 million Americans facing heat alerts heading into the 4th of July holiday weekend. ABC's Rhiannon Alley is at New York's Rockaway Beach.
That scorching heat dome smothering 30 states is expected to hit its peak today, straining the nation's power grid.
I'm just not going to leave my apartment. It's getting hotter and hotter.
Several major cities declaring emergencies as temperatures soar into the 100s.
The holiday getaway here also, and travelers, whether driving or flying, could be impacted by the extreme heat. AAA says more than 72 million Americans will travel this holiday period. Today will be the busiest at airports. Russia launched a major attack across Ukraine's capital. Reports that at least 21 people were killed in Kyiv in the drone strikes. ABC's Marcus Moore has details.
Ukrainian officials said that there were 20 different strike sites across the city. So this was clearly a significant and prolonged attack. Families moved underground for safety. As we've seen before, people took shelter in the city's subway stations.
A 9-story apartment building partially collapsed, and rescue crews are looking for survivors. It's getting a little tougher for Americans to find a job. ABC's Jim Ryan has the numbers.
After a month that saw non-farm payroll employment increase by 172,000, the figure from June fell to 57,000 new positions, many of them in professional services and healthcare. Still, the unemployment rate, according to the Bureau of Labor Statistics, fell slightly to 4.2% last month.
The two daredevils who scaled the Empire State Building yesterday, appearing before a Manhattan judge, Angelina Nicolau and Ivan Kuznetsov, were put on supervised release until their August court date for carrying out the stunt. You're listening to ABC News.
push from Washington to ban an illicit substance sold at deli counters, convenience stores, and vape shops across the country. ABC's Andrea Fujii has more.
It's called 7-OH, a stimulant that can boost energy. Products can be in pill form, tea, or treats like ice cream and fruit-flavored gummies. The DEA now wants to classify it as a Schedule 1 drug, the same as heroin and LSD. 7-OH is a psychoactive substance with opioid-like effects derived from the naturally occurring kratom plant.
7-OH overdose can look very similar to an opioid overdose. CDC officials urging Americans to take precautions to reduce the risk of mosquito bites. They say the West Nile virus is spreading faster and earlier than usual. Officials are seeing the highest number of cases at this point in the season since 2004. A big change is coming in the video game world from Sony.
For more than 30 years, video gamers with PlayStations have been carefully taking care of those game discs. But soon there won't be any discs at all. Sony now says come January of 2028, it won't be releasing any more games on physical discs. Video game giant Rockstar beating Sony to the punch, announcing the highly anticipated Grand Theft Auto 6 will only be sold as a download. Dave Packer, ABC News.
Many users say they like collecting copies of their games and are not happy with the changes. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's the big chill in the job market. Welcome to the Heat Dome edition of Balance of Power as triple-digit temps grip the Amtrak corridor on this jobs day, one earlier than usual, bringing far fewer positions than expected in June. Half the consensus? We'll find out what happened when we spend some time with Stuart Paul at Bloomberg Economics. Democrats raised big bucks in the 24 hours following the Supreme Court ruling this week on political spending. Will it make the difference? We'll talk midterm politics. A very interesting week on the trail with our political panel, Rick Davis and Matt Robeson. We'll talk markets later this hour with Christine Aquino, and we actually start right now with Wall Street. The Thursday trade, last one of the week. We're closed tomorrow. And Charlie Pellet has the latest from World Headquarters in New York. Charlie, how are you doing?
Thank you very much. Right now, we do have the S&P 500 index back in the red. Jobs Thursday. Yes, it has been a choppy session. Interesting the day, though, for the S&P. Should point out that while we are lower by 12 right now, down 0.2%, we have got the S&P, the majority of stocks in that index are trading higher. Right now, 356 S&P 500 members higher, 146 lower. Bottom line, though, the S&P is down 13, drop there of 0.2%. Dow Industrials at a record, ripping higher by 381 points, up 0.7%. Tech's getting hit today with the NASDAQ 100 index down 1.5%, the NASDAQ Composite Index down 0.9%, and the Russell 2000 index of small cap shares down 0.6%. All of this with the VIX below 17, a 10-year at 4.46%, the 2-year 4.12%, and the 30-year 4.97%. Gold up 2.3%, $41.24 the ounce, while West Texas Intermediate crude down 1%, $67.87 a barrel on WTI. For Bitcoin, a drop, a gain of 2.5%. Bitcoin now at 61,538. Jobs Thursday, as I mentioned, and hiring slowed sharply in June, even as the unemployment rate fell to 4.2%. Non-farm payrolls increased 57,000 last month after downward revisions the prior 2 months. Reaction to the report from Rick Reeder, Chief Investment Officer for Fixed Income at BlackRock.
It's stable, it's okay, but you've got an economy that's growing at some pretty significant numbers, and the employment picture is just okay. I just don't think we are hiring that many people.
Rick Reeder of BlackRock interviewed on surveillance. Recapping, West Texas Intermediate crude down 1% right now. WTI $67.91 a barrel, but oil majors are advancing. ExxonMobil up 0.5, Chevron up 1.4%, and right now we have got shares of ConocoPhillips up 0.6%. S&P down 16, drop there of 0.2%, but important to point out that most S&P stocks are higher. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie Pellet, I hope you're keeping it cool, sir. It's, God, what do we have? 96 degrees here in the nation's capital. That's the mercury. It feels like 105 right now. And I'm guessing it's no different in New York. The whole Amtrak corridor is like the surface of the sun today. Pretty cool, though, I'll tell you what. It's not stopping the festivities here in Washington. I was just out in front of the building. The Thunderbirds just got to town. Did you see this, James? They're flying the F-16 over the mall right now, getting the whole turnaround situation, mapping the route for this, what we're told is going to be an historic air show tomorrow. Massive, all day long. Starts 1 in the afternoon and goes till 11 o'clock at night. The Thunderbirds are in town. The Blue Angels are in town. It's going to be all kinds of military hardware flying around. But, I mean, are we standing out there in 105 degrees to watch this on Saturday? I dare say yes. The fireworks are a whole other issue. You know, they're going to set a record on the fireworks, too, and they start at like 11 o'clock at night. It's a big story around here. People are, like, sheltering their dogs and packing away the kids because it's going to be so scary and late. Then you've got the pollution problem, and this is something that is a story in town as well today that we'll be talking about. Apparently, we're going to have like an air quality emergency by the time the Guinness people write this all in the book. So, hey, welcome to what feels like the Friday edition. It's Thursday. Well, it's really Little Friday, I guess, in this case, because markets are closed tomorrow, and we've got a 3-day doozy of a weekend to celebrate America's 250th. Whether we're celebrating the job market is another matter, which is something we'll be exploring throughout the program here on Bloomberg Radio, on satellite radio channel 121, and on YouTube, where you can always find us by searching Bloomberg Business News Live. Eugene got the roof cam? Can we show that? Are they gone now? Man, all right, look, don't fool around. Eugene, if you get fighter jets flying over the building, just show them. Don't ask me. I bet you there's more where that came from. Blue Angels need to do the same thing, right? We'll have more on all of the festivities and the heat dome, by the way. It's a business story. You know, when we're talking, in this case, to Lauren Rosenthal, you know there's a problem. We actually have forecasters here at Bloomberg. It's part of the financial analysis the companies make their decisions on, whether you're covering commodities, the crop forecast, in this case, what the utilities are going to be going through, the biggest stress on the grid in New York since 2013. My God, you don't want to lose the power right now. We'll be all sleeping on a bed of ice this evening. The big chill, though, as I mentioned, comes from the jobs market. With hiring slowing sharply in June, giving us a number that looked like a misprint this morning. Non-farm payrolls, 57,000? Did you see the consensus was 113,000? So everyone's going to say this, that was half the estimate. But Bloomberg Intelligence was at 200,000. So are we in a job market that's cresting? Do we have bad data? I thought we were building data centers all over the country here, and manufacturing construction looks pretty flat. We've heard so much about airlines, hotels. There's no room at the inn. People have so much money they can't put enough first-class seats in the plane. But hospitality is a point of weakness. This is why we have Stuart Paul at times like these to help make sense of it. He's the U.S. economist at Bloomberg Economics, and you can't do a lot better than that. With us from New York, Stuart, it's great to see you. How do you rationalize this number? How could we have been so far off?
I think there were really two factors that played into our miss, at least. As you mentioned, we had the high number here, expecting about 200,000. We thought that we were going to get a lot of tailwinds from government hiring that just didn't materialize. We typically see some state and local hiring to work on construction projects during the summer, and it just did not materialize. As you mentioned, the other major item that exerted drag in the June jobs report was leisure and hospitality. Now, you would expect that with the World Cup and other activities, including July 4th celebrations, 250th anniversary, that there would be some additional preparations made during the month of June. One thing I'll say, though, is that leisure and hospitality in particular can be a little bit difficult to estimate, in part because of the seasonal factors and the seasonality that goes into it. So if you end up having some residual seasonality and you don't have quite enough non-seasonally adjusted hiring during the month to compensate for what's already accounted for by the seasonal factor, not to get too technical and boring, in the middle of a very hot Thursday. But if you don't have enough non-seasonally adjusted hiring in that one particular industry, you could end up having a little bit of a mark down and a little bit of drag. Yeah. Now, here's what I'll say, Joe. I mean, we're talking about a slowdown of the pace of hiring. 57,000 jobs added during the month is still pretty solid. It's above most estimates of the pace of hiring needed to keep a lid on the unemployment rate. And so even though we didn't see a print that's in line with consensus or even in line with what we've seen over the last few months, it's still a strong enough hiring pace to suggest the labor market is stable and the Fed can stay laser focused on inflation for now.
Okay. Well, I'll tell you what, Kevin Hassett delivered that very same message when he joined us on the air earlier today on Bloomberg. The president's chief economic advisor said this from the North Lawn. Listen.
But I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3% and that we're going to have a better second half of the year as those factories turn on the lights.
Okay. With that said, there are questions about the participation rate, and I'm wondering how you rationalize this, Stuart. Participation dropping to 61.5%, lowest level in more than 5 years. Prime age workers, 25 to 54, matching the lowest level since 2023, when we were all asking, coming out of COVID, when are people going back to work? Is this an indicator of weakness to come, or is this a seasonal factor?
Well, I think that this is frustration about especially new job market entrants or potential entrants, young workers' prospects for gaining employment. If you look at survey data, a lot of folks are very frustrated about their prospects for finding new jobs at higher wages. The quits rate is especially low. Folks are holding on to the jobs that they have pretty dearly. And and as you mentioned, there was a major decline in the labor force participation rate. About 2/3 of the folks that exited the labor force were not retiring. They were not leaving jobs. They were leaving the ranks of the unemployed. These are folks who were looking for a job who are no longer looking for a job. And I think that there is some frustration among those who were unemployed, who are now no longer in the labor force, that just there is not enough demand for the skills that they have. I think that it speaks to a larger problem, one that's not cyclical, but one that is structural, and that is that there is pretty material skill mismatch in the workforce. If you look at the monthly data, the real engine of hiring has been education and healthcare and social assistance. We need nurses, we need home health aides, we need folks that can teach the next generation of students the skills that they need to gain 21st century jobs. Instead, we have a lot of folks who are unprepared to fill those roles. So when you look at where the job openings are and you look at where the current supply of workers is in terms of their ability to fill those jobs, there's just a mismatch. So I'm not entirely surprised to see labor market exits. And to your point, when you see labor market exits like this, it does take a little bit of shine off the monthly decline in the unemployment rate, because it's not folks that are going from being unemployed to being employed. They're going from being unemployed to sitting at home and no longer looking for work.
You got to be looking. Just a minute left, right. Stuart. Could you imagine an interest rate hike in this environment? Is that still possible this year?
I think so. I think the risk is still skewed towards a hike. Now, just to be clear, I expect the Fed to stay on a hold throughout the rest of this year. If you look at aggregate labor income growth, so that's taking account of both wages and hours worked and the number of people in the workforce, you have aggregate labor income growth of nearly 5%. And that's more than enough to sustain even 3% inflation, let alone the Fed's lower 2% inflation target. So I think that even despite the miss in today's headline jobs number, the labor market is still healthy enough for risk to be skewed towards a hike.
Wow. All right, Stuart. Delighted we could spend some time. Try to stay cool. You've got 97 degrees up there. We're only at 96. We're doing pretty good on the humidity department, though. Look at the haze in D.C. It looks like there's a brush fire around here. We'll get into the markets more with Christina Kino next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher. The S&P 500 index is lower. However, most stocks in that index are advancing. NASDAQ and the NASDAQ 100 index both trading in the red. A slower than anticipated increase in jobs drove most stocks higher as short-dated bond yields fell on bets that the Fed won't be forced to raise rates anytime soon. 10-year right now is at 4.46% with a 2-year 4.12%. As for the equity market, S&P 500 index down 19. That is a drop of 0.2%. The Dow at a record up 350 now, up 0.7%, while NASDAQ is down 248 for the NASDAQ Composite Index, a drop there of 1%. The Bloomberg Mag 7 Index down 1.1%. Also today, we are checking out spot gold. It is up by 2.2%, $41.22 the ounce, and West West Texas Intermediate crude down 0.6%, 68.16 for a barrel of WTI. Barrel of Brent crude 71.18. Brent crude down now by about 0.5%. Some of the other stories that we're following for you at this hour: Palantir Technology shares are advancing, up by 3%. D.A. Davidson raised its recommendation to buy from neutral. Meanwhile, Meta Platforms is developing plans for a cloud infrastructure business that will sell access to AI computing power and models. Meta Platforms down today, part of a broader tech sell-off, but Meta down by 4.3%. IPO news: EG's gas station firm Cumberland Farms is filing for a U.S. IPO, and Jersey Mike Subs also filing for an IPO, seeking a New York Stock Exchange listing. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
I'll take a Jersey Mike's right now at the lunch hour here in Washington. It's hot and we're hungry. Charlie will have more coming up in about 20 minutes' time as we watch the markets here. Last trading session of the week for stocks, at least here, because we're celebrating the 4th of July this weekend, and we're going to get to that in a little bit here with what we have in store in the weather department. Might actually scare you as we all hunker down somewhere. And I can tell you this windowless studio might be the most perfect place right now in Washington. Want to stick with the markets, though. What the heck is going on here? We had a pretty nice start, then the whole thing kind of flipped over and the broad market is lower. As you just heard from Charlie, the S&P down 21, the NASDAQ is down 261. Look no further than chips. It's a rout. Micron's below $1,000. That was fast. We talk about taking the elevator down. My God, we're down another $52 today, 5%, 980. This thing was well clear above $1,200 a couple of days ago. NVIDIA's lower too, feeling the pain, down 2%. This is the unwind, we're told, of the AI trade. As we kick off the second half of the year, we're told that the big rotation is happening again. The big wheel in the sky is a-turning. But every time we're told that, about 2 or 3 days later, there's a huge rally in AI stocks in the Mag 7. So we've been burned before here. Then again, small caps have been on a tear. The Russell has been touching records, outpacing the S&P 500. When the S&P 500 is not able to keep up with the S&P 600, you start wondering what's going on. And after the jobs report today, we'll look at interest rates. You've got a 10-year that's actually lower, 4.47, because now I guess we're not going to hike rates this year, according to the market. Not so fast, according to Stuart Paul. You've got a 2-year at 4.12, down 5 basis points. And strangely, there's a bid under Bitcoin. I don't understand what's going on, but that's why Christine Aquino works at Bloomberg. The managing editor for our Markets Live coverage is with us right now from World Headquarters in New York. Hey, Christine, I basically ask you the same questions every time I see you here. And I'll start with the big one at the moment. Is the rotation real?
Well, Joe, that has been the theme heading into the end of the first half here in markets, and it very much still the theme today. I mean, you've described it. It's all about chips, kind of taking a leg lower, and investors souring a little bit on the AI trade. But if you look at market internals, it looks pretty healthy. I mean, just looking at the S&P 500 at the moment, more than 60% of that index is in the green at the moment. A bunch of them are above their moving averages. A bunch of them are above their 52-week highs. And so, underneath the surface of index declines, it is still a pretty healthy market. Perhaps just a little bit of a shift to some of these old economy stocks, if you will, from the flashy AI stocks that have really gotten a lot of attention over the last few months.
Can't seem to get enough healthcare, pharma right now. Look at Lilly above 1,200, J&J. J&J is hitting an all-time high as people can't sell Micron fast enough. The mentality here is interesting. Although, look, the Mag 7's doing pretty well, too. This is really focused on semiconductors, Christine, and those stocks that have gone parabolic toward the end of the first half. Is that right?
Absolutely, Joe. I mean, those stocks have been really, really hot when the going was good, and now that the going is not so good, they're the ones really to see that big deflation. I think one feature of this current market that we're seeing that is maybe quite unique from different bouts of selling earlier in the year is the fact that leverage in the market has really grown, particularly in the ETF space. There are a lot of retail investors piling onto those leverage ETFs, and what happens in that sort of instance is the declines that would have been maybe milder than anticipated end up being much, much bigger because you have a bunch of this leverage cohort exacerbating those moves. And that's likely what we're seeing now is, you know, it would have been a de-risking, very simple rebalancing at month end, but it's turned into something much bigger because of this leverage in the market.
Well, really interesting. You start wondering, you know, if I sold in May and went away, if that would have been a good move. And obviously, I would have missed a lot here because, to your point, we've got a lot of stocks literally hitting all-time highs. What's ahead, though? We're going into the dog days of summer here. I know July is historically actually pretty decent for the markets, but are we going to get into that low-volume, traders on the beach, check back after Labor Day kind of market?
Yeah, it really is starting to feel like that, Joe. But, you know, the danger with that sort of environment is it's not going to take much to move a stock, right? I mean, we could get maybe another report on the labor market that's less than stellar. And then, again, what would have been a mild downturn could end up being a much bigger move because not a lot of volume in the markets equals a lot of volatility. And that's potentially the sort of environment that we're about to enter in the summer months. So there's not going to be a lot of rest for us markets reporters and editors.
Well, there never is. You know that. Christine, it's great to see you. I hope you have a great 4th of July, and thanks for always being good to us. The managing editor, Bloomberg Markets Live, Christine Aquino, as we walk into this long weekend. Markets, again, will be closed tomorrow, so maybe Christine gets at least a day of relief before we come crashing back into this whole thing on Monday. I wonder how many people get down to the mall. We've been looking at it. It's a big, wide-open green field that at one point they thought would be teeming with people lined up for fair food and activities. I guess the Ferris wheel has had a line, but with 97 degrees now, I'm not sure that's going to be the case today. I do wonder what the heck is going on there. If you're with us on YouTube, there's the view. So like each state gets a booth, right? And the food gets its own booth as well, generating the headline of the Washington Post. Every food stall is a mystery at the Great American State Fair. When you walk around, they've got these big signs that just say food in all caps, as if looking to attract motorists on a lonely stretch of highway. So these hungry, sunburned families head in. Maybe they've just come from the rodeo we're looking at right now on YouTube. To find something to eat, all it says is food. So it's hard to tell what you're in for here. You might walk inside a food pavilion, I read, to find a Hibachi Express serving orange chicken and inexplicably a personal pepperoni pizza. One of they actually reviewed the food for better and worse. The bacon, egg, and cheese foot-long pretzel roll. Don't go near it. Imagine eating that today as we work our way up to 100 degrees. So look, I'm joking around here a little bit. This is all real reporting, by the way, but there's a concern that people are going to be dropping on the mall. The president's going to talk for 2 hours, he says, up by the Washington Monument. We're waiting for the fireworks. People could be dropping because you can't bring the cooler. You can't even bring a chair. And this is going to be big-time stress on the grid here, keeping us all cool in climate-controlled rooms like the one I'm in. Lauren Rosenthal works overtime at times like these. She's a weather reporter for Bloomberg News, and we've been through this before. Bloomberg has its own weather reporters, just like major corporations do, and sometimes corporations are using the terminal to base decisions on when it comes to shipping, when it comes to seeding, when it comes to harvest. And that's what Lauren is here for. It's great to see you, Lauren Rosenthal. Thanks for joining us. This is kind of the Amtrak corridor, or is it the whole East Coast we're talking about?
And this is the eastern two-thirds of the United States. We have more than 140 million people under extreme heat warnings, and dozens of records across a really large swath of the country could fall in the next few days.
This could be record stress on the grid. I was reading this morning on the terminal in New York, the biggest stress since 2013. What are utilities in for here?
Utilities are already asking customers to take it easy with air conditioning, set their thermostats higher to 78 degrees, which is a little bit steamy, just to sort of alleviate some of that pressure. The Alliance for Times Square is talking about dimming the lights to also take some pressure off the grid. So every little bit helps, seems to be the message from utilities, and will also help customers avoid higher bills down the road if they can ramp down their usage now.
Does anyone ever do that? It's like when they tell you not to water your lawn when there's a drought and everybody's out there with the sprinklers on. Like, are people lowering their shades right now? Is that a reasonable ask for Americans?
Oh, it's up to you how much you can handle when your bill comes due. But I do think that, people are trying not to mess around with this. Intense heat like this is pretty dangerous. If you're working outside or planning on spending a lot of time outdoors for holiday festivities or camping, you do need to be careful.
Producer James reminds, we did not fight a revolution to set the AC at 78, okay? This is the United States of America. Lauren, forgive me, I fool around sometimes. The president, he's going to be air-conditioned outdoors this weekend, right? You think he's going to sit out there for 2.5 hours in this heat? He's going to be sitting on a massive Carrier air conditioner. Are you kidding?
It's going to be very steamy in Washington, D.C. Some of the most intense heat is settling over the mid-Atlantic, and that humidity that's built in over the last few days is going to make it feel even hotter. We could be looking at up to 115 degrees in some places.
Wow. That's like the mercury, not the heat index, right? Real temp?
No, that is the heat index. The air temperature will be a little bit cooler, but still over 100 degrees in major American cities, including Washington.
All right. I want to apologize for this whole conversation, Lauren. You're a great professional, and I appreciate your humoring us with information. Bloomberg News weather reporter Lauren Rosenthal. This is a big deal for Lauren, and it's really hot outside, and it'll be a big deal for you when you go outside as well. Interesting, when we consider the food down on the mall, our friend Stuart Paul, who we started the show with, letting us know, inflation for hot dogs. Maybe you do want the bacon, egg, and cheese on the pretzel roll. Inflation for hot dogs in the CPI, 7.7%. You better pass on the half smoke and get the skinny wiener. I'm Joe Matthew in Washington. We'll assemble our political panel next as we heat our way into a long weekend here for the markets and for America. America 250. The Thunderbirds are in town. Stay with us for more on Balance of Power on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow continues to push higher, looking at a record, but the S&P, NASDAQ 100 index, all trading lower. We got chip makers sinking right now. The S&P is down 29, down 0.4%. Yes, the index as a whole is lower. However, the S&P 500 index, we are looking at 335 stocks in the index higher, 168 lower. So bottom line, most stocks higher. Again, though, the S&P is down 0.4%. The Dow, as I mentioned, at a record up 0.6%. NASDAQ down 1.1%. With the NASDAQ 100 index down 1.8%. The Bloomberg Mag 7 index down 1.2%, and the SOX hit hard today. The Philadelphia Stock Exchange Semiconductor Index down now by 5.6%. Jobs Thursday, the 10-year 4.47%, with the 2-year 4.12%. Gold up $82 the ounce to $41.12, up by 2%. And West Texas Intermediate Crude 68.03 a barrel on WTI, down now by 0.8%. Hiring did slow sharply in June, even as the unemployment rate fell to 4.2%. Non-farm payrolls increased 57,000 last month after downward revisions to the prior 2 months. Administration reaction from Kevin Hassett, the top White House economic advisor. Kevin Hassett, we'll get to Kevin Hassett a little later on balance of power. Meanwhile, the S&P 500 index down 25, dropped there of 0.1%. Again, to underscore, most stocks in that index are higher, up 335. We've got the S&P down 168 in terms of the breakdown as we look below the surface there. Again, the 10-year. Right now, 4.47%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. Charlie will be back with a lot more at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program and keep tabs on this final trading session of the week, because we're all winding up for the big party this weekend. America 250 or Freedom 250. That's a whole story all on its own. You can barely breathe outside right now. It's 97 degrees where Charlie is. We've got the heat dome across the Amtrak corridor in New York. Yes, 97 here in D.C. We just matched you with 97 degrees on our way to triple digits. 101 is about what we expect here, according to what Lauren told us. It's going to feel like, 115 or something like that. Add 40 minutes of fireworks, and then what will we have is the question that, we're about to answer on Saturday night. You know, they're going for a Guinness record here, biggest fireworks display ever. And it turns out the National Park Service is a little bit worried about the quality of air. This is fronted in the Washington Post today. Remembering, it's going to start around 11 o'clock at night. It's going to carry on. Maybe it'll, midnight or something, because the president's going to be speaking for quite some time, as he has promised, maybe the longest one yet. And so we learn, according to documents obtained by the Post, internal National Park Service documents, the combustion from this display is going to create so much smoke and stuff in the air that the expert they talked to here from New York University, George Thurston, says an N95 mask would be a good idea. That'll be comfy, right, in 100 and something degrees? He says people should use the precautionary principle to minimize exposure, knowing that fireworks cause significant pollution with fine particulate matter known as PM 2.5. You may not have heard about this. I certainly hadn't. These small particles penetrate deep into the heart and lungs, causing irritation, and in some cases, asthma attacks and other illnesses. So this is going to be a ripper. And it all starts at 11 o'clock at night. The whole air show is before that. If you weren't with us, the Thunderbirds were flying around town. We're pulling out the stops, man. Gas up the jets. Light the afterburner. That seems to be the mentality at the moment, by the way, at the Progressive Change Campaign Committee. They are lighting the afterburner on what Steve Bannon refers to as the new politics of the Democratic Party. He spoke in a fascinating conversation with Politico. The old politics are gone, he says. Populism has finally gripped the Democratic Party, and it's something he believes Republicans ought to be worried about. You hear from a lot of Republican analysts here on Bloomberg, every time a self-described socialist Democrat gets elected, they pop a cork. This is Democrats run amok. Now it's national with what happened in Colorado, with what's taking place in Michigan. Don't even talk to me about New York. This is the socialist, or if you ask Donald Trump, Communist Party. If you're the PCCC and you're trying to get progressives elected, it's the only way Democrats can actually win. No more half measures. And the rhetoric we're hearing from Republicans, look no further than Speaker Mike Johnson, they are actually using to their benefit. Check out this new ad from the PCCC. Watch and listen.
They put this on paper. They're saying the quiet things out loud. Replace the two-party system with a multi-party democracy.
Yep.
Expand the House of Representatives.
That's right.
Every time he says something he thinks is a liability, they say, yep. Drop another one. That's right. And it's setting things up to be a very interesting contest here, particularly as we skid our way toward Michigan, which is in that first week of August. Let's assemble our political panel for their take on whether this is a trend or not. It's pretty hard to argue against. Rick Davis is with us, and we've talked to Rick about it before. Bloomberg Politics contributor, Republican strategist, longtime campaign manager, and now partner at Stonecourt Capital. Back together with Matt Robeson, former campaign manager, Democratic strategist. Rick, Matt, welcome. Where are you on this today, Rick? Following the rhetoric from Steve Bannon, a lot of Democrats think this is a plus, not a liability.
Yeah, I think Bannon is more right than wrong in the sense that we are entering a new phase of politics where both parties have basically embraced populism, different brands for different people. But we've seen the blurring of the lines between Trump and Bernie Sanders for quite some time. And I think at the core of it is just an anti-establishment boom. Donald Trump rode to the presidency in 2016 on an anti-establishment within the Republican Party, characterizing people like Bush and McCain and others as being, weak leaders, and made progress within the MAGA movement for that. This is just sort of the Democratic version of the MAGA movement. And good luck having had to live through that in our party. I'm glad to see it starting to happen to the Democrats.
Wow. All right. So give us your thoughts on this, Matt. Rick points to MAGA. We've heard a lot of references to the Tea Party, the Democratic version of the Tea Party, starting to spout up around the country. How do you see it?
Well, I actually agree with Rick completely, and I gladly accept his thoughts and prayers because I'm not looking forward to what we're about to go through. And I don't think Democratic leaders really are either. Look, the rule of thumb when I was in campaigns was when Republicans sprinkled the word socialist or socialism on top of their messages, it added about 10 points of effectiveness in terms of moving voters. And I don't know if that level of sting is still in the charge that candidates are socialist. But we're going to test the proposition of whether Steve Bannon is right, and this is really about outsider, anti-establishment energy that's going on. There's certainly a lot of evidence to that, and I kind of like the PCCC ad. I think it wouldn't upset too many Americans to say, like, yeah, I'm kind of sick of the two-party system. I don't like what either of them are doing. But what's making Democratic leaders nervous right now is you have a candidate like Manny Rutinel, who emerged from the primary in Colorado 8 this week. And, he's kind of a standard issue progressive. But that creates the evidence shows about 1 to 2 points of drag on the prospects for a Democratic candidate versus a more moderate. And then the bigger concern is a candidate like Daria-Liza Chevalier out of New York, who has many times praised the Communist Party and celebrated the October 7th attacks in Israel. That is something that I'm sure Rick agrees we are going to see plenty of in Republican messaging this fall. And the question is that kind of a charge going to be something that sticks and something that Democrats can kind of push their way through?
Adam Green at the Progressive Change Campaign Committee that made that ad that we just sampled, Rick, says 2026 is our put up or shut up year. What will that mean for organizing, for energy, for money?
Yeah, it's kind of hard to tell what he means by that. This is the very beginning of that movement. Everybody thought Mondani was a isolated example. Now we're seeing it exist in other places like Colorado and Michigan. And so the Democratic Party has to really start to deal with it. But right now, it's more of a opportunity for sort of the left of the progressive movement to rally around some principles. I wouldn't say that that I'm seeing it as a big, broad national campaign. But look, this is up to the Democratic leadership to start to deal with it, and there are lots of options. I'm not going to give any advice to the Democratic Party, but if they don't deal with it now, then it will become a national movement because a lot of people are looking for a place within the Democratic Party, and they're not defining where to play and how to have an impact. And one thing Bannon says is it's not about Trump so much as disappointment within the Democratic Party that their establishment hasn't been effective against Donald Trump. So now let's give somebody else a chance. So Trump plays a role in this, and as long as Donald Trump's president, you've got a fire within the Democratic Party that needs to be dealt with.
Matt, Speaker Johnson says you can call it the Bolshevik Revolution of 2026, the communist threat. They actually sent Hakeem Jeffries from the leader's office a sympathy card and flowers after the primary in New York. How does Hakeem Jeffries manage this? Because his name comes up in every one of these. His candidates, in many cases, who he endorsed, lost to Democratic Socialists, in this case, in his own city. Should he start to try to own this a little bit more and widen the tent?
Yes, he absolutely should. And, I agree with Rick. It really is on Democratic leaders to try to co-opt, embrace the energy that they're getting from the grassroots. We've seen an attempt like this recently on the Republican side with Michael Steele, then the RNC chair, saying, well, I'm a Tea Partier. I'm into all of this, but this was like circa 2014. Didn't work out so well on his side. And, so I think the main message here, I think that the real takeaway from all of this is voters are passionate about change. The party that best embraces the message of we are the change agents, we are as upset as you are with the status quo, with the way things are going, with the raw economic deal that you've gotten. As Rick alluded to a moment ago, it's the same core DNA that you find in Bernie Sanders' message and Donald Trump's message. The party that best is able to capture that message is the party that is going to win in 2026 and in 2028. And it really is on Democratic leaders to say, you don't need to go to outsiders. You can find that with us. We will embrace that, and we will get you there.
There's something to be said about harnessing the energy in your party instead of denying it. Next hour, we're going to have members of the House from both sides of the aisle. Congressman Jason Smith, Republican from Missouri, who chairs House Ways and Means, will be with us. And we're also going to talk to Susan DelBene. Matt, the Congresswoman from Washington, is chair, of course, of the DCCC. And they got a bunch of checks in the 24 hours after the Supreme Court ruled this week on political ad spending, or political spending at large, I should say. Nearly $400,000 in the 24 hours following the ruling, its biggest day in more than a year. This was the ruling that threw out the federal limits on coordination between committees and candidates. What does that tell you about maybe an emerging energy prompted by the Supreme Court ruling?
Well, it's good news. I think the headline, the sneaky headline out of the Supreme Court ruling, the part that really has Democrats nervous is that what the Supreme Court actually did was remove Democrats' biggest point of financial leverage that they've harbored for an awfully long time. It's something I used to take advantage of as a campaign manager myself. For a long time, Democrats have done a better job of raising money to their candidates. Republicans have done a better job of raising money to their parties or their party committees. And so the reason that's such an advantage for Democrats is that by law, TV stations had to give candidates the lowest possible ad rates. That meant that Democrats could stretch their campaign dollars a lot further. It was something like 3x to 10x leverage. And so what the Supreme Court did this week is they said that parties and party committees get those same low ad rates. Right now, the Republican Party has about $130 million cash advantage over the Democratic Party. So in essence, one way of kind of doing the math of this is it's like they've just handed an over $1 billion hammer in terms of how far those dollars can stretch to the Republican Party. And so if you tell me that the DCCC is getting a lot of checks in the door that they can use, I'm saying, good, that's great, keep it coming.
Well, we'll talk to Susan DelBene about that less than an hour from now. Rick Davis, Matt Robeson, great panel. They're back in our second hour as well, as we hear from both sides of the aisle and welcome our global television audience. Kaylee Lyons is on the way in, too, and we've got a lot of news. We'll be checking the markets for you. Charlie is straight up here in about 5 minutes with the latest on the Thursday trade. A shortened week together here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Welcome to the Heat Dome edition, with triple-digit temps gripping the financial and political capitals of America. The latest read on the job market shows a big chill, missing consensus estimates by half this morning. I'm Joe Matthew, alongside Kaylee Lyons in Washington. Thank you for joining us. Markets now, Kaylee, are pulling back on bets for a rate hike this year.
Yeah, certainly the labor market wouldn't suggest it's so strong that the economy needs tighter policy, even as the White House and the National Economic Council Director Kevin Hassett contend that this still shows a strong labor market, even despite the fact beyond the 57,000 payrolls print we got for the month of June, there were downward revisions to the prior prior 2 months as well, which would indicate that the very robust figures we were looking at were perhaps a little less so.
Participation down quite a bit, which is why we see a lower unemployment rate, but also the pockets of weakness are somewhat confounding, with hospitality, for instance, not reflecting World Cup, not reflecting the incredible demand that airlines and hotels have been reading, and not seeing that explosion in construction jobs either, with data centers popping up like weeds. So we do have some questions.
We certainly do, and we'll get more into the data with Bloomberg's Michael McKee in just a moment. But you mentioned hospitality, Joe. Of course, a lot of hospitality workers were supposed to be the beneficiaries from the One Big Beautiful Bill Tax Act that passed last year, signed into law by the president on July 4th, almost exactly 1 year ago, of course, inclusive of no tax on tips. There is a question, though, as to how much the everyday consumer is feeling the benefits of that in the aftermath of higher gasoline prices from the war with Iran, other affordability and economic challenges they feel they're facing.
Yeah, it's an interesting moment that we're in here as we prepare to celebrate America's 250th birthday. Indeed, Republicans are celebrating the first birthday of the Big Beautiful Bill, and we're going to be talking with the chairman of the House Ways and Means Committee about that coming straight ahead.
Yeah, he's still in Washington in the heat dome with the rest of us, and he'll be joining us in just a few moments. But let's get outside of Washington as we turn to New York with a Jobs Day report on the markets from Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. We do have the Dow pushing higher. Dow, any advance today will be a record. The S&P, NASDAQ, they are both in the red. S&P right now down 40, a drop there of 0.5%. We've got NASDAQ down 1.4%. The NASDAQ 100 index down 2.3%. And the SOX, that's the Philadelphia Stock Exchange Semiconductor Index, now down by 6.3%. That sell-off in chip makers certainly weighing on the market. Short-dated bonds are rising as a slower than anticipated increase in jobs bolsters bets that the Fed won't be forced to raise rates anytime soon. Right now, we do have the 2-year at 4.12%, with the 10-year 4.47%, and the 30-year 4.97%. Our Michael McKee will have a whole lot more on the jobs market for you coming up in just a moment. Right now, spot gold is up $86 the ounce to $41.16, up by 2.1%. Crude now at $68.12 a barrel. WTI down 0.7%, and a barrel of Brent $71.16, down by 0.6%. We do have crude declining today. We are seeing the oil majors, though, advancing. Right now, ExxonMobil is up 0.7%. Chevron up 1.6%. ConocoPhillips up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Checking out the markets on this Thursday that is helping us close out the trading week, because yes, of course, tomorrow is the holiday ahead of the July 4th holiday, which is on a Saturday this year, which is why we had the very unusual Thursday jobs report. We don't see that very often, but of course it was today that we got the print due to the holiday, and the print was weaker than most economists expected. I believe only one in the Bloomberg survey thought the print would be as low as it was, at 57,000 jobs added in the country in the month of June. And downward revisions, as we mentioned, to the prior 2 months as well. So it paints a picture of a labor market that perhaps is not as strong as the White House would like to sell it as, though certainly we did hear the National Economic Council Director Kevin Hassett saying that this is still a strong labor market we're seeing when he spoke to our colleague Danny Berger earlier.
I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3% and that we're going to have a better second half of the year as those factories turn on the lights.
Interesting that we want to spend some time on this with Michael McKee, Bloomberg's international economics and policy correspondent, with questions about why the number could be so far off. And in fact, if there is strength under the hood, as Kevin Hassett suggests, Mike, we're confounded by the numbers. BI, by the way, was far beyond the market consensus at 200,000. We saw the biggest decline in leisure and hospitality payrolls since 2020. We saw the pullback in participation. What do you make of all this?
Well, I think there are parts of this that are just going to get tossed out by economists. They're not going to really worry about it because they're so out of line that they have the characteristics of things that are just randomly statistically weird, and they'll probably snap back. And one of them is the labor force falling by 720,000. And as part of the unemployment report, the household survey of employment fell by 500,000. And that's kind of a ridiculously high number. So people are going to just kind of take some of that with a grain of salt. And they're going to do the same with the leisure and hospitality. You were talking about that loss of 61,000 jobs. This is the time of year when normally leisure and hospitality establishments are hiring people. So there's probably some seasonal adjustment issue there, and then maybe something else statistically fluky. And so really what it comes down to is the Fed is going to do what it always does and look at the unemployment rate and say the unemployment rate is as low as it probably will go, and it means we have at least a steady, stable labor market for the moment.
Well, so if that's how the Fed will read it, it may not call for rate hikes this year then, Mike, but maybe not call for rate cuts either. Is the economic picture we're seeing painted here one that suggests that actually rates probably are where they need to be right now?
I think that's going to be the majority of opinion on the Open Market Committee. They will have to look at the latest inflation figures when we get them and see if they have eased somewhat now that oil prices are going down. And if that's the case, they'll probably stay on hold. There is sticky inflation on the services side of the economy that is not related necessarily to either tariffs or to the war. And if that continues, there'll still be some hawks who are worried about it. But at this point, it looks like the most likely outcome is they just stay on hold for the rest of the year. The markets still think at the moment that they will raise rates by the end of the year. The December Fed funds futures suggest that. But that obviously is going to move around a lot as we get more and more details.
We've talked so much about the affordability issue with regard to the consumer. Mike, we're looking at $68 a barrel oil for WTI. I'm looking at $3.83. Gas prices slowly coming down. Could we start to see a reflection of that in consumer sentiment surveys in the months ahead?
Well, it's something to watch for. We thought we might see that in the Conference Board Consumer Sentiment Index, Confidence Index, that came out earlier this week, and we did not. But it may have been just too late in the survey and too uneven because gas prices vary around the country. However, as we go forward, we should see that improve a little bit. Probably the more worrying thing for the administration is the consumer confidence numbers from the Conference Board showed declining trust in the job market. Concerns about what the labor market is going to be. And then in today's jobs report, you had the weak hiring, which, as I said, won't matter so much to the Fed, but that's the number that kind of will stick in people's minds. You know, the story that'll get printed in the small town newspaper is going to be that hiring is weak. And so that's an issue for the president. And then the whole question of average hourly earnings, while they ticked up a little bit, they're still well below inflation. Americans are still losing ground. And that is, of course, as you know, a big cross for the president to bear at this point.
All right. Bloomberg's Michael McKee in New York, our economics and policy correspondent. Thank you so much for joining us. And with the economic picture that Mike just described, we want to turn now to Capitol Hill, where we still find the chair of the House Ways and Means Committee, Congressman Jason Smith of Missouri, is joining us. He might be one of the very few people left in the rotunda after the House went home for the July 4th recess a bit early. Mr. Chairman, it's good to have you back on Bloomberg TV and radio. I hope you find yourself in a well air-conditioned space, as it is very hot here in the Capitol. I'm sure you heard some of what our colleague Mike was just describing, the weakness we have seen in consumer confidence data, some weakness in hiring, specifically economic data that does not paint a picture of an economy that has reaped massive benefit from the One Big Beautiful Bill that was signed almost a year ago. Should we not be seeing that show up more materially in the economy by now?
You know, I think the bigger question is to look at all these reports and the data, because they've been all over the place. And so there's a reason why they've been all over the place. And then whenever they go back and revise the prior month's reports being so far off, that shouldn't be the case. We need to do a better job on that. But in regards to what I'm hearing from people on the ground of what they've experienced from the Working Families Tax Cuts, the Big Beautiful Bill, a lot of people's very happy. I always point to this young lady 2 months ago who stopped me in Fredericktown, Missouri, and she's like, Congressman, I want to say thank you. I just did my taxes. I got a refund of over $10,000. This was a single mom of 3 kids who benefited from the expanded child tax credit of $2,200 made permanent. Plus, she was a waitress, no tax on tips. Plus, she works overtime, no tax on overtime. And because of that, she said, I'm going to be able to pay for my rent for an entire year. I had a waiter that came up to me and said, because of the no tax on tips alone provision, it's going to allow them to pay for their utility bills for the whole year. Those are pretty big things for just everyday average Americans.
Yeah, and I know that you're celebrating 1 year since the bill crossed, and we'll be talking about that more. Chairman, I want to go back to your answer initially on the jobs report today. Are you concerned that there's bad data in the system, that these anomalies are because of a poor response rate, that we're not actually seeing a reflection of the economy in these reports?
I absolutely have concerns with the data, and that we need to make sure that the data gets better, because consistently the reports are revised every month. Let's get it right. And I think that's because the data has just not been proper.
Well, I guess we'll look to see if the data becomes more clear as the months go on. Obviously, as we talk about the One Big Beautiful Bill 1 year on, that was budget reconciliation 1.0. We just saw recently 2.0 cross to fund ICE and CBP. Now, there is an active conversation, as I'm sure you're well aware, Mr. Chairman, about reconciliation 3.0. How quickly is there a real chance of that getting done when currently nothing is able to get across the House floor to certain colleagues of yours who want to see the Save America Act passed by both chambers first?
You know, I'm focused on legislating. I'm focused on accomplishing great pieces of legislation, putting them on the president's desk. We did that in the One Big Beautiful Bill, which was a partisan approach. It was a reconciliation bill. Now, on the Ways and Means Committee, we're working on a lot of bipartisan things. For example, the First Lady's Fostering the Future initiative to help foster kids who are aging out of the system. It passed out of the Ways and Means Committee and the House of Representatives with every single Republican and every single Democrat voting for it. We're also working on some bipartisan tax issues and bipartisan trade and bipartisan health care. That is what we need to deliver to the president's desk. That's what we can accomplish over the next very few legislative days that are left.
Okay. So is the Ways and Means Committee, Mr. Chairman, not currently looking at any possible tax provisions that could be folded into a third reconciliation bill?
Oh, we absolutely are looking at every vehicle that could be used. Reconciliation, though, is only a tool of the United States Senate. It allows them to overcome the 60-vote filibuster rule and to just pass with 51. In the House of Representatives, we just need to pass the good tax policies, the good legislation, and that's done with a simple majority, whether you do it in reconciliation or not. And that's what we're focused on, is trying to deliver legislative means. But let me tell you, I have a list of ideas that I would love in any piece of tax legislation moving forward.
I'm curious your thought on this idea by Elizabeth Warren and Bernie Moreno. To see a D and an R combine on this is interesting. A proposal to eliminate the Social Security tax cap, which would mean a pretty big increase, and you can, I'm sure, quantify this more on top earners. The idea to prevent cuts to benefits as soon as 2032. Is that an idea you would support?
You know, it's a big concern about the insolvency of Social Security, which is expected at 2032, also with Medicare. And it's something that Republicans and Democrats have to come to the table, figure out something. And it has to be bipartisan. It cannot just be with one party fixing this. And I think we're going to have to look at every idea that's out there, both Republicans and Democrats, because we ultimately cannot fail with the American people, because too many people, including my mother, relies on Social Security.
Well, I'll tell you what, you can of course pass a lot of bills, but you need the president to sign them. And I'm just curious if you know anything about the bipartisan housing bill. We've had so many Republicans and Democrats join us, Mr. Chairman. Most recently, last evening, Mike Flood, trumping the benefits of this bill that the president calls a big yawn. Do you know if he plans to sign it?
I don't know what the president's intentions are in regards to the housing bill. The housing bill is within the Financial Services Committee, so I'm truly just focused on tax, trade, and healthcare. The president keeps me fairly busy whenever we're looking at those three different areas, but I couldn't predict what happens in regards to the housing bill.
Okay, so I'll pick one of those three areas. Trade. The U.S. announced yesterday it doesn't intend to renew the USMCA trade agreement. What will that mean for our economy if we move from a trilateral deal to potentially two bilateral deals or pull ourselves out of this altogether?
You know, when I look at the USMCA, the trading relationship with Canada and Mexico, it's super important. It's important to all three countries, but have they been fulfilling and honoring the parameters of the original USMCA? Absolutely not. We've been raising concerns where, for example, the Canadians, when it comes to dairy, the issues that they've been doing there. We also had issues with Mexico when it came to corn. I represent a very rural congressional district, and these issues are very, very important to my people. And I appreciate the administration's not just going to sign off on it. They want to continue negotiations. They're not saying we don't need a trading relationship with Canada and Mexico. They're saying that we need a better trading relationship with Canada and Mexico, and I'm 100% behind that.
Mr. Chairman, we've only got a couple of minutes left. I'd love to get your take on this story about the government potentially taking stake in another company or maybe several companies, as OpenAI has reportedly opened discussions about giving the government a 5% stake and might include other firms as well, like Anthropic or Alphabet. Is there a national interest in doing so, or does that run counter to your conservative values as a lawmaker?
Well, I don't know much about what the proposal is that you're referring to, but what I will say is that just what I will say in concept is that AI is extremely important. It's transformational. We need to make sure that the United States is the leader in AI and not China. That's what we're seeing a battle out in so many different items playing out. I don't know all the details of what's necessary to make sure that the United States is the continuous leader of the world when it comes to AI, but I definitely don't want to allow it to be countries such as China.
Yeah. Some would call it socialism, though, the government taking stakes in private companies. Do you worry about that becoming a trend?
Yeah, let me tell you, I'm about the government's less involvement in everything. So across the board, I'm worried about that. I think government's too big, and it needs to be limited.
Well, I'm glad you could join us to spend some time ahead of the holiday. Mr. Chairman, enjoy your 4th and try to stay cool out there. If you're staying in town, my God, it's going to be 100 degrees, Kaylee, by the end of this day, and just as hot for the celebrations this weekend. They're now telling people not to attend the rehearsal for the big concert on the mall tomorrow night. It's going to be too hot. We're going to turn up the air conditioning and come back later this hour. Susan Del Bene, chair of the DCCC, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Chip bakers are sinking, and the S&P 500 index has erased a jobs-fueled gain. Right to the numbers, the S&P is down 40 now at 74.42, lower by about 0.6%. The Dow, however, at a record, up 247 now, up 0.5%. NASDAQ is down 1.3%. The NASDAQ 100 index, full of those big tech names, down 2% now, while the SOX, the Philadelphia Stock Exchange's semiconductor index, is down by 6.1%. The VIX holding below 17 with a 10-year at 4.47%. It is Jobs Thursday, the 2-year 4.13% and the 30-year 4.98%. We've got spot gold up $84 the ounce, 41.14. That is a gain of 2.1%. West Texas Intermediate crude, 68.25 a barrel. Brent, 71.33. Barrel of Brent down now by 0.3%. Again, recapping, the Dow higher at a record. S&P down now by about 0.5%. Palantir shares higher after D.A. Davidson raised its recommendation to buy from neutral as it sees the tech company having a competitive advantage to AI companies that have been at odds with the U.S. government. Palantir shares, they are gaining now. Palantir up by 5.2%. And Meta Platforms said to be developing plans for a cloud infrastructure business that will sell access to AI computing power and models. Meta down today, part of a broader tech sell-off, down by 4.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet live in New York, where it feels like 101 degrees right now. Yes, the heat dome does extend up north. We're not just suffering from it here in Washington, where the real feel currently is also triple digits. We're at an even 100 right now, and it's only going to get hotter as the weekend progresses, including on July 4th, when, of course, celebrations are scheduled on the National Mall, as they are every Independence Day, though this one is extra special as it is the semi-quincentennial, and there are celebrations for America's 250th birthday with 40 minutes of fireworks planned in the district around 11 p.m. because President Trump is planning to address the crowds on the National Mall. Before that, assuming there are crowds, it's going to be really hot. You can't bring in coolers. You can't bring in chairs. There's probably going to be a lot of potential suffering alongside with the celebrating in heat like this. But it speaks to one of the many challenges around this event is it's also something that has grown to be quite political due to the heavy involvement of President Trump, who, of course, has his own Freedom 250 operation beyond the bipartisan America 250, which was, of course, originally put into place by Congress.
This is going to be quite a weekend around here. By the way, because of the extreme heat, Capitol Police now say the public is not invited to tonight's rehearsal for a Capitol 4th concert. That's the one that runs tomorrow night when the president is at Mount Rushmore, the big one on Saturday. You're talking about you can't bring anything but yourself, basically. Yep. And we're going to have that triple-digit heat combined with enormous amounts of smoke from what will be a record-setting fireworks display. We're told the Guinness people are here for this. You know, they've got to mark down the biggest air show ever, biggest fireworks display ever, are both set for Saturday. The National Park Service, with documents obtained by the Washington Post, deeply concerned about air quality, predicting very hazardous and unhealthy levels of particulate matter coming from the smoke from the fireworks. The Capitol Weather Gang at the Washington Post predicting so much smoke will collect over the mall that it is possible no one will see the bulk of the fireworks.
Yeah.
So
let's
get down there.
A really celebratory atmosphere.
Absolutely. We haven't mentioned the fundraising dispute either that we'll get into with our panel. Should we bring him in? Rick Davis is back with us, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital. And Matt Robeson is here, too, Democratic strategist, former campaign manager. Gents, happy 4th of July. When we start talking about America 250, and we'll get into this whole fundraising mess, the Freedom 250 versus America 250. Rick Davis, are we in a world in which celebrating the country's birthday has become a partisan activity where hanging a flag, an American flag in front of your house is an indication of your political persuasion?
Yeah, I don't think it's gotten that far. I think there's been plenty of competition in Washington around who controls what events and that kind of thing. I mean, obviously the president, when he took office, created his own group Freedom 250 to compete with the congressionally mandated official celebrations that have worked for years to prepare the country for this great anniversary. But I got to tell you, Joe, after you and Kaylee's description of the mall on the 4th of July, who in the world would go down there? I mean, isn't there something positive you could say, like, oh, by the way, the hot dogs will be really good or something?
Yeah, we're working on it. We're looking.
Well, Joe did mention they're trying to set a Guinness World Record for number of fireworks. You may not be able to see them, but you could still say you were there when the record is set. And at the end of the day, Matt, is this not about patriotism? Are we lacking that as we celebrate 250 years?
I don't think we're lacking patriotism, but I agree, Kaylee. You've just done a bang-up job of describing what sounds like hell: noxious vapor, stifling heat, a fetid swamp where the reflecting pool used to be. I'm not exactly signing up for that. Look, I agree with Rick, though. There's been no better display of the true spirit of America than what's been widely reported around the country. Real Americans welcoming visitors from around the world to our home soil World Cup, showing the generosity of spirit, the friendliness, the neighborliness that really is quintessentially American. So that's what I like to focus on. I was watching the World Cup match last night with my family. We had our American flag out proudly displayed. I don't think that's become particularly partisan yet. As for the celebrations on the National Mall, yeah, not so much.
Okay, well, I'm glad to hear you're both together on that. Rick, I'll tell you what, regardless of America 250 or Freedom 250, you would have felt that tingle when you saw the Thunderbirds F-16 fly over there a little while ago, and it's going to be a riot, I'm sure, on Saturday. I need to see some of this stuff. But I do want to ask you about the fundraising matter, because this is real news. The Washington Post reports that House Democrats are accusing President Trump's allies of working to divert funds away from the official congressionally mandated event you referred to, America 250, and toward Freedom 250, whose officials and allies, they say, steered money away from America 250 and toward projects shaped by President Trump. Some donors were given routing and account numbers that directed funds to Freedom 250, the Trump event. So what's going on here?
Yeah, look, I mean, Freedom 250 is basically a for-profit organization. The commitment initially was that private funds would be used to foster this kind of patriotic activity. Doesn't seem like a lot of the events have panned out that well. Various celebrations on the mall didn't attract the kind of headliners you wanted, so the headliner became Donald Trump. Now Donald Trump's giving a speech on the 4th of July. Sure, everyone is just hot in anticipation of that happening for a couple hours before the fireworks. But look, I mean, all of this stuff, unfortunately, inside the Beltway, as Matt and I have described, is a cesspool, makes the reflecting pool look clear. And the reality is all going to be investigated significantly throughout the course of this year and next by Democrats in Congress, especially if they get the majority. And it'll just add to the frustration that the American voters have about whether or not their leaders in Washington care more about themselves than voters and citizens of their country. A sad reflection of our country's 250th anniversary.
Look forward to the hearings, huh?
Well, yeah, especially as we consider the potential outcome of the midterms. As we consider the American voter, though, Matt, knowing that when this country was founded, some of the very founders, though they eventually did divide into factions that turned into political parties, warned against party systems. George Washington obviously didn't want that to happen, and yet here we have not only a party system, but one in which it seems that they're growing farther and farther apart in a country that is getting more polarized in terms of political opinion than people being brought together. And I just wonder, especially as we consider what we're seeing in this primary season, how you see this playing out. Are we still going to have a two-party system, or are we going to have a four-party system that includes the far left, the far right, and then those more in the middle?
Well, Kaylee, that's a fascinating question. I hadn't really thought about it that way, but you're right. That is kind of the dynamic that we're seeing play out right now, where people with outsider credentials are doing well in Democratic primaries. We've seen this kind of dynamic on the Republican side before. Of course, the ultimate avatar of the outsider credential is Donald Trump himself. And it does seem like party establishments on both sides do have a vested interest in quietly trying to preserve the system against outsiders who seem pretty bent on radical change. And in the case of the Republican Party, I'm sorry to say, a certain amount of corruption and graft that we're seeing grow up around this Trump administration, the news of how much profit Trump has garnered through his cryptocurrency ventures, the mining venture that Howard Lutnick announced, which is going to profit his sons and Trump's sons. That doesn't seem to be the direction that the American people would want or that the founders envisioned. So I don't necessarily foresee a fracturing of the parties into four, but I do see a kind of a common set of shared interests emerging where the question is really going to be, do we want to preserve the system that we're celebrating over the course of 250 years? Do we think that that's been largely successful? Or do we all feel invested in it, or do we not?
Weigh in on this, Rick. You were still working with John McCain in the Senate when the Tea Party emerged. You've been through distortions before, particularly in a primary season, particularly in an off year when the party's in a minority position on the Hill. Is this just par for the course? Or is Kaylee right? We could be going outside of the lines of these traditional party structures in this next cycle.
Yeah, look, I mean, there's always going to be the flanks of the party that pose a obstacle to party unity, and yet I would say one of the things that is disturbing to me. I'm a big fan of the two-party system. I think it's done really well for our country for a long period of time, creating security and prosperity. But at the end of the day, more and more voters are just basically rejecting the concept of being a Republican or a Democrat. I just saw a recent poll that new registrants are basically splitting 27% each for Republican and Democrat, but the rest are all identifying as independents, which is a massive increase in the number of self-identified new registered voters going on the independent route, meaning that they're not happy with either party and are looking for options. At the end of the day, I was very impressed with your interview just now about with the chairman of the Ways and Means Committee, who said, you know what, we're working on all these bipartisan bills, and he enumerated a number of them. I never thought today I would hear such a deep-throated endorsement of bipartisanship from a Republican in Congress. So there's hope. Maybe it's a message for the next 250 years.
Hear, hear.
And we will leave it on that hopeful note. Rick Davis and Matt Robeson, our political panel, thank you so much for joining us on this eve of the holiday weekend, and a very happy 4th of July to you. And of course, the conversations around American 250, Freedom 250, the semi-quincentennial do not stop with Balance of Power. There will be plenty more to come this weekend, including a special broadcast of Bloomberg this weekend. David Gura, Christina Ruffini, and Lisa Mateo will be broadcasting live from the Intrepid with special coverage celebrating America's 250th birthday. You can find it all morning on the deck of the Intrepid on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and of course the Bloomberg Business app on Saturday, July 4th, starting at 7 a.m. Eastern. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The S&P 500 index right now trading at the low of the session, looking at a loss of 48. Jobs Thursday. Got to keep in mind that initially the S&P popped after that report dropped this morning. The S&P right now down 49 at 74.33. It is lower by 0.7%. Dow Industrials, though, in the advance today will be another record on the Dow. It is higher right now by 162, up by 0.3%. Of a NASDAQ Composite Index now down 390, drop there of 1.5%. The NASDAQ 100 Index lower by 2.3%, and this is key, the SOX, the Philadelphia Stock Exchange's Semiconductor Index, now down by 6.7%. So chip stocks sinking today. We've got the VIX right around 17 now, just a tad below the 10-year, 4.48%, with the 2-year 4.13%, and the 30-year 4.98%. Gold is up 1.9%. Spot gold 41.08 the ounce, while West Texas Intermediate crude down 0.4%. WTI 68.34 a barrel. Barrel of Brent 71.42, a drop there of just about 0.2%. Bitcoin, meanwhile, rallying up 2.8% now, 61,734 on Bitcoin. So again, recapping, we are looking at a divided market. Actually, most stocks in the S&P are higher, actually higher on the S&P. The index itself, though, is lower, down by about 0.6%. The Dow at a record, and of course, the all-important SOX today down by 6.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, he'll be back coming up at 2 p.m., top of the hour, with more on the markets here and what feels like the Friday trade. It is the final trading session of the week, and so we'll have a focus on stocks and bonds as we get closer to the close. Won't be back to trading until Monday. It's been a really busy news week that we've packed into a shortened trading week, and the Supreme Court had a lot to do with that, with some landmark rulings this week that got a lot of attention, including, first and foremost, birthright citizenship. But the ruling on political spending was key, and one that we've been focused on here on Balance of Power, throwing out federal limits, Kaylee, to coordinate essentially between spending between candidates and campaigns. And it resulted in, with the analysis, if you buy it, an advantage to Republicans, a huge fundraising haul for Democrats in the House.
Yeah, and that's what we want to speak to now, as well as the climate overall as we get closer and closer to the midterms, and of course are in the thick of primary season, as we turn to the chairwoman of the Democratic Congressional Campaign Committee. Congresswoman Susan DelBene of Washington is back with us here on Bloomberg TV and radio. Chairwoman, it's good to have you, and a very happy 4th of July weekend to you almost. On Joe's point around the Supreme Court decision and the closer coordination we could see with the party committees and individual candidates, the conversation in the aftermath was net benefit Republicans because they have the fundraising advantage. How do you turn this into an advantage for you?
Well, we saw this coming. Republicans have been trying to rig the system. They know they're losing, and they've attacked everything, trying to attack voting rights, gerrymandering, and obviously with this case to the Supreme Court. Traditionally, our candidates are stronger fundraisers. Their campaigns have been stronger, and Republicans have struggled, and they wanted to get rid of limits so that committees could come in and help invest more in their candidates, and that's exactly what the Supreme Court is allowing them to do. We have incredibly strong candidates running all across the country. We're going to have the resources to make sure they communicate, and they're on the side of the American people. That's absolutely why we're going to win. A disappointing decision for what this means going forward, and kind of highlights how important it is that Congress takes action on campaign finance.
Well, a lot of Democrats snap to attention, it seems. Madam Chairwoman, thanks again for joining us. D-Trip, according to what I'm reading here, raised $400,000 in the 24 hours following the ruling, biggest day in more than a year. And 20% of the earnings that day came from over 1,000 new donors, the biggest increase in new donors in a single day this year. Should we also maybe look at this as the best thing that could have happened to your fundraising efforts in the midterm cycle?
Well, people across the country hate what Republicans are doing here. They hate the decision of the court. They want to be able to pick their representatives, not have politicians pick their voters. And more we are seeing Republicans in an attempt to do that because they know they're losing, and people are reacting. We saw that in people reacting because of the gerrymandering that's gone on. When people had a say and a right to vote, they've rejected Republican attempts here. And what you're seeing
now,
now,
has this wave of donations continued?
People are standing up. They're speaking out. They're going to stand up. And this is one way. They're also going to stand up with their votes in November.
I'm sorry to interrupt, but is this wave of donations continuing since that first 24 hours?
I can't tell you. I don't have all the exact numbers more recently, but I know people are pretty outraged, and so I won't be surprised to continue to see people respond. Again, they want to make sure that we have elections, that candidates are running those elections, and that it's not just Republicans using outside money to impact elections.
Well, let's talk about the elections that are happening prior to November. What we're seeing this primary season, where we have seen in 4 instances Democratic Socialist candidates victorious in primaries and in multiple cases ousting incumbents. We could see a few more instances of incumbents facing DSA challengers or challengers younger than them, the likes of Wesley Bell or Ed Case or Joe Larson. Does DTRIP plan on spending on behalf of the incumbents in those races?
Well, first of all, you're talking about a handful of races in very, very bright blue districts.
Sure.
Our focus is on those purple districts. Those are the ones that are going to decide the majority. The DCCC is working with in our opportunities across the country to flip seats, to take back the House. Those purple seats absolutely have incredible candidates running who are actually winning across the ideological spectrum to bring folks together to win in these swing districts. That's our goal, make sure we take back the majority, and that's where the DTRIP is focused.
We have been hearing from a lot of Republicans, as you might imagine, Congresswoman, about these self-described Democratic Socialists as a national trend, and they're celebrating these wins as they come along in primary season. In terms of the Progressive Change Campaign Committee, though, they're embracing the criticism from Republicans and, in fact, trying to turn it against them. You might have seen this new ad in which they highlight Speaker Mike Johnson, his comments about progressive Democrats and socialist Democrats, and they just flip the words and say, yeah, that's exactly who we are. Here's a taste of the ad that's running.
They put this on paper. They're saying the quiet things out loud. Replace the two-party system with a multi-party democracy.
Yep.
Expand the House of Representatives.
That's right.
You see progressives candidates saying, yep, that's right, when he's sending the barbs. I just wonder, when we hear so much about the role that Hakeem Jeffries is playing, endorsing candidates there in some cases, and I realize, to your point, it's only a handful of races. Why not just embrace them and say that there's a big tent in the Democratic Party, maybe enjoy some of the energy behind these campaigns?
You know, we are focused on making sure we get done the work of the American people. People are having their say in elections across the country. But the math for the majority, so that we have the gavels to get things done, runs through purple districts, and that math has not changed. We have 45 districts where we're on offense across the country to flip seats, and across the board, strong candidates talking about the issues that matter, winning in seats where people have many differing political views. In fact, these generally are seats that Donald Trump won last cycle. We won 14 of those seats in 2024 with Democratic candidates. We're winning across the country, and we're focused on the issues that matter, number one being the economy and the challenges that families are facing.
Well, your point is well understood, Chairwoman, on focusing on the purple swing districts. So let's take one of them as an example. New York 17th, currently held by Republican Congressman Mike Lawler. We had him on this program the day after the New York primary when we discovered or learned that it's Kate Conley he would be up against, someone who is not a Democratic Socialist, who could be described as more moderate. That is something he disputed, and he said, look, she doesn't disagree with many of these policies. Does it make it harder for DTRIP, for candidates in the purple district, that they're going to inevitably, by their Republican opponents, be compared to the Democratic Socialist movement and being asked to disavow those policies? Does it make your job more difficult, even if it isn't directly impacting the candidates in those races, that they may not be Democratic Socialist candidates, but are still going to be lumped in with them?
Well, I don't think anyone's going to be confused. Kate Conley has a strong record of service to her community, a strong record of service in the military. No one's going to be confused about where Kate Conley stands. Mike Lawler, though, has been clearly a rubber stamp for Donald Trump over and over and over again, and he's running scared. And so, instead of focusing on the needs of his community, he's going to say whatever he's going to say because he's trying to protect his seat. But just look at his record of being a rubber stamp for Donald Trump, raising prices on his community. And we have this incredibly strong candidate who has a record of public service, who's going to win in New York 17. And no matter what he says, it doesn't stick, because it can't stick, because when people know Kate Conley, they know it's absolutely not true.
She chairs the Democratic Congressional Campaign
Committee that
Committee.
we have all across the country. That's one instance of districts that we have across the country.
Yeah. Congresswoman, thank you for joining us. Susan Del Bene, the Democrat from Washington. Happy 4th, Congresswoman. We'll see you on the other side of the holiday. As we track Wall Street as well on this jobs day, far below expectations. 57,000 when we look at payrolls, when the market was looking something in excess of 100,000. Markets keying off of that to an extent, Kaylee, but we're seeing this rotation continue with another record likely in store for the Dow Industrial Average. But we're watching the NASDAQ and the S&P 500 sink on some tough moves here for chip stocks primarily. The semis are being unwound. And we just wanted to compare notes with Eric Weiner for a moment to talk about this. Bloomberg News senior editor for equities joins us live from New York. Is this the real rotation this time, Eric? Is it going to stick?
Whether it sticks or not is really the question. What appears to be going on is sort of a consolidation of the AI trade, where we're really focusing now on the chip stocks, the memory stocks that are part of the build out of the AI data centers. But everybody else is kind of taking it on the chin. There's skepticism about the spending. There's skepticism about the spenders. There's skepticism about where the money's coming from, because it's not coming from their cash piles. It's coming from equity or from debt. And that raises a whole bunch of other questions about whether this money is going to end up showing up. So once this happens, and I mean, you also have to realize chips are extremely volatile. So they go through these swings like this a lot, and they'll have down years. Micron has lost money in the last 3 years. So, this isn't all that weird. It's a market led by a very strange group, which is chip stocks.
Well, and when we consider the heavy weight that they have in the market, it helps explain why you're seeing a difference in performance between the market-weighted and equal-weighted S&P 500 today. Certainly, when we consider what will have big weighting, though, SpaceX, of course, is now one of the biggest public companies out there. And am I correct, Eric, that it's going to join at least the NASDAQ 100 next week?
Yes, well, I don't know exactly when, but that is the word.
Okay. Or it will be eligible?
Yeah, they're going to ease the eligibility. Actually, a bunch of, other than the S&P 500, a bunch of indexes are going to allow it in. Mm-hmm. And we're also going to get the listing for SK Hynix, which is another memory chip maker, and they will probably go right into the NASDAQ 100 as well, and that'll keep this rotation kind of going. The question is whether, like today we have this upward bias, and yet they're selling because of chip stocks. So, at what point the cart leads the horse and the horse leads the cart is really where the market needs to figure things out.
All right, Eric Weiner, Bloomberg News senior editor for Equities Americas. Thank you so much for joining us. And it's fascinating, Joe, to see the market trying to figure out what to do with this AI trade at the very same time that there seems to be an active conversation in Washington about the government having a stake in some of these AI companies. If OpenAI were to go public and be subject to this kind of volatility, and the U.S. government would have a 5% stake in that game, maybe it's not necessarily a good thing.
It's worked out pretty well for Intel so far,
Yeah,
but
that's
that's
true.
might be a little bit difficult to duplicate. Kaylee, we should know, breaking news, President on Truth Social declaring a National Scallops Day, and in fact, opening the northern edge of George's Bank off Cape Cod to scallop fishing. If you're with us on 92.9 in Boston, this is a big business story, something we might have more on later on.
I would have read that as scallop.
Depends if you're from New England.
Okay, well,
It's
that
a
makes sense.
Boston thing. We'll see you a little later on Balance of Power. You're on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, live from the Bloomberg Business Week studio in New York. It is Bloomberg Business Week Daily on this Thursday, July 2nd, 2026. I'm Tim Stanovic, along with Nora Melinda. She's from Bloomberg TV. She's the markets correspondent over there. She's in for Carol Masser this afternoon. Nora, I don't know about you, but it feels like Friday.
It feels like Friday. I know we usually call it Thursday, Friday, Junior. I don't know what we call it today. Is it still Friday, Junior, or just an early Friday?
Today's like everybody on Wall Street, as a longtime colleague here told me, is already on their way to Long Island this weekend.
No one's green dotted. No one's online on the Bloomberg terminal.
Hey, we are here.
But we're here.
Grateful for all of you joining us for the next 3 hours and the next hour right here on Bloomberg TV. We are, of course, talking Jobs Thursday, because even though it's not a Friday, we did get a jobs report today. Slower than anticipated increase in U.S. jobs. Most stocks are actually higher in the S&P, but the S&P down 0.7%. We're going to have much more from Charlie Pellet in just a minute. Also, on this jobs report, Marta Norton from Empower is stopping by. We're going to talk to her the economy, the path for rates, the consumer asset allocation, and more. Nora, speaking of the consumer, you have any backyard barbecue plans for this weekend?
See, I don't really have a backyard. It is New York City,
it is New York
after
City,
all.
yeah.
But maybe I could find somebody's backyard and enjoy their barbecue.
Maybe you can not barbecue, but have people over. It's going to cost more this year. Wells Fargo actually crunched the numbers, and it turns out that burgers may not actually be the star of the show.
I know. So I'm hearing.
All right,
we'll have
we're
to see what they say.
Talk about that a little later. Also, Bloomberg News, the first to report that some key European powers and officials from Gulf Arab countries now believe that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. Stuart Paul from our Bloomberg economics team is going to be joining us in just a few minutes to talk about the implications and the economic effect of a potential toll. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, I thank you very much, Tim and Nora. Right now, we are looking at a record on the Dow Jones Industrial Average. Perhaps the key takeaway at this hour, well off session highs. Not just that, but lows of the session right now on the S&P. The index stands at 74.33. Yes, light volume, down 50 points, a drop there of 0.7%. The Dow up 178, up 0.3%. But as we heard from our Eric Weiner minutes ago, the real problem today, sell-off in chip stocks. They are under pressure big time. The SOX, the Philadelphia Stock Exchange Semiconductor Index, now down by almost 7%. NASDAQ is down 1.5%. The NASDAQ 100 Index down 2.3%. And the VIX now above 17. 10-year on this jobs Thursday, 4.48%. The 2-year, 4.13%. The 30-year, 4.98%. We've got gold up $78 the ounce, up 2% now, 41.09, while West Texas Intermediate crude down 0.2%, 68.41 for a barrel of WTI. U.S. hiring did slow in June, even as the unemployment rate fell, curbing some of the budding momentum and job growth this year. Again, the Dow higher at a record. S&P right now down 0.7. The NASDAQ 100 Index down 2.3%. Chip names under pressure. Case in point, right now we are looking at shares of Qualcomm. They're down by 4.9%. NVIDIA is down 2.5%. Micron down 7%. Intel down by 5.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And Tim and Nora, that is a Bloomberg Business Flash.
Hey, thank you, sir. Charlie Pellet. Just to build on what Charlie was saying about the stocks, down by close to 7% right now. Chip stocks under pressure. Every member of the Philadelphia Semiconductor Exchange is lower right now, all 30 of them. Though, zoom out, year to date, stocks still up 76%.
Right, and it's really interesting when we look at the under the hood of the S&P 500, because we do see healthcare and consumer staples. They actually are holding up in this market. I was speaking to some sources earlier that were just saying, yes, we are seeing this sell-off. Yes, we're seeing a rotation out of tech. But we do still see some segments, some sectors in the market that are holding up, and it seems to be some defensive ones here.
Well, let's see if the jobs report shed any light on where we are in this economy. I want to bring in Marta Norton, Chief Investment Strategist at Empower. She joins us from our Chicago bureau. Marta, always good to check in with you. Just to bring everybody up to speed, U.S. hiring slowed sharply in June, even as the unemployment rate fell. Non-farm payrolls increased just 57,000 last month. We also saw downward revisions to the prior 2 months. Is this the start? Can we take this report to show that the economy, or at least the jobs market, is losing momentum, or is that reading into it too much?
Yeah, I think it's hard to say it's losing momentum. I'd rather characterize it as kind of greater clarity, kind of replacing what we had thought was occurring, which was this surge in payrolls. And I think this idea that we're actually seeing a quieter, stabilizing job market rather than an accelerating one is something that fits with the longer term trends. I think something that I point to pretty regularly is just where we're seeing wage growth. And it really has come down on a real basis. We're a bit behind the 8 ball there. And I think that's in step with a normalizing, stable, quiet job market.
And so what exactly is standing out to you in this report? It was a bit of a mixed report. What's holding up for you, and what are you seeing is not necessarily holding up in the way that it should in the job market?
Well, I think, it's a tale of two numbers, right? People can focus on payrolls or they can focus on the unemployment rate, which ticked down. But I think the real story is what we saw to revisions, because there was so much enthusiasm around the payrolls that we saw in prior months and this expectation that maybe not only was the job market stable, but it was accelerating. And I think we can look at the results today and take that to mean that actually I think what we're looking at is this smoother trend rather than something that gives the Fed free rein to raise rates.
Well, we'll talk more about the Fed in just a second. But before we do that, I want to talk a little bit about what we learned if we peel back the layers of this report a little bit. Biggest decline in leisure and hospitality payrolls going back to 2020. The BLS says it reflects weaker than usual seasonal hiring. I thought the World Cup was going to bring so many people to the U.S. They were going to be traveling. They were going to be spending money. Apparently, they're buying ranch dressing and taking it home to wherever they're from, because that's happening.
I can't blame them.
Right now,
Yeah.
I can't blame them either. But that's not actually leading to hiring.
Yeah, it's kind of interesting because we did see strength in that area in prior months. I think that was one of the areas that did catch people off guard. Now, I would, caution people to take too much from any one data point. So I think if we look at the broader trend, there have been these areas of strength, that being one, healthcare being another. I don't think that's necessarily changing. But to your point, this was kind of a surprising statistical blip when we look at today's numbers.
How are you thinking about inflation right now, and also the dual mandate for the Fed? What are you focusing on?
Yeah. So inflation, of course, is just the story that won't die, right? Beginning of the year, there was, and even, towards the end of last year, there was a celebration that really we could move on past inflation. And 2026 has made it clear that we really can't. But I think a lot of it is on this supply side of things. So, of course, the energy shock, and then we have tariffs that occurred earlier. We also have this AI effect that is also very much driven by the capital spending cycle and not necessarily by consumer demand. So I think inflation is very much a frustration, but I don't think, and I think we can look at the labor report to confirm this, I don't think we're necessarily looking at demand-led inflation or inflation that really is the type of inflation that the Fed has a lot of control over.
So what are we looking at then?
Well, I think we're looking at supply shock upon supply shock, and something that at least stays the Fed's hand, but doesn't necessarily allow the Fed to hike. Because
Okay.
Go ahead.
Well, I was just going to say, so if we think about supply of certain things, we're going to be speaking to Robin Wenzel over at Wells Fargo, the Agri-Food Institute, in just a minute about the beef price increases that we've seen. I mean, CME is launching like a tool to trade this stuff because the prices have gone up so much. There's also the oil shock, but what else are you thinking about supply shock? Certainly semiconductors too. What are we missing?
Well, so yes, the AI supply shock is one thing. The food is another. We're talking a lot about the El Nino effect and what that does to food around the globe. When we're looking at energy prices, we're, of course, caring about what we see at the pump and then energy prices throughout the economy. The tariff effect seems to have started to quiet, but that was certainly one of the supply shocks that we had to deal with as well. So it's kind of these different pockets of areas in inflation that are just kind of troubling consumers every which way.
What is one data point that you're really watching between right now and the next Fed meeting? Of course, we just had one pass.
Yeah, so jobs market, of course, is something that we're going to have to watch. I think one of the big considerations is whether we looked and saw peak inflation with what we've seen happening in the Middle East, or whether this inflation is more persistent. And so, of course, that's at the headline level. And there's also those secondary effects in core inflation that we'll want to keep an eye on. But if we are indeed at a point of peak inflation, then I think we can start to see some of those numbers decline, at least on the margin.
Marta Norton, Chief Investment Strategist at Empower, joining us from the Bloomberg News Chicago Bureau. Happy holiday weekend. Happy 4th of July, Marta. Well, Marta mentioned the supply shock. Well, oil, part of that supply shock. On that, let's talk a little bit about what we could see when it comes to potential tolling in the Strait of Hormuz. Our Bloomberg News team reporting that some leading European powers now accept that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. This according to people familiar with the matter. Transit fees on vessels is something that we discussed earlier this week with Sam Dart, the co-head of Global Commodities Research at Goldman Sachs.
The main thing they say is, I don't mind paying a toll as long as there's clarity on the rules, because what I don't want to do is to go against U.S. sanctions. My impression is that a lot of market participants, they are more in search of clarity than specific rules here or there, because even the toll that was discussed when it was being charged informally, my understanding is that it was to the tune of about $1, an extra $1 a barrel.
That's significant.
But it's not that different from normal volatility in the market.
Sam Dart, co-head of Global Commodities Research at Goldman Sachs, joining us a little earlier this week. For more on what tolling would do in the Strait of Hormuz, we're joined by StartupPal, Bloomberg Economics U.S. and Canada economist. He joins us from New York. Stuart, do you agree with the view of Sam Dart at Goldman Sachs that, and this is based on who she's spoken to and then relaying this to us, it would amount to about a dollar per barrel of oil, which in the context of volatility in the oil market is not that big of a deal?
I think that's about right. $1 a barrel passes the smell test to me. But one thing that I'd like to add beyond what we heard in the previous clip is that beyond clarity around the rules and beyond clarity around sanctions, I think that what matters a lot, especially for exporters in the region, is going to be clarity around security, having some sort of expectation for the direction of the path of the war. As we saw when there were attacks on commercial vessels around the 25th, exports from Saudi pretty quickly slowed. We went from seeing average daily volume passing through the Strait of about 16 million barrels a day to about half the pace right now. I think that what matters more than tolling probably is going to be the direction of conflict, the direction of escalation versus de-escalation, and having additional clarity around security.
Well, on that point, Stuart, one thing that strikes me with this conversation is the president has been adamant about there not being any tolling. And if there is then tolling, then does that mean that there's still much daylight between what the U.S. demands and what Iran and perhaps, in this case, even neighboring countries end up doing?
Frankly, it just leaves us with a status quo where the president is making demands that are building on the memorandum of understanding that was set forth a few weeks ago. And Iran is continuing to sort of test the boundaries of that memorandum of understanding with particular attention and particular efforts being built up on the Iranian side to push the envelope when it comes to who controls the strait. It wasn't especially clear, for example, whether once the memorandum of understanding was no longer in effect, what the status quo would revert to, for example. So if you read it with a sort of legal eye, it's not entirely clear what would happen on the other side of conflict. It's not entirely clear whether Iran would be allowed to potentially insist on some sort of toll in the future. And when that's the case, you expect there to be this dynamic right now where there's kinetic conflict. There's Iran testing the limits of the tolls that it can charge in the current moment, re-escalation, de-escalation, just a sense of kinetic conflict taking place in the background, even as volumes remain in the range of 5 to even 15 million barrels a day. You can still see volume moving through the strait, albeit at a lower volume than we saw previously before the war, around 20 million barrels a day. You can still see some oil flowing through the strait, even with kinetic conflict and a testing of boundaries in the background.
Well, Stuart, we know that oil markets have really been watching every single development as it relates to the Strait of Hormuz. How are you thinking about any sort of particular inflationary risk? I know we've been talking about what this means for consumers in terms of gas at the pump, but as we're starting to see what some people call things stabilizing to an extent, how are you thinking about inflation risk as it relates to what you guys are thinking in Bloomberg Economics?
I think at this point, risk for inflation is skewed to the downside. Already the move in oil prices that we've seen would imply a lower global inflation, about 30 to 40 basis points lower than we saw in May. In the United States, if we're thinking specifically about gasoline prices have not moved in line with global oil prices.
The president has noticed.
The president, that's right. So the gasoline prices have come down about 15 to 20%, whereas global energy prices are down closer to 30 to 35%. Basically, what that ends up meaning is that the gasoline savings so far is about $4 to $5 billion a month. That's equal to about 60 basis points of nominal spending every month, if we consider it in the context of retail sales. That can be directed towards additional real goods and services that folks had been pulling back on. Consumers had become a bit more discerning in their spending habits amid higher gasoline prices. Now with an additional $4 to $5 billion in their pocket that they're not spending at the pump, they can direct that towards the things they want to spend on rather than the needs that they must satisfy.
One challenge, and again, we're going to be speaking to Robin Wenzel over at the Wells Fargo Agri-Food Institute in just a minute about the rising costs, specifically of beef and what the 4th of July barbecue looks like. Is it enough to offset the growth in some prices at the supermarket?
It'll definitely help. Heading into the 4th of July, of course, everybody's preparing for the barbecue. Everybody's queuing up their TiVo to record the 7% more this year than last year. Hot dog prices are up, beef prices are up. So the $4 to $5 billion in additional spending power will certainly help and to offset some of the increase in food prices that we've seen for sure.
Well, how long do we think this will actually take? It's funny, I know earlier in Bloomberg they were talking about buy now, pay later and how people are actually using buy now, pay later for groceries. How long do you think it'll take to stabilize when we think about gas at the pump and what that means for consumer wallets?
Well, so it affects different portions of the income distribution differently. For example, those at the lowest end of the income distribution who are using buy now, pay later to afford some necessities like groceries, they actually don't have the same gasoline or even transportation spend as those closer to the middle of the income distribution. When I do a quick breakdown of cumulative inflation over the past, let's say, 18 months, well, really since President Trump took office, those in the lowest income decile have inflation of 4.8%. Those in the upper end of the distribution have inflation of 3.8%, but gasoline hits hardest in the middle. So it's really going to be those in the middle who benefit most from declining gasoline prices.
Well, I'm going to StartupPal's house for my 4th of July barbecue.
I think we all are.
We should. StartupPal, Bloomberg Economics U.S. and Canada economist. Happy 4th of July, Stuart. Coming up next, we talk about that increase in prices next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story headline right off the Bloomberg Professional Service. Blackstone's QTS is abandoning a massive data center in Virginia. Blackstone shares, they are advancing on that headline, up 1.9%. Again, bears repeating. Blackstone's QTS abandoning a massive data center in Virginia. That headline breaking right now on the Bloomberg. U.S. stocks, we are looking at an update for the Dow Industrials. In fact, a record there. The S&P 500 index is moving lower. Chip makers are sinking. NASDAQ is down. The NASDAQ 100 index down 2%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 6.4%. But again, the S&P down 34, trading lower by 0.5%. The Dow up 281, up 0.5. NASDAQ down 1.2%. The NASDAQ 100 index down 2%. And again, bears repeating on the SOX, down by 6.3%. We've got the VIX just below 16, a 10-year at 4.48%, with a 2-year 4.13%, and spot gold is surging 2.1%, 41.17 the ounce. West Texas Intermediate crude 68.62 a barrel now, a little changed, up under 0.1%. Barrel of Brent 71.69, up by about 0.2%. Keeping an eye on what's happening with the oil majors, they are higher. ExxonMobil up 0.7%. Chevron up by 1.7%. ConocoPhillips up now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Nora and Tim, that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Just to build on what you were talking about with that redhead that crossed the Bloomberg terminal a few minutes ago, Blackstone's QTS walking away from plans to build its portion of a 2,100-acre data center campus in Virginia. It hands a win to residents who fought for years to topple the project. Shares of Blackstone still higher by about 2% right now. They did dip ever so slightly lower on that headline when it crossed a couple minutes ago. But this is not the only news with Blackstone data centers this week.
This is not the only news. We were just talking earlier this week. I was reporting on the fact that Blackstone was offloading 3 data centers in the Northern Virginia area. Now, we know that in Northern Virginia, also known as Nova for those Virginia residents like myself, it's where we really see a hotspot for data centers. And so there was some concern on the street as to whether or not this would be a negative thing for Blackstone. Are they really pulling back from their investment in data centers? But as I was speaking to people on Wall Street, they're saying that they think that Blackstone is essentially taking its money, recycling it, and putting it toward other projects. So it's not them taking a step back from the space, but actually doubling down into things that they think would have greater returns.
Or does it, and at the same time, does it offer some sort of playbook for communities that are pushing back against these projects, which increasingly is happening around the country? Well, also happening around the country, the 4th of July. And with the 4th of July comes the barbecue. U.S. ground beef prices have surged to all-time highs as the domestic cattle herd shrinks to a 75-year low. The cost of meat has been a point of concern for the Trump administration ahead of the midterm elections. The president has encouraged more imports from countries like Argentina to cool prices. Foreign shipments are projected to reach a record this year. The big question for a lot of consumers going into holiday weekend is how much is that 4th of July barbecue going to cost? Robin Wenzel thinks about food prices nonstop. It's her job. She's head of the Wells Fargo Agri-Food Institute. She joins us from Minneapolis. So you and the team out with some research. Robin, it says the summer barbecue for 10 people will cost about $161. That's for a pretty big menu. It's for food. It's for beverages. Yet that's still up 2.4% from last year. What are the other distinctions that you notice with this year versus last year?
Yeah, well, I think you called it right out of the gate. You know, we are seeing meat and proteins really rise year over year, specifically when we talk about ground beef, which is up about 14%. As you noted, we are at record low supplies dating back almost 75 years. So that's really causing some stress with the budget. We do see a little bit of relief and better news with chicken breasts. It's a good lean protein. That's up about 3%. Pork ribs are another option. Again, up about 3%, but really good and convenient when feeding a crowd.
Well, is there any area where we've seen that shoppers are getting some relief? We've been seeing prices going up nonstop, as we clearly are seeing through some of your reports.
You know, it's a little bit of a mixed bag. 2 areas that I can highlight would be desserts. Sugar prices have stabilized. So we're seeing cookies, ice cream, both up just only 1% year over year. I'd almost call it flat. Pies, especially, in the bakery area, again, up just about 4%. But I think that lowering of the sugar cost is helping out in the bakery aisles. Another area I'd point out would be fruit. And, the best way that you can find value in fruits is to really purchase whatever is seasonal. So there are some good options there, watermelon being one, it's down about 3%. And then berries are a mixed bag, but you can probably find some value in savings there as well.
Well, your report is called Stay Close, Grill Big. Are families choosing backyard gatherings as opposed to travel at all because of affordability?
We are seeing more people opting to stay closer to home, and with that comes the bigger crowds. You have hopefully some more family around and friends to join you. And that's really kind of what we took into account with our menu and our planning, really thinking about feeding that crowd.
We spoke to Marta Norton over at Empower earlier. I mentioned that the CME Group is launching trading contracts for the beef products that are used in hamburgers and meatballs as prices surge amid a shrinking U.S. cattle herd. As we mentioned, too, at the top of this, there are political implications of that, kind of both ways for the president. One is you want to satisfy the farmers without alienating them by allowing for cheaper imports, but you also want to make sure that the folks who aren't the farmers and are paying for this stuff at the grocery store aren't seeing prices rise too dramatically. Is there relief on the horizon specifically when it comes to beef prices?
In truth, it is going to take some time. Rebuilding the herds is not an overnight process, as you can imagine. It can take 2 to 3 years to get the calves up and ready. So we do expect to see some relief, but not until 2027, perhaps, as the herds start to come back up.
What about the screwworm part of the equation here?
Yeah, so the screwworm is back in the United States. It's really in the southern states. We're keeping an eye on that. At this point, we do not see that that is really disrupting beef supply or having any issue on pricing.
Why do you argue in your report that ribs are taking center stage?
Pork prices have been relatively stable, especially relative to, red meat and chicken. And again, it's an option where it can be easy to feed a crowd with some of the different cuts of pork where you can really find some good value.
Well, also, how are you thinking about just not this holiday season, but what this means for grocery prices down the road as we're looking into the second half of the year?
The grocery prices have really followed the food at home information that we're seeing coming out of the BLS. And we see that it's moderating compared to some of the increases that we saw in the past, certainly tracking back to COVID. So there's good news that the increases are not as big as they had been, but still it is costing more. I will say, that when we talk about produce, fruits, vegetables, any commodities like that, it's really a function of supply and demand. The pricing is a function of supply and demand. And so with beef, we see the prices high because the supply is low. I think as we get into the growing seasons and more options are available and hopefully increasing some of the supplies, maybe those prices could moderate a bit.
We're speaking with Robin Wenzel, head of the Wells Fargo Agri-Food Institute. She joins us from Minneapolis this afternoon. One of the conversations that we had over the last couple of months has been the cost of transporting the products that we buy at the grocery store, and specifically when it comes to produce. And getting, let's say, some produce from California to the East Coast, maybe not as important this time of the year, but the increase in diesel prices that we saw in the earlier part of this year really affecting those prices. Given that we haven't seen gas prices come down the way we have seen oil prices come down, is that still a big share of increase in cost when you're at the grocery store?
For the produce and for those transportation, those costs are built in. It can take some time to see that come down in the pricing. We, throughout history, we see diesel prices go up and go down. And so it does moderate within the fresh produce. It doesn't always tend to be to as great a degree as we would think. Although of recent, we are seeing some impact, but we do hope that will, again, start to moderate and trend down at some point.
When should that trend back to pre-war levels?
I don't have the answer to that. I would like to have that answer, but I think it is going to take a bit of time, as we can imagine, to kind of work through inventories and have it right size a little bit.
Well, Robin, outside of beef, where else are you really seeing consumers being crunched in this moment? Earlier, we were just talking about buy now, pay later on one of our earlier shows on Bloomberg TV, and how so many consumers are trying to find ways just to finance the essentials. Don't know if we consider 4th of July backyard grilling an essential, if you will, but curious, where else are you really seeing consumers essentially trading down?
You know, with beverages, that's one of the areas. Certainly, we've seen kind of, alcohol beverages flat. They're up about 1% in price, but we are seeing consumers trying to find other options out there. Part of it is consumer taste and preference, people looking for low sugar, low alcohol, no alcohol options, and, switching to the sparkling waters and some of the other beverages. I would also say that, dried goods, those pantry items tend to be effective with cost savings for consumers versus a lot of the fresh produce and proteins.
Are we at this point, Robin, seeing any macroeconomic effects as a result of GLP-1s? There was so much talk a couple of years ago. There were folks out there saying this is going to be a boon for airlines because if everybody weighs less, they're not going to have to spend as much on fuel. Certainly, we've seen some CPG companies change up their formulations and add protein, and we've seen portion size commentary from companies. What are you seeing in your world?
We are seeing a shift in consumers' habits and their purchases at the grocery store. So we do see people trying to lean in on the outer aisle. Again, the fresh produce and protein when they're on GLP-1s, avoiding a lot of the processed foods, the sugary foods. So we see some changes there. Protein and fiber are the two winners from the GLP conversation. That's really where a lot of the consumers and people taking GLP-1s are focused with their nutrition, with their diet, and finding ways to supplement and add that to their menu.
But what types of proteins and what types
Lean
of fiber?
Proteins.
Everything?
Yeah, so lean, I would say
lean proteins, okay.
Yeah, lean proteins, so your fish, your chicken, all of those. I'm really trying to pack it in. Also looking at dairy. Dairy's been a great source for protein. We've seen cottage cheese just explode in popularity, a lot of the yogurts. So that's an area in addition to a lot of the protein shakes that we see. And, with fiber, it's getting those fruits and vegetables in there, getting some of the whole grains in there, and then certainly adding to it all with supplements.
Are you seeing at all shoppers maybe going toward canned goods as opposed to maybe fresh produce or fruits when we think about the produce section? Are you seeing people maybe trading down from a brand name to Walmart's Great Value?
People are prioritizing, making their budget stretch, and that is certainly a way to do it. So working with private label, working with more of the dry goods, the canned goods, there's value there. And certainly a lot of the retailers are incentivizing people to shop in that area as well with some of the specials. So it is a constructive way to make your budget stretch further.
Robin Wenzel, head of Wells Fargo's Agri-Food Institute, joining us from Minneapolis. Happy 4th of July, Robin. Thanks for joining us on Bloomberg Business Week Daily today. Just some headlines crossing the Bloomberg terminal. If you are in the eastern part of the United States, you are familiar now with the warm weather that we are having. Well, Con Edison has cut power here in New York to the Bronx due to an electrical issue in Riverdale. It's asking customers, too, in certain areas of Yonkers, Pelham, Mount Vernon, Bronxville, Eastchester, New Rochelle, and Mamaroneck in Westchester to conserve energy while crews repair equipment. Some customers have lost power temporarily due to an electric problem in Riverdale. The total customer count is around 89,000. We're going to keep an eye on this and bring you any updates as we do get them. Coming up next, we're talking soccer.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are off session lows, still a decline for the S&P 500 index, but important to point out that most stocks in that index are advancing. Yes, the S&P is down 24 now, down 0.3%, but of the roughly 500 stocks that make up the index, 332 are higher, 170 are lower. The S&P now at 74.58, a drop there of 24 points, down 0.3%. Again, off-session lows. Dow at a record up 374, up 0.7%. The Nasdaq Composite Index down 1.1%. The Nasdaq 100 Index down 1.9%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, now lower by 6.2%. The VIX below 17, a 10-year on this Jobs Thursday, 4.48%. We do have the 2-year, 4.13%. The 30-year, 4.98%. Short-dated bonds rising as a slower than anticipated increase in jobs is lifting bets that the Fed won't be raising rates anytime soon. Again, the 2-year, 4.13%. Gold up $93 the ounce to $41.23 for spot gold. That is a gain of 2.3%. West Texas Intermediate crude up 0.1%. Barrel of Brent, 71.73. Brent crude up by 0.2%. Blackstone's QTS is walking away from plans to build its portion of a 2,100-acre data center campus in Virginia, handing a win to residents who fought for years to topple the project. Blackstone shares, they are gaining. Right now, we do have Blackstone up by just about 2.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Nora and Tim, that is a Bloomberg Business Flash.
Thank Charlie. I don't know if Charlie stayed up late. It wasn't too late, actually, which was great.
It wasn't too bad.
Watching the game last night. The U.S. was victorious against Bosnia-Herzegovina last night. 2-0. I, a person who knows nothing about sports and nothing about soccer, thought that was an incredible game.
It was loud. I mean, at the restaurant that I was at, it was loud. Everyone was cheering.
All right, next up, the U.S. versus Belgium, round of 16 Monday, 8 p.m. Eastern. Set your timers now. That game happening in Seattle. Nobody better to talk soccer with than the co-host of the Business of Sports podcast. We got Randall Williams with us, Bloomberg News senior reporter, Vanessa Perdomo Maglione, Bloomberg News sports business reporter. They both join us here in the studio. Is the world taking the U.S. seriously finally this year when it comes to soccer?
It's interesting because I do think we're turning that page. We're starting to turn the page where people are tuning into the U.S. games and they're saying, wow, they're actually playing some real soccer, some real football that we're seeing from the U.S. for the first time. I think people think that we're going to go further than we ever have before.
I mean, it would be pretty cool. 250th anniversary of the founding of this country over 4th of July weekend, Monday in Seattle against Belgium, if the U.S. were to, get to pass the round of 16. Randall, I heard you on Bloomberg Surveillance this morning with Paul and Scarlett. And Paul, let's talk about this red card situation. Yeah. Paul said this is why the U.S. is not taking, as a country, we will never be a powerhouse in soccer because these rules are just driving us crazy. And we're refusing to actually abide by these FIFA rules.
Yeah.
Can you explain what's going on with
that? Sure. So Flo Balogun, I believe he scored 3 or 4 goals. He's been a top man for our squad. He incidentally, it was an accidental contact to the ankle of another player. And so that gave him a red card. A red card means you are immediately kicked out of the game you're playing in and then the next one. So immediately, one of the best players is automatically eliminated from the most important game, you could argue, of the last 100 years for America. And so with that in mind, the rule is just very, very strong. It was an accident. There have been much more egregious red cards in previous World Cups. There's been a World Cup where someone headbutted another player. Mm-hmm. That is worthy of someone being suspended. Not someone tapping your ankle. And I understand this contact might hurt, but the player continued to play for the rest of the match.
He was part of the game. He was fine.
Well, what's the deal with that? Why? What is the determination that somebody gets a red card for something that seems accidental or it's incidental as part of the game and not malicious?
So the red card was given because they didn't deem it accidental. At the time, they gave the red card.
But they're going back and checking the video for offsides every time somebody scores a goal. Go back and check the video for this.
Right. Slow motion should be used for offsides. Yeah. Very particularly, it should be used for offsides. It shouldn't be used in an instance like this, which is a soccer play, which you should watch at
game pace. They slowed it down to frame by frame, and then frame by frame, you see him step on his ankle. So it looks pretty bad.
Right.
But if you just watched it, he was just tackling, he was just going for the ball. It was not malicious, but they deemed it malicious because when you watch it in slow motion, it looks that way.
So now, go ahead, Nora.
No, continue.
I was going to say, so now let's address the elephant in the room. Lionel Messi, the GOAT, my GOAT,
Okay,
had a
you're good.
very
My
similar...
son's GOAT, too.
Exactly.
Yeah, he's the GOAT. It's
Right.
undisputed.
So he had a very similar play earlier in the tournament where almost the exact same thing happened, and he was not called for a red card. You could argue that he had GOAT privilege. But what is going to be the effect of this sort of thing? I was talking to Vanessa earlier, Mexico, Canada, and the U.S. are performing phenomenally well for this tournament, and they're the host. That's great for FIFA. It's great for all three countries. Now you take a player who's turning into a star and you pull him off the field. It's not a good thing, and I think that what does FIFA do now? Like, they're not going to allow him to play, but is there going to be a review process in years to come? I think there should be.
And sticking with that performance, Vanessa, just during the break, you were talking to us a little bit about how the U.S. has been performing and how this could potentially be a historic moment depending on where we land.
I have been saying this from the start. I do think that if the U.S. was able to capture the audience, capture the moment of a home World Cup, that they'd be able to do something that we haven't seen in a very long time, since 1930 in this country, to win a group. We've only ever won one knockout game, right? So now we've won two. So will we win two in a World Cup? I think it's very possible. But Flo being out, it really hurts our chances. But we are performing better than anyone expected.
And I think the thing is like Belgium's a beatable team. This is not Belgium from 2018 and 2014 when they have essentially, and don't mind you, they beat us earlier this season as well, but the form that the U.S. is playing with right now, it makes you think and makes you believe, which is what audiences want. At the same time, if they were to beat Belgium, they would eventually have to play France or Spain or Portugal, and those are world powers. But America loves an underdog, and that's what we all want to watch.
And you guys have actually been going in person to some of these games. What's it been like on the ground? I feel like just in the New York City area between the Knicks winning and now we've got the World Cup just in the area in Jersey, I can only imagine how crazy it is in person.
The energy has been electric. It feels like the sports wave has not reached the shore in over a month, which normally this is the break period in sports right after the NBA Finals. But MetLife has been rocking for every single one of the games that I've been going to. The New Jersey Transit has held up just fine, even though I've easily expensed $98 a ticket to each one of these games, but that's what they're charging. And quite frankly, I think the tournament is going well. There were a lot of concerns coming into this about, if ICE would be at these tournaments, if people would be getting kicked out, all of those things. And the tournament thus far, the biggest controversy has been this red card. That is a win for FIFA, and unfortunately it's a loss for the U.S.
Vanessa, is it a win for Adidas? Is it a win for Nike?
I think it's definitely a win for the jersey
Randall's
sales as
holding
well.
an Adidas ball right
He's
now.
holding the ball. This is Randall's stress ball. He carries it with him everywhere. It's definitely a win for these companies, and what we're going to see is it a win for smaller companies? Cape Verde going through and what they were able to do, and the goalkeeper going, crazy the way he did. Capelli is a small, company. This is their first time ever at a World Cup, and now they have this insane Cinderella story that they've been able to follow. So their stock is something that's going to be really interesting to watch.
If I can just add on to that, I think Adidas, if you had to pick a winner right now, I would say Adidas is the big winner. Why? Because they have Lionel Messi. There is an unlimited supply of Lionel Messi jerseys, whether it is for Inter Miami, if it's for Argentina, you can go and get one. If you are searching for a U.S. jersey right now, Nike is a supplier, and you can't find them. There are multiple stories out about it right now, whether it be The Athletic, whether it be the international papers, and that's a problem. You should always expect, whether it's the Super Bowl, the NBA Finals, that fans are going to want these jerseys by the dozen, and they can't get their hands on them right now.
I shared this last week during our interview, but you can't even get your hands on a knockoff Nike jersey.
Yeah,
Exactly.
yeah, it's a real problem.
It's insane.
And I'd say the problem is that these moments don't come a lot. Like the next time that we'll be watching this it will be in Spain and Portugal, and the team could look very different. So when someone wants to buy a Christian Pulisic jersey, they should be able to go into a Dick's Sporting Goods or a Nike or elsewhere to go and grab one.
All right, we have 10 seconds left. You're looking good for Monday night, U.S.?
I feel good about Monday night. I actually think the odds are pretty even right now, so I think we're going to be good.
2-1 U.S.
All right.
Okay.
You heard it there. Randall Williams, Bloomberg News senior reporter, Vanessa Perdomo, Mac Leon, Bloomberg News Sports business reporter. They are the co-hosts of the Business of Sports podcast. You've got to check it out at Bloomberg.com, on the terminal, and wherever you get your podcasts. Coming up next on Bloomberg Business Week Daily, we got stocks on the move. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. That's Nora Melinda. She's in for Carol Masser on this Thursday, the 2nd of July, 2026. It's a day that I mentioned really feels like a Friday.
It feels
Although
like a Friday.
no ice cream at the Bloomberg office.
I know, they cheated us
Fridays.
today.
We get Fridays. We get ice
This is
cream.
what we look forward to. But
Yeah,
I think
it's
that
okay.
we're kind of sporting the red, white, and blue.
I
if
did
I
not
do
do
say
that
so.
on purpose, but we are.
Myself.
Jess Menton is doing it too.
Yes, all around the table here.
We are just a little over an hour from the close of equity trading here. The S&P 500 down 0.3%. The NASDAQ Composite down more than 1%. In the S&P 500, given that 171 stocks are actually declining and more than 300 are higher, it comes as no surprise that some of the mega cap names are dragging the index lower. Information technology down 1.7%. Communication services down 1.2%. Consumer discretionary down as well. Taking a look at the NASDAQ 100, the tech-heavy index, it's down more than 1.8%. We can go ahead and round that to 1.9%. In the NASDAQ 100, though, you still have 55 stocks higher, 47 are lower. There are some big names, though, that are dragging the index lower.
And as we were talking about earlier, we're just clearly seeing this rotation, a lot of investors ditching the tech space, but we do still see healthcare, consumer staples, both of those holding up. And we did get this mixed jobs report, so there's a lot to consider right now as we head, or end, I should say, this holiday shortened week shortly.
Well, let's take a look at some stocks on the move today. I'm Tim Stenovec along with Nora Melinda. We're joined by Bloomberg News Deputy Team Leader and Senior Reporter Jess Menton. Hey, Jess.
Hey, so it's been fun. I'm glad y'all laid that out because it's an interesting dynamic within the markets because like y'all said, you have the NASDAQ 100 down more than 2%. If you look at the VIX, though, below 17, and then the equal weight index, the SPW, marginally higher. So to Nora's point, where you're seeing healthcare outperforming some of those dividend pairs, on the opposite side of that is, of course, technology. So I wanted to start off with SanDisk as some of the top stocks that I'm watching. SNDK is the ticker symbol on this, down about 14%. So this would be its worst day since February 4th. But this comes on the back of the information was actually reporting about Anthropic and how they're starting early stage work on its own AI chip, potentially holding stocks with Samsung Electronics, about a potential manufacturing partner there. But of course, if you pull it back and just look at the stocks in general over the last 2 days, down about 12%. I can't fail to mention, though, the second quarter was its best quarter on record. And then even the first half for chip stocks was the best first half relative to the S&P 500 in history. So you're starting to see some of those chip stocks give back those gains, and specifically more of those production makers today. And then if you're looking at that, NVIDIA is still down about 2%, but much more pain, though, for those production type chip makers in the double digits today.
Yeah, Tom Thornton over at Hedge Fund Telemetry sending me some IBs on the Bloomberg terminal. Tom, thanks for always getting in touch.
I know Tom
You
as
know-
well.
hey, he's a
Known
big
him a long time.
And he watches the semiconductors closely.
He does.
And he's reminding me that Micron is at its lowest. He said it could be making a 1 month closing low today. It's not there yet. It's at its lowest going back to June 10th. So not quite a 1 month low. But he and many others are watching these stocks closely, especially after what happened in Korea overnight.
Of course, and then SanDisk, even if you look before today and yesterday for the first half, the 12 over a 12-month period, I mean that stock was up over 4,000% and up over 800% in the first half of this year, the best performer in the Nasdaq. Obviously, if you're looking at the S&P 500, so giving back some of those gains, but still a huge run here for SanDisk as well as Micron.
So from semiconductors, let's stay a little bit in the tech space, but we'll call it autos. Tesla.
So if you're
What's going on?
Yes. So Mag 7 specifically, if you're looking at that basket that we have in the terminal, BM7T is the ticker on that. Tesla is the biggest decliner in the Mag 7 today, down about 8%. TSLA is the ticker symbol for Tesla. So worst day since July 24th of last year. Unfortunately, even though it actually beat on a number of metrics for when you're looking at those deliveries, up about 25% year over year for the second quarter. That stock was up for 4 consecutive straight sessions leading into this, so potentially being kind of buy the rumor, sell the news event. But on the flip side of that, Rivian, RIVN is the ticker, up 8%, so on pace for its best day since February 13th. But you're seeing a little bit of a different story there. It also raised its full year guidance in sales outlook, so you're seeing a bit of a brighter spot for Rivian, even though you saw Tesla still beat on a number of metrics.
Okay, we talked Tesla and Rivian. Let's go to some pharmaceutical names. mRNA, Moderna.
So this
going
has
on?
to do with some of the equal weight, and while we're seeing that outperform what Fedora was talking about earlier.
Yeah.
So you're seeing those dividend payers. So mRNA is the ticker symbol for Moderna, up 9% on pace for its best day since June 26. But if you look year to date, though, it's been quite on a tear, up 168%.
Wow.
Of course, I have to point out, been down for 4 straight years in a row, was one of those COVID darlings. But since its Science Day was actually a week ago on June 25th, it announced some positive developments when it comes to vaccines and mRNA, but that stock's actually up 30% over the last week since that Science Day. So you're seeing that, as well as Boston Scientific, other dividend payers in the healthcare space higher
Yeah,
today.
it's still, even with today's increase in what we've seen this year from Moderna, it's still a far cry from what it was in those COVID vaccine days. I think also investors are struggling with what do regulators in this White House?
Very different than what was like that 5-6 years ago.
Exactly. Jess Benton, Bloomberg News deputy team leader and senior reporter here in our Bloomberg studio. For more conversations like this, check out our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. You can check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. Coming up next on Bloomberg Business Week Daily, it is a hot one. We're talking the heat wave next.
From ABC News, I'm Michelle Franzen. Sweltering heat taxing millions in the Northeast and Midwest and breaking records. New York City officially hitting 100 degrees already today for the first time in 14 years. The dangerous heat dome hitting the July 4th weekend and also Americans' 250th celebrations. ABC's Rihanna Nally is at Rockaway Beach in New York.
That scorching heat dome smothering 30 states is expected to hit its peak today, straining the nation's power grid.
I'm just not going to leave my apartment. It's getting hotter and hotter.
Several major cities declaring emergencies as temperatures soar into the 100s.
Travel could also be impacted by the heat, whether you're driving or flying. ABC's Matt Rivers is at Newark Liberty International.
More than 72 million Americans will be traveling at some point over this holiday period. And if you are flying, today will be the busiest day for that. The FAA is saying that they'll be handling more than 52,000 flights today. That is thousands more than it handles on a typical day. United saying that they will be flying themselves 6 million passengers alone across this holiday weekend.
New details concerning the health of Senator Mitch McConnell. Dispatch audio reviewed by ABC News shows emergency responders went to McConnell's home earlier this June to attend to an unconscious person who appeared to be in cardiac arrest. ABC's Selena Wang has more.
It's not even clear at this point if he's still even in the hospital. So just to walk back in terms of the timeline here, McConnell has not been seen on Capitol Hill since June 11th. Then on June 14th, McConnell's spokesperson confirmed he was admitted to the hospital, saying he's getting excellent care. Then on June 22nd, his office indicated McConnell was still working on Senate business, but would not be on Capitol Hill for votes.
The two daredevils who scaled the Empire State Building yesterday appeared before a Manhattan judge. Angelina Nicolau and Ivan Kuznetsov were put on supervised release until their August court date for the stunt. They are facing a variety of charges. You're listening to ABC News. Mediated talks between the U.S. and Iran are progressing, according to Pakistan's foreign ministry. Iran, though, still has not shown a full commitment to the terms laid out in the memo of understanding, including how ships navigate the Strait of Hormuz and whether Iran will make vessels travel a specific route, and whether Iran will allow international nuclear weapons inspectors inside the country. ABC News contributor and former Defense Department official Mick Mulroy.
They are very inconsistent on how we and Iran interpret the MOU, which seems to be plain English, at least for us. But this is going to be something that, well, if it gets worked out, it's going to have to be worked out in face-to-face negotiations in person. Simply going back and forth on social media doesn't tend to resolve anything.
In New York City, excitement building over speculation. Taylor Swift and Travis Kelce will have their wedding at a famous sports arena.
Crews at New York Madison Square Garden are intensely unloading equipment in anticipation for the event of the summer. A law enforcement official briefed on the matter, telling the Associated Press global superstar Taylor Swift and Super Bowl champion Travis Kelce will have their wedding Friday night in that arena. The event is for about 1,000 people and is a 12-hour party beginning with a cocktail hour at 4 o'clock Friday afternoon and scheduled to last until about 4 a.m. Saturday morning.
ABC's Morgan Norwood. I'm Michelle Franzen, ABC News.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Nora Melinda from Bloomberg TV. She is in for Carol Masser on the last day of trading on this holiday shortened trading week. Nora Melinda, how are you? By the way, thank you for being here.
Thank you for having me.
Oh, we'll have you anytime.
Excited as we're heading into this, patriotic weekend. Got the blue, the red, the white. We're ready.
Patriotic and warm weekend. We're going to talk about that warmth and what it means for energy prices and for the electrical grid in just a minute. In the meantime, the S&P 500 under some pressure. The NASDAQ composite under pressure as well, 1.4% to the downside. In the S&P 500, the majority of stocks are moving higher, but still, some mega cap names are taking the index lower. I mentioned the heat. We're going to have more from Charlie in just a minute, by the way. I mentioned the heat wave. Power prices on the largest U.S. grid surging as the eastern part of the country is struck by what is forecast to be the hottest day of the year so far. Lauren Rosenthal is going to be joining us in just a minute. She's Bloomberg News weather reporter. She's been all over this story from every angle, not just, where the power is going out and the implications of this on the energy grid, but also what the outlook looks like for the next few months as well.
I mean, it's just insane. I ran out just for 2 seconds to run to Chick-fil-A. Don't go outside in a suit. It's just that hot.
Yeah, I got a notification that there's a community brownout in my neighborhood.
Yeah.
And so we'll see.
We'll
Fingers crossed.
Fingers crossed, everyone.
Yeah. Also, on autos, Rivian is up, Tesla lower, even as Tesla vehicle sales beat Wall Street's modest expectations by a wide margin. Gaining in a slower growing global market for plug-in cars, Craig Judell from our autos team stops by and tells us what's going on.
And we can't forget about the wedding that's supposedly supposed to be happening.
Even if we want to.
At MSG. Yeah. I won't be anywhere near the area.
Well, yeah, you won't be allowed to get anywhere near the area.
Right, they won't let us in even if we wanted to. Of course, we all know this is called the quote-unquote Taylor Swift tax, and is starring Bad Blood with Rhode Island homeowners. So we're going to be talking a bit more about her.
Yeah, forget the wedding weekend. Let's talk about what's happening in Rhode Island, which Carol thinks is where she should actually be getting married. But
and I think that's a valid thought.
All right. I don't know what Charlie Pellet has to say about all this. He's watching the markets as we get less than an hour of the way from the close of trading. Hey, Charlie.
Well, hello there. I wish the happy couple very well indeed. I'd be happy to give them a toast if they'd like. Right now, we have got the Dow higher, the S&P, NASDAQ. They are both retreating right now. Internals for the market, fascinating right now. Yes, the S&P is lower. Most stocks in the S&P 500 index are higher. You're on the DES page on the S&P 500 index. We got 322 higher, 181 lower right now. Bottom line, S&P is down 0.5%. Dow Industrial is up 327, up by about 0.6%. NASDAQ, meanwhile, is slumping 1.3%. The NASDAQ 100 index down 2.2%. All of this because of weakness weakness in chip makers. The SOX, that is the Philadelphia Stock Exchange's semiconductor index, down now by almost 7%. The VIX below 17. We have got the Russell 2000 index, by the way, lower as well, down by 1.2%. 10-year 4.48%. It is a jobs Thursday. The 2-year 4.13%. Spot gold up $87 the ounce, up 2.2%. West Texas Intermediate crude 68.46 a barrel, down now by 0.2%. Hiring did slow sharply in June, even as the unemployment rate fell to 4.2%. Non-farm payrolls increased 57,000 last month after downward revisions to the prior 2 months. Blackstone's QTS is walking away from plans to build its portion of a 2,100-acre data center campus in Virginia, handing a win to residents who have been fighting for years to topple the project. Blackstone shares, they're up by 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you for that update, Charlie. Hope you're staying cool this weekend, or is it going to even be possible if the power is out? Power prices from New York to Virginia surging as sweltering heat threatens to overwhelm U.S. grids and upend travel for the Independence Day holiday. We just talked about some of the outages that are happening in parts of New York. This dangerous heat wave that is trapping over New York City is also trapping people in the city. For more, I want to bring in Lauren Rosenthal, Bloomberg News weather reporter. She joins us from New York. You know, you go to your bio page on the Bloomberg terminal, and you've written so much about this heat wave just in the last couple of days, Lauren. First, I just want to start with an update on what we're hearing from Con Ed, the utility provider here in the city, and then broaden out the conversation to a little bit more about the Northeast. So we did hear that some places in the northern part of the city were without power. What's the latest?
Yeah, there were some cuts to homes in the Riverdale neighborhood up in the Bronx while crews work on repairs. And the company's also asked about 89,000 customers in the surrounding area, in City Island, some other parts of the city, to cut back on power use. So don't run washers or dryers. Try to limit air conditioner use where possible. So if you have multiple units, like just run one and turn up the thermostat if you can to reduce stress on the system while they make repairs and try to shore up equipment to get through the heat wave.
Are we supposed to be doing that everywhere, Lauren? Or just in the areas that are...
New York City is under what's called a heat emergency, which means the official advice from city officials is to turn up the thermostat on your cooling system to 78 degrees. That's if you're a home, that's if you're a business. We'll see how many people actually comply.
Understandably so.
I feel like there's some Nobel Prize winning economics paper about that could be written about this, and are individuals actually going to make the cuts for the community?
I mean, I'm walking around outside. I have my phone in my hand, and my phone's just on fire, simply from the heat.
Not yet saying it's too hot to use. That ever happens where
it starts putting off an alert?
Yeah, well, the temperature says you have to lower the temperature of the screen says you have to lower the temperature of this phone in order to actually use it.
Yeah, it's just insane. But Lauren, tell us, I think that this could be the hottest day ever that we're about to see, but tell us how this how it's been historically.
Yeah, so New York is seeing its hottest day measured in Central Park since 2012. We're probably going to come in shy of the all-time record, but it is for sure the hottest it's been in recent memory, indeed, in more than a decade. There are, some parts of the country closer to the Washington, D.C. area, actually, heat and humidity are more intense, believe it or not. And we are getting close to some records around the Washington Reagan International Airport. But for the most part, we're looking at temperatures above 100 degrees for a really large swath of the East Coast, not just today, but also tomorrow, and cooling off slightly for the 4th of July holiday, but honestly not by much.
Heat dome is the responsible party for this. What is a heat dome, and why do I keep hearing about these heat domes?
Yeah, I mean, it's kind of what it sounds like. Imagine if you're getting room service, one of those silver dome trays that traps the heat in and keeps your food warm. There is a high pressure system that's gotten stuck over the eastern U.S., and it's essentially trapping warm air close to the surface. We do have a cold front that's on its way coming east. It can cause potentially some severe thunderstorms, and it may ease the heat a bit in the coming days. Looking ahead into next week, cooler temperatures are on the way for the East Coast. We will be a little bit closer to what's considered normal for this time of year.
Why do we also get these air quality alerts when temperatures are so high?
Yeah, a lovely mix of intense sunlight and urban pollution. The sun reacts with compounds in exhaust, in emissions from buildings, and can increase concentrations of what's called ground level ozone. So if you step outside in the summer and it kind of smells like batteries, that's ozone. It's not great to breathe in, particularly if you have asthma or you're working outside for an extended period of time.
This is just a nice way to start the show.
It's a nightmare. Yeah. I'm not looking forward. So what should people be doing? You mentioned that if you're staying inside, setting your AC to about 78 degrees, that's what Mom Donnie is suggesting. What should you be thinking about in terms of precautions if you do end up having to be outside during this weekend?
Yeah, really limit your time in direct sun if you can. Take breaks in a cooled space. Watch your fluid consumption. Drink more than you think you might need, and not just water, but also try to replenish your electrolytes, so sports drinks, coconut water, those kinds of things. But for the most part, don't push yourself. Try not to overexert yourself. Really be mindful. Like, the heat is no joke, and intense sun, cloudless skies can make it a little bit worse.
This is not Lauren Rosenthal's first heat dome. I can tell. She knows her way around a heat dome.
She's seen a few things.
Power prices, Lauren. I want to broaden this conversation out to other parts of the Northeast. PJM interconnection. It's something we talk about whenever we're talking about demand or supply of electricity, or even grids. What are we going to see when it comes to prices in which parts of the country?
Yeah, so prices are likely to spike, and indeed already have system-wide. PJM serves the Mid-Atlantic, so we're talking about the Washington, D.C. area, parts of Virginia, into the Carolinas. We have already seen prices elevate. We were close to $2,000 yesterday evening as temperatures started to climb and we hit the hottest part of the day. Folks got home from work and cranked up their air conditioners. Prices can go even higher in the Dominion portion of the grid. So this is a part of Northern Virginia, the home to Data Center Alley. Large concentrations of data centers, big industrial users. The demand for power is high. The system is operating in a low-level grid emergency. They've gotten permission from the U.S. Department of Energy to sort of crank equipment to its limit, max out generation, sidestep emissions standards and environmental standards as needed in the process. But, things are tight and will continue to be. The system is getting close to an all-time demand record. We'll see if they actually get there.
Wow. Well, Lauren, what can people do to save a buck or two, right? I feel like there's always this debate as to whether or not you leave your AC on all day long or turn it off and turn it back on, same with the lights in your house. In this moment, is there any sort of way you should be thinking about using your air conditioning system as to not maybe see as high as an electric bill as leaving it on all day?
Yeah, officials always like to say, you'll hit a point where you may crank down the temperature on the thermostat as low as it will go, but the heat in your apartment or home just won't break. That's a sign you should probably crank that thermostat back up. Reduces strain on the grid, reduces your power usage. Eventually in the overnight hours, temperatures will come down a little bit. Granted, not as much as most of us would probably like, but cranking up your air conditioner in a desperate attempt to cool your space honestly probably won't help that much.
Before we let you go, Carol and I were in Las Vegas a couple weeks ago. It was 114 degrees.
Oh my God.
And it wasn't that bad because the humidity isn't there. Why is this so much worse at 100 degrees in New York?
Oh man. Well, humidity makes hot weather feel hotter. You're out there in the desert. It's nice and arid, not a lot of ambient moisture. We have a lot more water in the eastern U.S. Also, as the climate changes due to human activity, the air is capable of holding more moisture, so we can get more of these kind of soggy, oppressive days. And unfortunately, it does make things feel hotter.
Lauren Rosenthal, Bloomberg News weather reporter, joining us from New York. She is going to be busy, and I'm guessing not taking too much time off this weekend. Check out her reporting and the entire team's reporting on the Bloomberg Terminal and at Bloomberg.com. Well, this Independence Day joined Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid, right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app Saturday, July 4th, starting at 7 a.m. Eastern Time.
Everyone to watch.
I heard there's going to be some hot dogs at Coney Island for
Lisa Mateo. So that's going to be pretty cool.
That's going to be great. Very jealous.
Coming up next, a check on the auto industry as Tesla shares take a dive.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. The Dow higher, trading at a record, up 314 points now at 52,616. That is a gain of about 0.6%. S&P 500 index lower. It is down 39, drop there of 0.5%. Tough day for tech stocks. We've got NASDAQ down 1.4%. The NASDAQ 100 index hit hard, down 2.3%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, now down by 7.1%. All of this with a VIX just below 17, a 10-year at 4.48%. We got shorter dated bonds rising as a slower than anticipated increase in jobs bolstered bets that the Fed won't be raising rates anytime soon. The 2-year, 4.13% again. The 10-year, 4.48%. Gold up $78 the ounce to $41.09 for the precious metal, a gain now of 2%. West Texas Intermediate crude lower by 0.2%, $68.44 a barrel on WTI. Brent crude $71.59, little changed, up under 0.1%. Again, recapping here, we do have the U.S. stock market decidedly mixed right now. Yes, most stocks are higher in the S&P 500 index. It does remain lower, down by about 0.5%. Dow Industrials trading at a record, up by 0.6%. And as we have been reporting, Blackstone's QTS is walking away from plans to build its portion of a data center campus in Virginia, handing a win to residents who fought for years to topple the project. Blackstone shares, they're higher now by 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Nora and Tim, that is a Bloomberg Business Flash.
Thank you, Charlie. Charlie Pellet is a man of public transit. And if, everyone knows this, but his voice is the voice of the New York City subway. And no matter how delayed my subway ride is on the way home, when I hear Charlie,
it brings you comfort, right?
It brings me happiness. Yeah. But we're going to talk the opposite of public transit and autos, specifically U.S. autos. Shares of Rivian right now higher by 8%, 7.7% actually. Tesla shares down by about 8.4%. A couple different stories. When it comes to Tesla, shares are falling after the company's second quarter delivery beat failed to impress investors, even though it actually looked pretty good. 480,000 vehicles worldwide in the second quarter. It's a 25% jump from the year earlier period. It trounced the average analyst projection. And then Rivian raised its full year sales outlook as it begins deliveries of its low-cost SUV. Craig Trudell is Bloomberg News managing editor of Global Business Americas. His DNA, and actually, your history, your personal history,
absolutely,
is in autos too. This runs in your family.
Yeah, I have a grandfather who worked for General Motors for 25 years, so it runs in the blood. Absolutely.
We are so glad to have you back in the U.S. and back here in our Bloomberg Interactive Brokers studio. For years, you and I were talking many thousands of miles apart, and you were staying up late in London. So welcome back to New York. It's really good to have you here. Why is Tesla failing to impress investors today?
I'm very surprised by this market reaction because, yes, we did see a run-up in the stock. The 4 sessions leading up to today, we saw the stock move up 13%. So maybe that is sort of what's going on here of, selling the news even if it is positive. But I am sort of, reading these numbers and actually surprised at the upside where, if we think about where we were 12 months ago when, Musk was very unpopular, was having a lot of issues with sort of image problems and his closeness to the Trump administration. Tesla was in a really bad way in the first half of last year. So yes, the sort of year-over-year comparison is easier, but a 20+% increase in global sales is better than a stick in the eye, and this was not what the analysts were expecting. So a positive surprise, and yet a negative share reaction.
Yet it's still, getting beat, taking it to the chin, if you will.
Yeah.
And the stock is down about 13% so far this year. Why has it really struggled to regain that momentum that we once saw?
I think everyone's anticipating some of the things that you hear Musk talk about more so than the core car business, things like robo-taxis, which, has long been, sort of something that he's emphasized. But, I think there was some hope and some anticipation that he was actually starting to execute, that maybe this cyber cab that they showed, last year would actually be ready. It still is in testing. This is also a case, too, where, Model Ys that have been, in places like Austin, Texas, where you can hail a car that, they're branding as a robo-taxi. A lot of those still have safety drivers in them, and it's not a particularly useful service yet.
You talked about, just last year when there was so much conversation about Musk's involvement in the government and also how people were viewing him. And now we've got SpaceX that just IPO'd. Is there any concern for maybe Tesla investors that Elon Musk is still a bit distracted in the way that they felt that he was sometime last year?
I think there are some real questions about, just how much longer we're going to see these two companies operate separately. And that's something that, has been, I guess if you're in the news business and sort of, dreading something that is going to be a massive story and consuming your time, I think that's one that's sort of hanging over my head when I think about, what's going to happen next in Musk's universe is will Tesla and SpaceX combine? And some of his, longtime investors in both of these companies increasingly are talking about the merits of doing this on the grounds of, well, it would just be cleaner if Elon didn't have to worry about, paying more attention to one versus the other.
Maybe obviously be cleaner for his huge compensation package.
That might help too.
Yeah. I want to talk to you about Chinese EVs because you have the distinction of having lived in the UK where you actually see Chinese EVs on the road.
Yes.
BYD,
Geely.
Geely, okay, that's interesting. XPeng as well are sold there. I was thinking about this yesterday. I mean, the barriers that we have in the United States to Chinese EVs, which is basically like they cannot be sold here, protects Tesla so much.
Significant degree. And we've seen, I think that was a big part of the story last year. It was not just the case that Elon was, according to some people, damaging the Tesla brand, or in the eyes of some consumers, I should say. It was also the case that in places like Europe, there is so much more competition, and the Chinese have made up so much ground, taken so much market share, and you're really seeing that manifest not only for Tesla but the incumbents, right? When you hear just in the last few weeks this notion of Volkswagen maybe looking at eliminating on the order of 100,000 jobs. This is an industry that was already crowded with a lot of players that have been around a long time that has only grown more so as a result of all of these up-and-comers coming out of China.
People who listen or watch our show a bit know that I'm always referring to that story where Jim Farley, of the Ford CEO, basically let it out on a podcast that he was driving a Xiaomi Chinese EV that he somehow got permission to bring into maybe for market research, and how much he loved it.
He didn't want to give it back.
how much better? And that was more than a year ago at this point.
A couple years ago, yeah.
Yeah,
absolutely.
So how much better are these Chinese EVs than US EVs?
I think they're competitive. The battery technology is incredibly strong. This is not just a case of cost being better and undercutting going on. It is also very strong technology. The battery capability and the cost competitiveness absolutely is a major factor. And I think the idea that this is a country that for so long sort of set this as their North Star is the combustion engine has been worked on for how many decades now. We see a path to sort of differentiate ourselves by building up a battery supply chain, investing a lot, trying to stand up an industry where we can compete and win. There is so much capacity for batteries now that the differences in prices that are being paid in China versus the rest of the world, it's night and day. And so in this environment where there is overcapacity, so many players, I think there is ultimately this question of, will there be this shaking out? Can this continue in terms of there being so many competitors? But as long as this goes on, it's going to be really difficult for Tesla and the Fords of the world to keep up.
We're speaking with Craig Trudell, Bloomberg News managing editor of Global Business Americas. He joins us here in the Bloomberg Interactive Brokers studio.
So is there a day that you expect us to maybe see regulators, the administration being open to us having more of a presence of Chinese automakers here in the United States? I remember last year I was in Thailand, and that was the first time I got to ride in BYD.
On one hand, I think, can this continue in terms of we have this affordability crisis where now the average vehicle sold in the U.S. is on the order of $50,000. That's really difficult to sort of stand in the way of progress in terms of, bringing in products that people can actually afford. On the other hand, I do think that a sort of, counter to that is that it's kind of the one thing in Washington that still unites everybody is sort of China bashing, right? And so while we have heard President Trump, say, come on in as long as you build them here, I think, in Detroit and even just on Capitol Hill, I don't know that he necessarily, means what he has said when he has made those comments, because I think there would be so much, opposition to that from, the dealers that have a presence in every district, from the union workers who would be threatened by that, and the manufacturers that have seen what's happened when you let the Chinese in some of these other markets, be it Southeast Asia, Europe, and not just in China itself, which is exceedingly competitive.
Yeah, I was going to say, good luck winning Michigan or South Carolina again. If whatever party, I guess more so it would be Republicans in South Carolina, but Michigan is up for grabs typically still. And if you made a change like that, I think politically it would be
very difficult.
Very difficult, yeah. Craig, I drove upstate in my internal combustion engine vehicle over the weekend. Met my friend Brad, who drove there in his Ford Mach-E GT. He loves this thing. He can't understand why anyone would buy anything that's not an EV, yet Americans are not buying EVs like Ford thought they would 6 years ago. Give us a little autopsy report here.
I do think people take for granted just how much the simple sort of idea of consumer inertia is something that's very difficult to sort of overcome. This is the second most valuable purchase that we make after our house, right? Is buying a car. And so, maybe I'll put off, doing something that feels radical or feels different, something that I'm not comfortable with, till the next one. And we keep doing that and keep doing that. I think that's part of what's going on here. I think the fact that we did sort of, give it this college try under the Biden administration of maybe we'll try to replicate what China has done by throwing a lot of subsidies at this. We saw a lot of battery plants spring up, a supply chain, at least, the beginnings of an effort to stand that up. We weren't committed to it as a country. We've swung wildly in the other direction. I think there's a case to be made that we were on our way to sort of building scale to where we could have affordable electric vehicles that would appeal to the American consumer, but we didn't get to where we needed to before the plug was pulled, if I can, make that joke.
You can. You can, certainly. And you can come join us anytime. Craig Trudell, Bloomberg News Managing Editor of Global Business Americas. He joins us here in the Bloomberg Interactive Brokers studio. Check out Craig's entire team's reporting, not just on autos, but they do everything when it comes to global business. You can see that on the Bloomberg terminal and at Bloomberg.com. Coming up next, Brooke May is joining us. We're driving to the close on Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at the Dow now higher by more than 400 points. Yes, a record there. The S&P, NASDAQ, both in the red. But got to tell you, the drop in the S&P doesn't tell the true story. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are mixed, with the S&P cash down at 0.4% and the NASDAQ 100 down about 2% as the Dow climbs higher. Taking a closer look at the Dow, Apple, McDonald's, and Disney leading to the upside, with Cisco, Caterpillar, and NVIDIA declining the most. Tesla shares are headed for their worst close since last July, despite a record second quarter of deliveries, as investors are more focused on the company's AI efforts. Genuine Parts shares are climbing as it's reportedly received interest from O'Reilly for its autos unit. O'Reilly shares did subsequently fall on those headlines. Meanwhile, Blue Owl is up on the day as private credit woes wane and redemptions ease. Wrapping things up, oil is quiet as gold and Bitcoin rally, and the markets will be closed tomorrow for July 4th. I'm Jordan Fitzgerald. All yours, Charlie.
All right, I thank you very much, Jordan. Indeed, on the S&P, 330 stocks higher, 173 lower. Again, the S&P down 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
TikTok, everybody. It is just 17 minutes until the close of equity trading here on this July 2nd.
Almost there. We're almost
July
there.
3rd. I just got a notification, 2 notifications on my phone, extreme heat warning, alert in effect until 9 p.m. on July 4th. So that's
Tragic.
just for this area and lots of other areas too.
Here's what we deal with. Plus the humanity.
Yeah, exactly. Not great. You just heard the numbers from Charlie and Jordan there. The S&P 500, even though it's down 0.4%, as Charlie mentioned, it's not telling the story. 331 stocks are actually higher in there. 173 are lower. The NASDAQ down by 1.8%. The Dow at a record up more than 400 points, 0.8% to the upside. I want to drive to the close, and we're doing that with Brooke May, managing partner at Evans May Wealth. She joins us from Indiana. How hot is it in Indiana right now, Brooke?
It's hot.
Okay.
Got in my car yesterday and it said 100 degrees. I don't know if it actually got to that level, but it's hot and humid.
Okay, so you're feeling it as well, even in the Midwest.
Oh yeah.
Well,
I'll spend this weekend in a pool.
What are you feeling with these markets? Not just today, but the big picture that today's jobs report told us about. Really, the way that the economy is going right now.
Yeah. I know some were disappointed in today's jobs report, but I'm not. You know, we were expecting to add 115,000 jobs. We added 57,000. But when you look last month, we were expecting to add 80,000 jobs and we added 129,000. And job openings are 7.6 million job openings. So there are job openings out there. Unemployment ticked lower to 4.2%. That's a healthy labor market. The word we keep using over and over again is resilient, and I don't see that changing anytime soon.
So how do you think this really all factors in when we think about the Federal Reserve and interest rates, as we've really been seeing the market trying to price in their expectations here?
Yeah, it's interesting. Yesterday, when I looked at Fed funds futures, there was about a 90% probability that the Fed was going to have at least 1, if not 3 hikes. Today, after the jobs report, there was a 78% probability that we would have 1 to 3 hikes. All that said, I don't know that we'll see any movement in interest rates this year. When we look, when we look at unemployment at 4.2%, that's not alarming from a labor standpoint. And when we look at price stability or inflation, core PCE was up about 3.4% this last read, and it could tick up a little higher. But when you've got average hourly earnings at 3.5%, workers aren't necessarily upside down. So there isn't that pressure to move in one direction or the other. We very well could stay put as long as inflation stays in this range and hopefully ticks down, albeit it might be a grind.
Have you shifted expectations at all when we think about a new Federal Reserve chair at the helm, Kevin Warsh, as opposed to Jerome Powell? Are there any expectations that you guys are thinking about as it relates to whether or not the Fed will continue to be dovish or hawkish or hold?
Mm-hmm. I do think the Fed is going to remain independent. There is that pressure out there, and the eyes are on Warsh. Concerns that he might be too dovish under this administration, but I don't see it. I think the Fed is going to be data dependent, and right now we're in an environment where they're not necessarily going to feel that their hand is forced to move in one direction or another.
Mm-hmm. Well, when we look at the broader market, we know the S&P 500 did post its best quarter in about 6 years. Now that we're moving on to the third quarter of the year, we've seen 2 back-to-back days of declines. And over the past couple of weeks, we've been seeing a bit of a rotation in the market. What's your take on investors pulling away, at least as of right now, from tech and looking toward other sectors in the market?
I think it'd be a mistake to move too far away from tech. However, when companies do well, at some point there's profit taking. And headlines, you'll often see, causing rotation as well. But this is a really healthy market, really healthy corporate market, our corporate environment. When we look at the beginning of last quarter, our expectation was to have 18% earnings growth. Now we're expecting 23% earnings growth for Q2 earnings. That's incredible. And if we get double-digit earnings, which we very likely will, it's going to be the 7th consecutive quarter of double-digit earnings growth. So it's not just coming from the Mag 7 anymore. When you looked back a couple of years, about 2/3 of earnings were coming from the Mag 7 and only 1/3 from other areas in the market. That's flipped. Now we're seeing about 2/3 of the earnings coming from the other and only 1/3 coming from Magnificent 7 companies. So that broad earnings participation is very healthy. And this is an environment where you want to be an investor and you want to really have broad exposure, not necessarily overweight or underweight to specific sectors.
Brooke, one thing that we have this season right now, because we just finished the quarter, and we've talked a lot this week about all the superlatives of the quarter and the SOX, and what it did is now we're going to get a view into companies' earnings, how they did in the most recent quarter, and how they are going to think they're going to do for the rest of the year. Big banks are going to kick it off very, very soon. We're in fact going to hear from some companies next week, even though a lot of people are going to be out of town. How do you think we're going to hear? I want to talk about the big banks. How do you think we're going to hear from the big banks, especially when it comes to the consumer and the consumer health?
Yeah, I think that, right now, net interest margins should be decent. We're in an environment where defaults should still be pretty low, but we might get an indication of what defaults, could expect to come. I think it's going to vary from one bank to the next. But overall, we think banks are relatively healthy, and we would expect decent earnings.
Okay. That's pretty good. What about from other companies that are set to report? Delta Airlines is coming out soon. That's a good view, not just of consumers, but it's a higher end consumer, but also of the way that companies are spending on travel. What do you expect there?
I think airlines, that could be tough. Right now they've got fuel costs, and with fuel costs, that's going to cut into their earnings. So I'm cautious on airlines. I think that, without having more transparency into what that looks like, it's not some place where I'd like to put money. But broadly, I think earnings are going to be pretty decent.
Yeah, that's the general rule we continue to hear from analysts, from money managers, from investors. What changes your view there, though?
What would change my view on earnings?
Yeah, what would you have to hear to say, wait a second, this season's not going as we thought it would?
I think we'd have to see a meaningful movement in a key component, whether that be inflation, labor, regulation. Right now we're in an environment where things are pretty stable. We don't have a lot of volatility right now in interest rates or in the labor market. For example, right now the 10-year Treasury, it's down about 20 basis points from its high. And I wouldn't be surprised if we're at this level towards year end. So knowing what we know today, I wouldn't expect a big shift in earnings expectations unless we see something meaningful transpire that's not currently in the mix.
Brooke May, managing partner at Evans May Wealth, joining us from Indiana, where yes, it is hot, even though not as
under this heat dome of the Northeast. Coming up next, it is our cross-platform coverage of the market close. The closing bell starts now.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily, and we are just a few minutes away from the close of trading, about 6 minutes here in New York. The S&P 500 down about 0.2% off its worst levels of the day. Still, vast majority of stocks higher in the index, 343 to the upside, 160 are lower. NASDAQ Composite down about 1%, that too off its best levels of the day, and at close to best levels of the day, the Dow at a record up more than 500 points.
Yeah, we're really seeing these markets really trying to figure out where they want to be right now, especially when we think about this rotation that we've been seeing with a lot of the market pulling away from tech and delving more into some of those defensive sectors that we're seeing, like healthcare and consumer staples. I've also got my eyes on the VIX just above that 16 handle.
All right, so let's talk a little bit about real estate. This is something near and dear to your heart. Do you still cover real estate?
I do cover real estate for our TV side.
Okay.
Both commercial, residential, you can name it.
Okay, because you were doing it at Bloomberg News too.
I was doing it on the print side for about 4 years.
All right, so let's talk a little bit about real estate, because Ken Griffin, the hedge fund billionaire, spent roughly $125 million to acquire the 138 condo units and ground floor retail at the Solaris in Miami's Brickell Financial District.
And he did use mysterious, as the article's calling it, LLCs to make unsolicited bids to residents, with early sellers receiving about $500,000 and the last holdouts collecting more than $1.5 million.
So this is interesting because it is part of his efforts to assemble land around the headquarters of Citadel and Citadel Securities and develop a multi-billion-dollar complex in the area.
You'll recall, well, Ken Griffin has a fortune close to $57.5 billion. That's according to the Bloomberg Billionaires Index. You'll recall the back and forth he had with Mayor Mamdani earlier this year on tax day. And the commentary around, okay, well, this is somebody who already moved from Chicago, out of Chicago, and we don't know what Miami will look like for Citadel or Citadel Securities, but the concern that I think a lot of people in New York have is, okay, if they're investing more in the office down there, does that mean less of a presence in New York?
And that's the thing, at least from the sources that I've been talking to, execs at some of these private and public real estate companies, they're still betting on New York City. I had an interview a few months back with CBRE's CEO, Bob Salentic, and he was talking about the fact that he was still bullish on New York City, despite the tax environment and the business environment that we've been speaking so much about as of late.
Yeah, I think that's talking to folks as well, I think I hear the same thing, which is like the talent. Where do the kids who graduate from college move to after they graduate from across the country?
Right.
They move to New York. Do you have the pipeline if you are outside of New York?
Right, and I mean, there is JP Morgan. They do employ more people in Texas than they do in New York City, and that was kind of begging the question as to whether or not all these other companies were going to start doing the same thing, and we would see talent leaving the city. But that doesn't seem to be the case widespread at all.
Let's talk a little bit about smoking.
Okay.
Did you see this story? This is in Bloomberg Business Week. Morgan Meeker writing about how airport smoking lounges defy the global decline of smoking. It's funny, when we were in Las Vegas 2 weeks ago, I noticed this. There's literally a smoking lounge in the airport right when you get off the plane, and the smoking lounge is like, you go in, you have to show ID, but it has slot machines all over, so you can actually smoke cigarettes and gamble.
So correlation.
While you're in the
Right.
while you're in the airport.
Yeah. No, I mean, you said this was Vegas?
Yeah, this is. I mean, there's.
Yes, and I remember going through that Vegas airport, seeing it there. I don't think I've seen any smoking lounges, at least when I'm going through LGA and JFK. I'm sure they're there.
I don't know if they have them in the U.S. or in the U.S. outside of Las Vegas.
Yeah.
Airport smoking lounges remain common despite growing hostility to smoking, with over 100 countries still allowing smoking indoors. Anti-smoking groups say these spaces are evidence of the lingering influence of the tobacco industry, which is fighting to maintain the social acceptability of smoking in airports.
Yeah, and the WHO saying that about 89 countries have banned smoking from airports completely. But when you think about some of the lounges that do have smoking areas in airports, it's basically sponsored by tobacco companies.
That you see outside of the U.S.
Yeah.
Sure. Yeah, totally.
No doubt.
Coming up next on Bloomberg Business Week Daily, it is our cross-platform coverage of the market close. It's the closing bell.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here today with Bailey Lipschultz in for Katie Greifeld. We're taking you through to that closing bell with the global simulcast. Tim Stenovic joins us in the radio booth. Nora Melinda in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms. That's television, that's radio, and that is YouTube. A flat to higher open for the S&P, the SOX, and the NASDAQ today. We bottomed out, though, Tim Stenovic, right around 2 p.m. A big sell-off, and now seeing a bit of dip buying heading into the closing bell.
Yeah, it's notable to see the S&P 500 could actually end in the green depending on what happens in the next couple of seconds. We should, because Katie's gone, just say that the Dow, which is her favorite index, is at a record.
It is.
More than 1.1%, 580 points to the upside.
And it's interesting.
I love it when you quote Dow points.
Oh, yeah.
You know it's a day.
Only when Katie's away.
Yeah.
We'll give it to her today. Well, I mean, we've really been seeing this broader rotation. That's what we've been hearing from the guests that we've been speaking to here on Business Week. And we've continuing to see this rotation from tech into some of the more defensive sectors in the market. And it's just interesting as to whether or not we're going to continue to see this, especially when we think about the fact that the Philadelphia Semiconductor Index just saw its best quarter on record. But now we're seeing a pullback today.
All I really care about is if we see a bounce back on Monday for semis, Romaine. This has been a market that you see a sell-off. We see some news overnight across Asia. Again, we have a shortened trading week this week. Long weekend, there could be some news coming out of South Korea that I think could spark some excitement or pessimism.
Yeah, and speaking of the shortened trading week, so Carol gets a 4-day weekend. Is that how this works?
Well, she's actually at the wedding at Madison Square Garden.
Oh,
yeah.
I didn't know she was one of the bridesmaids.
She's one of the 1,000 people reportedly invited.
Oh, well, congratulations to those girls.
She couldn't tell me anything because she signed an NDA.
All right. Well, the Dow Jones Industrial Average rallying, as Tim said, about 592 points on the day, up about 1.1% to a record high. You hear the cheering there on the floor of the stock exchange in the NYSE as you see several of the service members there in town here for the July 4th and, more importantly, the 250th celebration of our Declaration of Independence. The S&P 500 is going to close flat on the day. The NASDAQ down about 0.8%. The Russell 2000 also going to be down on the day by about 0.6%.
The chanting kind of sounding like what we heard at the game last night in Santa Clara, California, when the U.S. won 2-0 against Bosnia-Herzegovina. So check it out on Monday night, U.S. versus Belgium. Did you guys know I was such a big soccer fan?
Tim, you're a big sports ball guy, is what I heard.
Guy.
Every sport. You did call out, though, that it wasn't in San Francisco, even though TV would try to tell you otherwise.
I know. Come on. Everyone knows it's not really in San Francisco. Hey, in the S&P 500, the vast majority of stocks moved higher. 357 higher, 146 fell today, even though things finished pretty much flat.
Yeah, and looking at this sector level, Tim, you wouldn't expect this to be a market that was flat. Healthcare up more than 2.5%, consumer staples up in a similar fashion alongside utilities and materials, both up more than 2%. But the big drag, info tech down 1.5%. So a lot of green on that screen, but the one that matters, deep in the red.
Let's take a look at some stocks that moved to the upside today.
Wow, Tim, I see you're kind of rattled with Carol not there. Yeah. He just kind of fills the vacuum.
I hope she's watching. You think she's watching right now?
Probably rooting for you.
I hope so.
All right, well, let's talk about what Apple did, up more than 4.8% today. This after Nikkei reported that Apple has told its suppliers to produce about 10 million foldable phones this year, up from an earlier forecast of 7 to 8 million units. It's part of plans to release at least 5 new models in the second half of this year and the first half of next year. This is supposedly the long-anticipated foldable phone. Mark Gurman did report last month. Camera-equipped AirPods are scheduled to launch in late 2027, and the company is also preparing a slew of new chips for future devices built on the next-generation silicon manufacturing process. Apple shares higher by 4.8%. Also, shares of Rivian moving to the upside today. This after the company raised its full-year sales outlook. It begins deliveries of that lower-cost SUV. Rivian shares up by more than 8.4% today. The company expects to deliver between 65,000 and 70,000 vehicles this year. It delivered 12,200 EVs in the second quarter. That new R2 SUV is seen as key for the company's ability to eventually reach profitability. Still, the starting price around $58,000. And finally, shares of hospital operators gained Thursday. Tenet Healthcare was up today by more than 6.5%. HCA was up by 4.4%. This after the Centers for Medicaid and Medicare Services proposed revising payment policies for hospital outpatient departments and ambulatory surgical centers. That begins in 2027. It targeted drug cost reductions and site of care payment disparities. We also saw Universal Health Services move to the upside as a result of this, Nora.
Well, let's talk about some of the stocks that ended in the red. We've been talking so much about chip stocks today. The worst performing stock in the S&P 500 actually belongs to SanDisk. So we did talk about the Philadelphia Semiconductor Index logging its best quarter ever just for the second quarter. But the past 2 days, it's been in the red, sinking more than 5% today as we end on this holiday shortened week. Now, the information reported that Anthropic has begun early stage work on its own AI chip. And it's also held talks with Samsung as a potential manufacturing partner. So you clearly saw that pressuring a lot of these semiconductor stocks, Micron, SanDisk, Applied Materials also in focus. And from there, I want to pivot over to automakers Tesla, ending down about 7.5%. The worst performing stock within the Mag 7 today. We did talk with Craig Trudell. Of course, he is the managing editor of Global Business Americas for the print site here at Bloomberg. Talking about the fact that he was surprised. Of course, we did get some second quarter deliveries for Tesla that did top expectations, but it was still not high enough in terms of what we were expecting from the investor standpoint. It didn't meet the bar. We did see the stock seeing its biggest drop in nearly a year. And lastly, over in the consumer space, retail. Looking at American Eagle, down about 4.9%. 4.8% on the day. Now, this is a new CFO that is effective next month. We've been seeing some shifts within the company. We know that the stock has really been pressured this year, generally speaking, just from the macroeconomic landscape, consumers pulling back on discretionary spending, and some diverging brand performance that we've been seeing at the company, and persistent margin pressures.
All right, let's check in on yields here. A mixed picture on the day. Remember, the bond markets did close early at 2 p.m. ahead of the observance of the July 4th holiday tomorrow. Lower yields on your 2-year and your 5-year, higher on the long end of the curve, though we should point out on a weekly basis that entire curve did shift higher.
I hate to be such a downer ahead of a holiday weekend.
Uh-oh.
Did you know that we're not having as much fun in the U.S. anymore as we used to?
Okay.
Here's something that's interesting. Double-digit percentage drops in hours spent on arts and entertainment activities.
Yeah.
We attend fewer sports or recreational events. We attend fewer, or when we host fewer social events. Ben Steverman writes for Bloomberg Business Week about America suffering from a fund shortage. And one of the metrics that he looks at, Nora, is golf courses, bars and nightclubs that have closed. And also, we just don't own as many boats.
Yeah, he says that Americans now own 1.3 million fewer boats.
Wow.
I never owned a boat, but apparently that's the case broadly in the United States.
Don't they say the best day of a...
I was about to say, every boat owner I know all just complains about owning a boat.
Right.
So, I've always said, the best way to own a boat is to just have a friend who owns a boat.
That is the only way.
Deal with it. But I did think it was an interesting story, and it kind of talks about this idea. I don't know, it seems a little pessimistic, but then it kind of reminded me, there was another story that the Wall Street Journal had out today, how bowlers apparently aren't having as much fun, at least the serious bowlers, because they're saying like all these bowling alleys are just turning into nightclubs. They talk about Lucky Strike, which is obviously just trying to appeal to basically people who don't take bowling seriously. But look, they're having fun. Look at the kids. I don't know what they're doing there. But if you actually have a real bowling league and you're trying to keep score, apparently it's not the best time.
Yeah, it's not the best time, but the funny thing is, Romaine, I think these are companies that, I don't know, want to make money, and what generates revenue? Selling beer, selling snacks, inviting the kids and having them blow $35 on the arcade games. It is kind of interesting, according to that
$35. Have you been to an arcade lately?
I have not been to an arcade, but I did spend money
That's cute. That's like the first 10 minutes.
Bailey, just so you know, they don't even accept cash anymore. You buy a card ahead of time.
Yeah. I hate
and
it.
you just swipe the card.
Tim, do you use Bitcoin when you do that, though, or do you use...
No.
No, wouldn't that be nice?
Not one reference to The Big Lebowski, guys.
Oh, sorry.
Talking about bowling, I'm just extremely disappointed.
You were waiting for that.
It really ties the room together.
It's fine. I'll have a White Russian tonight, though.
There we go. Okay, that's good. I hope you guys get some bowling, or at least do whatever you can to stay cool this week. And a very happy 4th of July to both of you.
Same to you.
Yeah. We'll see you again on Monday after this 3-day weekend for our global simulcast. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Nora Melinda. She's in for Carol Masser on this Thursday, the 2nd of July, 2026. It's the end of a holiday shortened trading week. Just to remind everybody on how we closed out the day today, the S&P 500 finished in the orange today.
Yeah, we can call it orange.
It's not red. Oh, it's orange on my terminal.
I'll take it.
It is 357 stocks moved higher, 146 moved lower, but unchanged is another term for that. The NASDAQ was down 0.8%, and the Dow did close at a record up more than 1.1%.
You know what I like that a lot of people at Bloomberg say? Unched on the day.
That's what it is.
Unched on the day.
Well, let's talk a little bit about Taylor Swift, because everybody is talking about this wedding that is supposedly happening this weekend at Madison Square Garden. But the Bloomberg audience knows that's not the most important thing to be focused on, especially if you live in Rhode Island.
This is very true, because we also have what they're calling the Taylor Swift tax.
Greg Ryan writes all about it. Greg joins us from Boston. He's Bloomberg News Boston Money and Power reporter. Greg, good to have you on the program. This is a most read story on the Bloomberg terminal, and for very good reason. It's not just the headline that is amazing. The entire story is amazing. Taylor Swift tax stirs bad blood with Rhode Island homeowners. What is the so-called Taylor Swift tax?
So the tax is a annual property tax on second homes in Rhode Island that are valued over $1 million. It's half a percentage point, and it was passed last year as part of the state budget. The purpose is to raise money to build more affordable housing in Rhode Island.
It seems like a relatively small amount, and the reason I bring that up is just for the Taylor Swift example, okay? She has a 12,700 square foot mansion. It's assessed at $28 million. So that means an extra tax bill of about $136,000. That's not that much for her, given the value of the home. How is it affecting, though, people at the lower end of the income and fame spectrum?
Yeah, it's interesting. I mean, the loudest protests here are not coming from those who own mega mansions next to Taylor's and Watch Hill. It's really coming from these homeowners who have had modest properties, modest vacation homes in their family for generations, often 3 or 4 generations, who are going to be seeing their tax bills going up by 50% or more with this Taylor Swift tax. A lot of these homes you can't stay in them, or you can't rent them out during the winter and parts of the spring or the fall because they're not insulated or they don't have heating. So considering how even if people wanted to rent them out to try to make some money to make up for this tax, they really have a small window to do so in the summer.
I mean, I just find it being interesting that the loudest protests aren't necessarily coming from the billionaires like Taylor Swift, but those who have those vacation homes there. How long has this really been a contentious issue in the area, or have we really been seeing this more highlighted as of late?
Yeah, it's interesting. So the tax was enacted, as I said, as part of the state budget about a year ago, but it's really only gotten on people's radars in the past few weeks. The state sent out notices to those who may be subject to the tax in May. They sent about 8,000 notices. And as people have arrived to their summer homes on the coast, conversations have started. It's really only been in the past few weeks that there's been an uproar about this. And actually now there's a law firm in Providence is organizing a lawsuit they're hearing from these unhappy homeowners who want to challenge this tax in court, saying it's unconstitutional. So there may be legal action coming in the next few weeks.
Greg, you make the point in your piece, and it's a really important one, that this is not occurring in a vacuum. The challenges that it's trying to address have to do with affordable housing. That's affecting pretty much every state in the country right now. But it's also part of a pattern of leaders in Democratic states of introducing taxes to try to supplement affordable housing or try to tax those at the most upper ends of the income spectrum. So it makes me think of what's happening here in New York with Zohran Mamdani pushing through his second home tax. We just spoke about Ken Griffin and what he's doing in Miami right now, and the buying of basically that entire building. We just spoke about that a few minutes ago. What does this signify to you at this moment of time?
There's a lot of voter anger around wealth inequality, around affordability. That's maybe the big buzzword this midterm season is affordability. So yes, you did see that second home tax also taking effect this week in New York. You're seeing more and more states looking at millionaire taxes. Actually, Rhode Island just last month enacted its millionaires tax. Massachusetts, Maine, Washington State, they all have millionaire taxes. So Democrats, their Democratic leaders are saying, look, we're facing a budget crunch. They're blaming Trump and federal funding cuts in D.C., and they're looking toward the wealthy to make up some of that gap.
So in this particular instance, it's collecting $5 for every $1,000 that a vacation home's value is assessed over $1 million. Do you expect this model to potentially be used in other regions of the nation?
I think so. I do think this is a bellwether. That's how these taxes have worked. You saw Massachusetts pass the nation's first millionaire tax in 2022. More and more, it's popping up in more and more states the past year or two. So, and there, think of places that are led by Democrats: California, Washington State, states up and down the East Coast that have lots of vacation homes that are vacation hotspots. So, I could certainly see this spreading to other states in the coming years.
You mentioned the potential legal challenge that this could face. You do note in your piece that the law firm Hinckley, Allen & Snyder expects to file a lawsuit on behalf of homeowners challenging this. What is their argument going to be?
Well, that's still under development, but they're arguing this tax violates the federal and state constitution. That they could claim that it's an unconstitutional taking. What I'm hearing from homeowners, and I'm not sure the extent to which this will make it into the legal filings, but again, this argument that it's not fair. We can't make up this money. Even if we rent out our homes, we can only rent out our homes for a few, a handful of months a year. It's just not fair that we're expected to pay, in some cases, upwards of $10,000 or more in new taxes under this measure.
So do you expect any sort of exodus? I mean, I'm also looking at the story about the Providence area. The luxury home sale prices in the area have increased about 6.3% year over year. Of course, we know this kind of is due to tight supply and prices going up. But do you expect some of those deep-pocketed buyers to start looking elsewhere? Or are we getting to the point where it's like, where else can we go? Because everyone's pushing them out from certain regions.
Yeah, it's fascinating. I talked to a lot of real estate agents for this story, and you're not really seeing any sort of effect yet, and they don't expect that you will for at least the near term. I spoke to one agent who pointed to a Texas resident who sails off the Newport coast and was in the market for a house, in the $10 million to $20 million range, and then once this tax passed, decided, forget about it, I'll look elsewhere. But that's really been the exception. People are really attached to these homes, especially these homeowners whose properties have been in their family for generations. So, the tax just went into effect. They're not feeling the financial pain yet. I suspect people will be filing for exemptions and maybe seeing how this lawsuit plays out. So I think we're a bit away before you see anything resembling a meaningful exodus.
It's called the, quote, Taylor Swift tax. Has Taylor Swift said anything about this?
She has not. Yes, unlike Ken Griffin, who has had that very public feud with Mamdani over New York's second home tax. Taylor has not commented on it. I reached out to her publicist and did not hear back. So maybe she's focused on the wedding, but she's staying quiet.
Greg Ryan, a good place to end it. Appreciate your time this afternoon on this holiday weekend. Greg Ryan at Bloomberg News, Boston Money and Power reporter, joining us from Boston. Just a reminder on how we closed out the day today. The S&P 500 was flat, though the vast majority of stocks did move higher. On the NASDAQ Composite, down 0.8%. The Dow closing at a new record, 52,900. Coming up next on Bloomberg Business Week Daily, let's go to a trampoline park. That's what we're doing.
Why not?
That's next on Bloomberg Business Week Daily.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks head into a long holiday weekend for a lot of people, with the Dow Jones Industrial Average at a record, closing at 52,900, up 594 points today. That was a gain of 1.1%. Volatile day for the S&P 500 index. It did end with virtually unchanged on the day at 7483, while the NASDAQ Composite Index tumbled 0.8%. The NASDAQ 100 Index down 1.6%. The big story, though, the slump in the stocks, slump putting it mildly. It was down 5.4% today. All 30 members of that index did decline. The 10-year 4.48%, with a 2-year 4.13%. Spot gold up $93 the ounce to $41.24, up by about 2.3%, while West Texas Intermediate crude 68.47 a barrel, down 0.2%. Sources tell Bloomberg some leading European powers will accept that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. Today, we did see the oil majors gain. ExxonMobil up 0.6%, Chevron up 2.1%, ConocoPhillips up by 1.6%. Bottom line, S&P 500 index unchanged, but a big bounce for the Dow, up 1.1%, and that is a Bloomberg Business Flash.
Thank you for that Bloomberg Business Flash, Charlie. Do appreciate it. We just spoke about Ben Steverman's piece about the U.S. suffering from a fund shortage.
I know.
All right, we've seen a decline in golf courses, thousands of bars and nightclubs over the last 2 decades. Americans own fewer boats.
Right.
Maybe they should visit a trampoline park.
I think that's the solution.
I think that's the solution. Dave Hoffman would certainly say that's the solution. He's the CEO of the indoor trampoline park Sky Zone. Hundreds of locations around the U.S., and they are growing and building more. He joins us from Dallas. Dave, good to have you on the program. You've got a great background. It includes Dunkin', McDonald's, and more. You have a history in franchise business as well. For those who haven't been to a Sky Zone, describe the experience and who it's for.
Yeah, and look, we are the leader in active and social play, and like you said, we've got actually nearly 300 locations. We're focused on, and I don't know if people know this, but we're focused on kids 6 to 14 in a particular park. If you can kind of imagine this, just think they're 40,000 square foot boxes, so quite large. We'll have 20 to 25 attractions in that indoor park. And like you said, Tim, while we're known for trampolines, we've got everything in there now, from dodgeball courts, which are amazing, ninja courses, multi-story mega slides, basketball and soccer courts, zip lines, you name it. We've got a lot going on in there. And our thesis here, or what we're trying to do, is we're all about active and social play. And we feel both of those are important. Social in today's environment, especially in a post-COVID world and everything that's going on with technology. We want to be the place where kids can come, build confidence, burn off energy with their friends. And so everything we're doing is about the power of play.
Well, Dave, I can imagine that this must be one of the biggest seasons for you all, being that it's summer vacation season for all the students, all the kids. What's it been like for you all as of late?
Yeah, I think, you know, as an operator for 30 plus years, as you mentioned up front, I think you're always looking for attention in the marketplace and how you can solve that tension for the consumer. And so, look, nothing new, just what you guys continue to report on here. The tension for our offering would be, you know, the consumer's wallet is under pressure. Yes, some prices have come down, but the family wallet is certainly under pressure. And so how do you make it easier for the families to use you and give the, you know, their son or daughter child the summer that they deserved? And so that's the tension that we've been trying to solve. We think we came up with something that works for us, and it's going to be an ongoing strategy for us. But this summer, we call it the, Summer of Sky Zone. It's anchored by our seasonal pass. And when I talk about the seasonal pass, it's, you know, that's one type of price point that we have. And to your previous guest, we want to be the leaders in affordability and accessibility. And again, that's if you draw that line in the sand, which we have, then there's other things that you can go down. But this summer pass, essentially it started in April, but you can still buy it now. And if you buy it now, you pay 1 month, you get a second month free until the end of August. And so we think that's very compelling for the family wallet. It's selling about 80% over last year, so I think that speaks to the tension, again, that's in the marketplace, and then the offer and how well this offer has been received. But it's not the only thing that we try to do there. We've got obviously our monthly memberships, if you're jumping 2 times or more, and just think that's $1 a day, which we think is a great investment in your child for $1 a day. The annual pass, and then we pulse in things like this weekend. I'm really excited. We're doing a clever, cute little play on our 250th birthday. That's Red, White, and Bounce. We've got a price point dedicated to 1776, so it's $17.76, which for a 2-hour jump ticket, a one-time jump ticket, that's probably one of the best price points in the industry, and we're giving away a bunch of tchotchkes and food and things like that at the same time. And, you know, as you move through July, we've always got these things where if you don't want to be a member and you just want to come one time, World Jump Day is coming up July 20th. Who knew? World Jump Day, just like National Donut Day back in the day. But World Jump Day is something we're going to do a takeover of. And so we're always on our calendar. We're always trying to pulse in things. So people will try us. I think when they try us, they like us, they love us, and they come back.
You were, you know a thing or two about donuts because you were president of Dunkin' US from 2016 to 2018, and you've spent you were also CEO at Dunkin' from 2018 until it was sold to Inspire. So you know about Donut Day. Let's get back to trampolines though, and about I want to talk franchising here. Close to 300 locations in more than 40 states in the U.S. Are any of those owned and operated by SkyZone, or are they all franchise owned?
No, we're 50% company owned, 50% franchise. Okay. I tend to move towards tipping that mix more into franchise. I've run both in my McDonald's and Dunkin' days, as you know, but I am a believer in the franchise system and working with small business owners. And look, I'm really proud this year we were named one of the top 10 investments by Franchise Times. So something, you know, is really resonating with our small business owners. And I think they do an amazing job on a company this size, getting into those communities and serving those communities really well.
So who are your who's the typical franchisee? My dad was a franchisee of a different company, so I know how this works. You know, you have the support of a huge brand, you own and operate it yourself, then let's say 5-10% of the top line ends up going back to the parent company. So just give me the profile of who the franchisee is, where the opportunities are geographically, and this seems it seems like something that is capital intensive in terms of the size of building and the actual equipment that you need. So how do you support franchisees with that?
Yeah, it's a lot in there, Tim. Great question. You know, we've got a lot of single park franchisees in some of the smaller cities. So this isn't about opening up, and I'm very sensitive to not building on top of franchisees. So if you run an amazing single park in your community, I want that franchisee to be just as successful as somebody that has 8 to 10. I think our largest franchisee is probably somewhere in the 15 to 20 range right now. Wow. So it's a wide spectrum. And you know, look, these are people that have been in multi-unit 4-wall in the past, and they identified this opportunity in terms of sort of the uniqueness of trampoline parks, and a big part of it is their belief in this is in total sincerity, their belief in active and social play, and so they really were running other businesses, and they liked this offering. The margins are incredible. So, of course, high fixed costs, as you said, Tim. So you have a high fixed cost build, but our margin profiles out 4-wall in the high 30s, low 40% range. So again, initial big investment because we take down some of these decayed, bankrupt big boxes. They're all snowflakes. You have to convert them into a SkyZone. So it's a little bit like Tetris, where you're going in and laying out these different attractions. You never know what you're going to find behind the walls. So there's a lot. It's not as cookie cutter as what I've done in the past. And so our teams, our development teams and franchisees do an amazing job of taking these decayed bones in some of these communities and repurposing them. And, you know, we could go through the list of some of these bankrupt big boxes, but I love what we're doing. And this is a story that never really quite gets out there, but how we're repurposing and I think improving the face of some of these decayed bones that are in these communities and making them approachable again and accessible for those particular communities.
Wow. Dave, we talked a bit about the deals that you all are offering at Sky Zone. I'm curious, as we continue to talk about franchisees, what have you been hearing from different people leading some specific locations across the nation? What has been their sentiment about consumer traffic and the brand, really?
Yeah, well, and you know this well, Nora, like anytime you get into live entertainment, you're always going to be fighting on a frequency game. And so for us, not only has everyone embraced the price point and this idea that, affordability and accessibility. And again, if you put that as a strategic pillar, and that's been one of my pillars for my 30 plus years, then you start opening up your creativity to say, okay, how do I think differently about just a binary? You're a member or you've got a jump ticket, and how do you open it up and give people optionality? And so that is one of the things. We've got a group within our franchise community. I love it. It's our franchise advisory committee, and we work closely with them on the pricing construct and how we ought to be thinking about this, the marketing deals, how we pulse that in. But the other piece that is really super important is programming. And so you can have great attractions, you can have great price points, but the kids and the parents want programming. And so our glow parties on Friday and Saturday night have been fan favorites. They're running all summer long, fan favorites for the older kids. We're running Sky Cup in parallel to World Cup right now. So we got great 3-on-3 soccer matches inside, viewing parties, all kinds of soccer, football takeover within the parks as well. Birthday Like a Boss is a new upgraded birthday experience that we've introduced. So besides just compelling price points, great variety, you have got to, in order to get frequency, you've got to have really good programming to get the kids excited about coming back over and over again. And so that's been a big push for us as well, is to make the programming more different. And then I think, if I could, just one last thing is, one of the things that I focused on over my career is kind of operating with a healthy paranoia around your brand. And so how do you keep evolving? And I've always loved the saying, hey, if you don't like change, you're going to like irrelevance even less. And so how do you keep evolving your offering? And so we've introduced Sky Labs in our company. It's our innovation arm. It's a dedicated team with franchisees on how do we evolve the power of play in our parks. And some of this is, you don't want to get away from your knitting, which is, active play, but how do you bring wearables, other types of gamification in there that complements, active play? And so that's a big part of, you're going to see us continue to peel things off. We're working with PhDs in childhood development on all of this. And so, again, I think all of that is how we're going to continue to evolve this offering for our guests going forward.
All right, next time join us, Dave, from maybe the ball pit at one of the Sky Zones.
Absolutely will do.
All right,
Yeah.
Dave Hoffman, have a great long weekend. Appreciate you taking the time and joining us on Bloomberg Business Week Daily. He's the CEO of Sky Zone, joining us from Dallas, formerly of Dunkin', McDonald's, and more. Coming up next on the Bloomberg Business Week Daily, IPOs, they're so hot right now. Anthony Hughes joins us next on Bloomberg Business Week Daily.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Holiday shortened trading week is behind us, and it is on to a long weekend for a lot of people. Dow Jones Industrial Average at a record 52,900, up 594 points today, up by 1.1%. S&P 500 index spent much of the day trading lower. The S&P wraps up the week at 7483, unchanged on the day. NASDAQ, though, down 0.8%. The NASDAQ 100 index down 1.6%. A major sell-off in chip stocks today. All 30 members of the SOX, that's the Philadelphia Stock Exchange's semiconductor index, were lower today. The SOX was down 5.4%. The VIX holding just above 16. The 10-year, 4.48%. The 2-year, 4.13%. Short-dated bond yields fell on bets that the Fed will not be forced to raise rates anytime soon after this morning's jobs report. Again, the 30-year at 4.98%. Gold up $90 the ounce to $41.21, up by 2.2%. And West Texas Intermediate crude 68.49 a barrel, down by 0.1%. While the focus today was on the jobs report, which showed a slower than anticipated increase in employment, Brooke May, managing partner at Evans May, told us right here on Bloomberg Business Week Daily she is not sharing in the disappointment over that jobs report.
You know, we were expecting to add 115,000 jobs. We added 57,000. But when you look last month, we were expecting to add 80,000 jobs, and we added 129,000. And job openings are 7.6 million job openings. So there are job openings out there. Unemployment ticked lower to 4.2%. That's a healthy labor market.
Brooke May of Evans May Wealth, interviewed right here on Bloomberg Business Week Daily. Recapping, S&P 500 index ends the day unchanged at 7483. The Dow at a record up 1.1% today, while the SOX was down 5.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Nora and Tim, that's a Bloomberg Business Flash.
Hey, Charlie, thank you for that update. Just yesterday, we spoke to Luca Ferrari over at Bending Spoons. He's the CEO there. That company went public or had its first day of trading yesterday. Now today we're learning that Jersey Mike's, it's backed by Blackstone. Also the gas station and convenience store operator Cumberland Farms. I went to college in Maine. People called it Cumby Farms. It was like, that's like what you'd call it in Massachusetts and Maine. Big in the north, huge in the Northeast. Filed for IPOs, the market for new U.S. listing broadens beyond companies powering the AI revolution. We've got Anthony Hughes with us, a Bloomberg News U.S. equity capital markets reporter. He joins us here in the Bloomberg Interactive Brokers studio. I want to talk about what Nora says are some delicious submarine sandwiches.
Oh, yeah.
Yeah, you like these
Jersey Mike's is where it's at.
And we'll talk about Cumberland Farms. But the moment right now for IPOs, it's something is happening here.
Yes, well, SpaceX obviously was the deal that got all the attention, and it's traded reasonably well. I mean, I know there's been a lot of stories saying how it's pulled back, and that's been a negative, but it's still considered a pretty successful transaction. I was just looking at the stats, and if you look at the number of IPOs this year, and we break it up where we'll take away the SPACs and we'll look at just the big deals, the $50 million plus deals, or we can go $100 million plus deals. But you know, the average return from this year's IPOs is about 19% for the US IPOs, and that's about double what the market's doing if you look at the S&P 500. So you know that's a good year for the banks. But you know there's a lot of IPOs, but we're not at 2021 proportions by any stretch. We don't have these. We have a lot of sectors that are not participating, and if you look at the IPOs that have done well, I was just looking at this earlier, it's really been companies that are sort of AI adjacent, some of them private equity backed. I mean, Forgent, which is a company that has done 3 follow-on offerings since they went public in February, which is remarkable. That's one of the best IPOs of the year. That's a private equity backed company that sells powered distribution equipment. It's the most boring thing, but it's exciting because it's
AI.
Exciting because it's exposed to the AI narrative. And there's been a couple of other big private equity deals like Madison Air and INEO that have both done reasonably well. And then we've had a bit of a rebound in the biotechs where some of those have done well, but you know they're smaller deals. But areas like this, where we're talking about Jersey Mike's and Cumberland Farms, or EG Group as it's also known, consumer's been tough. So I mean, if you look at the consumer stocks, they're actually underperformed the overall market here materially this year. The couple of companies that have gone public that were consumer stocks, there's Once Upon a Farm, which did okay, but not a huge win. But and Suja Juice was a smaller one. That was not a good IPO. We haven't seen that Suja Juice, which was a juice, which is the fancy juice you'll find in Whole Foods. That one didn't do too well, and there hasn't been that many consumer IPOs. So I think overall the consumer part of the market is not that vibrant compared to, say, it's analogous to the fact that the whole economy is somewhat being driven by all the action in AI, and not in this sort of, not so much in consumers, where we've got inflation, which is kind of putting a squeeze on it. And I think even these companies that have filed today, they have some pressures around inflation.
Is it a lot of competition right now when you think about any sort of companies that are IPOing that aren't tech? I feel like there's been so much focus on any sort of AI-related trade, any sort of AI-related IPO. We've got some big names just in focus this year.
Yeah.
What about any other sectors? Is anywhere else getting love? You mentioned consumer hasn't been doing too well on the equity side, but curious if there's been any other things that you've been tracking outside of tech.
Yeah, well, the interesting about Jersey Mike's is it's majority controlled by Blackstone, which has a lot of companies it wants to take public this year, and some of them don't quite fit the themes that are hot, and they're not necessarily AI adjacent. They've had a couple of software companies that, they got one away, and they've got another that they've been trying to get away. That software is not the place to be, obviously, because of AI disruption. But in terms of areas like consumer, I think a business like Jersey Mike's looks like it sort of has its own strengths, which is sort of a bit beyond the sector as a whole. I mean, they've got very good same-store sales growth and growth in store growth, which means they've got very consistent double-digit growth overall, and that's a good formula. They're not going to have too much debt. The thing with these private equity deals, you don't want to have too much debt. But to your point about what outside of AI, I think the really interesting thing to think about here as we go to the second half is there's all this expectation we're going to have a lot of IPOs that probably have an AI theme. But you can see in the market at the moment there's a lot of debate about what's actually going on in AI, who's going to be the winners and losers, and it's possible that the AI trade does come off, and if it does, the bankers want to have these other companies lined up which might fill the void, and they might be a nice little antidote to the fact that AI trade might come off the boil. And you look at, there's a company called Hub International Insurance Broker which filed confidentially last week. Insurance brokers are a business which is supposedly getting disrupted by AI, but if you see it towards the end, it is still a steady growing business, and those businesses could be like a nice sort of solid antidote if we do see the AI trade come off the boil here.
Jersey Mike's, Blackstone backed. It was acquired last year by Blackstone for about $8 billion. They're seeking a valuation of about $12 billion in the IPO. That seems pretty amazing return on investment. That's 50% return.
Yeah, so Blackstone's had a few over the years where they've done, some of the businesses they have gone up in values slowly, and they've had a few back in that early 2000s, early 2020s era, like I think about 2019, 2020, they had a few that were growthier companies where they did a quick turnaround. But normally, you wouldn't turn around this quick. So that's interesting, and it just really does tell you that Jersey Mike's is probably somewhat of an exceptional business from their portfolio perspective.
Well, you mentioned Suja Juice, and it's like that's the opposite end of the spectrum. Expensive juice, not doing well. Those bowl companies where you're, the so-called slop bowls, not doing very well, like a Sweetgreen, for example. But the affordability, the handheld sandwich, having a moment.
Yeah, I mean, they've got pretty consistent sort of 2-3% same-store sales growth, which is good in the restaurant business at the moment, which is tough.
Yeah.
And they're probably growing the store count by maybe high single digits every year. I think they've got big plans to expand in UK, in Europe through the deal they've done with their founder. So that's obviously another leg of growth, and and I think they're probably. I mean, the subtext of Jersey Mike's to me is they're probably taking a bit of share from Subway, which has changed owners recently too, and has had a few issues, I believe.
True.
So I mean, that's the other factor. That's the other factor to take into account. But I think the other good thing about these sponsor-backed IPOs, you don't want to have too much debt, and if you do your own math here, where maybe this IPO could be say 1.5 billion, and you look on the balance sheet there, they seem to have about $2 billion of debt. You should be able to wipe that out with a lot of that out with the IPO, and you can have a relatively lowly leveraged company. That's perfect.
Anthony Hughes, Bloomberg News, U.S. equity capital markets reporter. He stayed late so he could talk IPOs with us. We appreciate that, Anthony, joining us here in the Bloomberg Interactive Brokers studio. Stocks on the move next.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That's Nora Melinda. She is in for Carol Masser. I just want to remind everybody going into this holiday weekend that you can join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid, right on the Hudson River. You can watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app Saturday, July 4th, starting at 7 a.m. Eastern Time. Nora, are they going to have air conditioning?
I surely hope so, because I cannot imagine.
A very warm day.
Very, very. We're talking triple digits.
Yeah, triple digits. We spoke with Lauren Rosenthal a little earlier, who covers weather here at Bloomberg News. She's Bloomberg's weather reporter. She said, seeing triple digits today in Central Park, not a record, but the hottest since going back to 2012.
And she says AC's at 78 degrees, right? That's what Mamdani is telling us. We'll see.
Are you going to put your AC at 78
We'll
degrees?
see.
Just out of curiosity?
We'll see.
We'll see. Okay.
We'll see. It depends on how hot it gets.
Yeah, tell us on Monday.
I'll let you know.
How that worked out.
I'll give you updates.
Well, on this final trading day of the week, and only the second of the new quarter, the S&P 500 finished unchanged, but in the green ever so slightly. The Dow was up more than 1% to hit a new record at 52,900, and the NASDAQ fell 0.8%. Let's take a look at some stocks on the move this week. I'm Tim Stanovic with Nora Melinda. We are joined by Bloomberg News equities reporter Avalon Purnell. Hey, Avalon.
Hi. We have to start off with some car news. Genuine Parts, that's ticker GPC, jumped 14% to finish out its best week since 2020. And that's after Bloomberg reported earlier today that Genuine Parts, which for those unfamiliar, that's the parent company behind Napa Auto Parts, received a cash bid for its auto parts arm from O'Reilly Automotive. And a potential sale of the unit could come as soon as the end of this summer, the people told our colleagues, and would also be their largest deal if this does go through since 2008 when that company acquired CSK Auto for about $1 billion.
I'm going to need you to say what you just put in the chat.
Absolutely not. That's why I put it in the chat, and I didn't say it.
There's a great theme song to go with this.
I agree. I would
agree.
Whenever you say O'Reilly,
I can't
just
stop
think
thinking of
the
it.
O'Reilly theme song.
I think it's so fitting. But I mean, I feel like this is really interesting, especially as we're looking at how all these stocks have really been doing on a weekly scope. You're also looking at semiconductor stocks like SanDisk.
Yes, that's ticker SNDK. It fell nearly 17% this week to notch its worst week since March. And that's after the information had a report earlier that Anthropic started early stage work for its own AI chip and also held talks with Samsung potentially to manufacture it. The news sent shares of semiconductors like SanDisk and also other peers like Micron lower today. And at the same time, though, it did very little to actually dent how well it's been doing this year. It's up more than 635%.
Yeah, it's pretty amazing. I mean, SanDisk, still though, it is down at its lowest going back to June 10th. So in almost a month, and a lot of folks are watching what happens in semiconductors to see if this is sort of emblematic of where we are in the cycle. We're going to talk about Apple in just a second, but if we think back to what Apple has said it's going to do as a result of the memory chip crunch, it's going to raise prices on certain devices, and we'll see that play out in September when it likely comes out with a new device, as it typically does. But it's also already said that it's going to raise prices on existing devices that are already out. So,
and everyone's holding their breath now.
Yeah,
to see what's going to happen in September.
We had a chat with Marta Norton earlier, and she mentioned certain supply side shocks that we're seeing, and in addition to oil and food, the memory shortage is a supply shock.
Absolutely. So you're seeing a lot of these, semiconductor stocks benefiting. I mean, if you also look at SanDisk, I'm looking 5-year scope.
Okay, what do you see?
If you invested in SanDisk 5 years ago, you'd be up more than 4,700%. To be exact, 4,747%.
Well, let's go get that time machine.
If only.
Avalon, what else you got for us?
Well, we have to end the day with Apple. That's ticker AAPL, rising nearly 9% to end this week to have its best week since last August. And that's after a great report by our very own Mark Gurman. Bloomberg reporting that Apple is in negotiations to purchase chips potentially from Chinese semiconductor makers to help reduce the impact of that global memory shortage that you mentioned. Just last week, as you said as well, like Tim Cook has been talking about these price increases that they've been trying to weather the storm for consumers, but it's just reached a point where now it just has to be passed on. It's going to be really interesting, though, to see how exactly other companies weather this storm as well.
I think Apple is the one that has the pricing power to do something like this, and we'll see if it's able to actually help ease the crunch with those Chinese firms.
Yeah.
All right, Avalon Purnell with stocks on the move this week. For more conversations like this, check out our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Just a reminder on how the day closed out on this holiday shortened trading week. The S&P 500 was unchanged today, but the majority of stocks were higher in the S&P 500. Information technology, consumer discretionary, and communication services dragged the index lower. Healthcare was higher by 2.7%. Consumer staples up 2.4%. Utilities up 2.3%. I just want to remind everybody about our coverage this weekend, the Independence Day, the special. Join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app Saturday, July 4th, starting at 7 a.m. Eastern. Bloomberg this weekend. A big thank you to to Nora Melinda from Bloomberg TV. She sits only a few desks away from me.
Oh, yeah, I get to bug you all the time.
You do, and we love it when you come bug us on this program. So thank you so much for filling in today. Have a safe and enjoyable Independence Day and 3-day weekend.
This is Balance of Power, live from Washington, D.C.
Tonight, sharp slowdown. Today's jobs report shows U.S. hiring lost steam in June, a fresh sign the labor market may be losing momentum. But the White House insists the jobs market is still on an upward trajectory. Plus, the public's piece. OpenAI is reportedly floating a 5% stake for the U.S. government amid pressure from the Trump administration. It's a model CEO Sam Altman wants other tech giants to consider in an effort to ease public pushback against AI costs. And bring the heat. The Northeast braces for a brutal 4th of July heat wave with temperatures topping 100 degrees in the nation's capital, just as President Trump promises a record-long holiday speech. The heat is raising risks for crowds on the National Mall and for power grids nationwide already under strain. From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Kaylee Lyons, alongside Joe Matthew.
All right, Kaylee, we kick off our coverage this evening with big questions about the job market after the June jobs report showed payrolls growing by half the consensus, with hiring slowing sharply last month as the unemployment rate fell to 4.2%, due largely to a big drop in participation. Still, White House Economic Council Director Kevin Hassett, talking with Bloomberg, says the economy is on an upward trajectory.
I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3% and that we're going to have a better second half of the year as those factories turn on the lights.
For more, we go to Bloomberg's Jeff Mason from a scorching White House North Lawn. Congratulations, Jeff. You're the only one out there with triple-digit temps in Washington, and we salute you for it. The big chill today came in the jobs market, 57,000 versus consensus of about twice that. And I will mention that Bloomberg Intelligence was looking for 200,000. You just heard the words, of course, from Kevin Hassett. We never heard from the president today. Are they framing this as a continuation of Trumponomics?
It kind of seems like a report that maybe President Trump won't want to weigh in on, but of course Kevin Hassett putting a spin on it, and economists would look at it from a longer-term perspective. That's their job, but certainly it is not the rosy outlook that they would have liked, and it also raises questions about where the labor market is going. Clearly, the president wants to have a pretty robust jobs number and future jobs numbers as he moves into the midterm election campaign cycle this fall. So unemployment is still at a level that is something that he can probably brag about. But the fact